warm welcome, ladies and gentlemen, on this wonderful Monday morning at Business Today Television. Everything that could go right has. Over the weekend, there were no escalations of threats in the West Asian conflict. In fact, whatever was told was not done. There are no strikes on Iran, and therefore oil has come off the boil. US spot on Brent is about $4 lower, and that's extremely good news as far as markets are concerned on Dalal Street. Now let's look at all the positivities that are coming in. GIFT Nifty is pointing to a strong uptick. It essentially means that Nifty will begin life above 200-day DMA after a 102 session downtick below 200 EMA. So after 102 trading sessions, you will see probably the Nifty close well above the 200-day today, and the following reasons are the ones which will ensure that the markets move up. So oil is down, rupee appreciated 1.2 percentage points versus the dollar last week. That's also a positive. And more importantly, the dollar index is down for the fourth successive day and is now well below 100 and 200-day DMA. So that's a very, very big plus for the Indian equity markets. Above all, in the last 5 sessions in which the Nifty rallied 616 points, the FII number was positive for the weekly. About 7,300 crores is what they have purchased. So these are the broader structures of the Nifty. We see now 24,500 on the cards, and if only the Nifty falls below 24,250, then it turns bearish. Before that, all dips are buy the dip. More importantly, 11 sectors have shown very bullish crossovers. Among them, you have the power equipment space, the electrical space, transformer space, India manufacturing sector, as also engineering and solar. Many stocks in this sector are doing immensely well. The 4 strongest charts on Dalal Street at the moment are from the NBFC space, which is Aditya Birla Capital. 2 stocks representing the pharma space, which is Torrent Pharma, as also another pharma stock, which is Ajanta Pharma, and of course from the auto ancillary pack, Sansera Engineering. Apart from that, JSW Energy, Sterlite Tools and Deep Industries are also positives in the market. The unwinding of the AI trade is the reason why you have such a strong move coming onto the market. Let's now look at our guest. We are joined by Ratnesh Goyal, Senior Technical Analyst at Arihant Capital. Good morning to you, Ratnesh ji. How are you watching Dalal Street today?
Yeah, good morning, Shell, and good morning to all the viewers. Definitely, we are going to see a very good positive opening. So, all thanks to the oil and the Trump. So, definitely, we will see the very good opening the first of the week. So now opening is definitely good, but now we have to see where we are going to close. So close is very important. So like if we get the close above the 24,500, 24,550 level, above that level, so definitely we are going to see the 24,800 and close above the 24,800 in this week also. So today's closing is very important, but definitely this is the buy on dips structure right now, and at 24,200, 24,001 is a very good support. So by any chance, if we get that level, that will be a good buying opportunity once again. So, but on very like 150, 150 or 200 point gap up, we should just wait for the first 15 minutes of fresh buy. And if we start trading above the 24,500, 24,550 level, then we fresh buying we can see in the market, and the target would come around the 24,800, and then around from
That's the view that is on Dalal Street. Abha joins us on the show. A very good morning to you, Abha. Good days ahead for Nifty. Let's hope 24,500 comes this week. Good morning.
Good morning, Shell. Let's take a look at some stocks in news as well. Perhaps some that may also just be seeing some short-term action in terms of what is catching our eye on the charts as well. So I think there's a whole host of them, and we'll get Ratnesh's view on that as well. But sorry, just pulling it up on my screen. We've got Hero MotoCorp in focus today, Anant Raj, Anthem Biosciences, KEI Industries, Escorts, BLS E-Services as well, and some of the others also that are taking the spotlight in today's trade on the back of news or other events or volumes at this point of time. Any from that list that's on your radar as well, Ratnesh?
Definitely. Ava, as you mentioned, like the first, Hero Motor, like we can talk about the auto sector. So I believe the auto sector is going to rock in this month. So in August month, definitely we are going to see a very good rally in the auto sector. The Hero Motor, we can see the chart. Is a rounding formation, classical rounding formation chart on the daily chart. Now it just touched the 200-day moving average line. So I believe that we are going to see the cross this 200-day moving average line in Hero Motor. So in the mid-term target, with someone buy, still it is a good buy for the target 5600 level, and that stop loss will come around the 52, 50, 52, 20 level. So mid-term, Hero Motor look good for the mid to short term.
Few others as well. I mean, in auto, we've got Maruti also in focus. So there's a whole host of names. Tata Motors, of course, these will also be on monthly sales figures. Hyundai, all of them in focus. Other than that, we've got Urban Company, Glenmark, Persistent, some of the other names that are in the news. Muthoot Finance as well. Shell, any of these cropping up on your radar?
Abha, yes, these are earnings numbers. Muthoot was a disappointment, and it's come up with a Q1 which is fairly dismal. So we will see continued pressure on Muthoot. The counter has corrected fairly sharply. If you look at what we saw a couple of months ago, Muthoot is down about 25% from its all-time high of 4176 all the way down to 2970. So more selling pressure seen, and let's see whether it provides an opportunity at this level to enter for long-term investors. Abha.
And we've been talking so much about pharma, so whether it's Glenmark, Divi's or anything else, I mean, what's the view on pharma as we kick off a fresh week, pharma and healthcare, Shell?
Well, Abha, you're absolutely on the head of the nail. Pharma stocks are in top shape. Let's look at the CNX Pharma Index, fresh record high all of last week. It's rallied fairly sharply in the last 5 sessions. So look at Torrent Pharma. This is a stock which is already in fresh territory, and it had rallied about 5% on Friday. So this is post earnings, of course, which were ahead of expectations, and Ajanta Pharma. So very, very strong move in both these stocks is likely. Ajanta Pharma giving an opportunity after a fairly decent correction, a swing trade in the making on Ajanta Pharma somewhere like 3465. Abha.
Okay, that's on Ajanta there. All right. Ratnesh, metals, let's talk about that. They largely topped out, but we are continuing to still track the action, whether it comes to Nalco, Hindalco, some of the others in that space. What's your view in terms of, like, would you take some money off the table? Would you still perhaps continue to buy in at lower levels when it comes to some of the metal majors?
Abhay, for the trading aspect, if you see that any metal is of now in consolidation mode, so we will not see any trading opportunity very soon. But yeah, definitely for mid to short term usage, definitely there is some opportunity for investment. Like we have seen the good correction in the Hindalco now from 1150, it almost fell to the around the 940, 930. Now it has taken good support around the 200 moving average line, which come around the 9030. So I believe that now risk reward ratio in the favor for the short to medium term in Hindalco. So we can see the level once again up to the 1050, 1030, and with the stop loss 930. So Hindalco can be a good bet for the short term, not for the immediate return.
Let's look at some other parts of the market that are doing extremely well. I'll focus attention on transformer stocks. Many of them making a comeback. Unfortunately, many of them are also priced really high. Let's get Ratnesh's view on volt-amp transformers. Again, this rally was spiked by Friday's earnings, which were almost at par. A view on volt-amp transformers, Ratnesh ji?
Yeah, so definitely, Shell, we have seen the very good volume in the last trading session, but from the high level, once again, we have seen some little bit profit booking. So I believe it's still a consolidation is going on, but yeah, if someone want to, invest for the new mid-term or short-term, so definitely the risk-reward ratio in the favor. If it's a, big stock, so the stop loss will be a little bit deeper. So from here 9500 will be the stop loss, and we can see the target around 10,500 to 10,800 rupees.
All India production is up, supply is up, so the company is in focus once again. The consumer segment also saw good results. On the charts, how's it looking?
You are asking about Oil India or Coal India?
Coal India.
Coal India, yeah. So definitely the Coal India, is continue low formation is of now. It's not and trading below the key averages line. So I believe I will not suggest to go for the immediate long, because there is no sign of the reversal. Still there is so many hurdle at the high level around the 430, 425 level. So just if anyone holding, so if it come around the 420, 430, I will say the book the profit and they keep their stop loss around the 409.
Let's look at some other parts of the market that are doing very well. The power sector is likely to perform in top shape. Look at JSW Energy. This is again a swing trade in the making from 200-day DMA. Let's get Ratnesh's view. You have about 554, Ratnesh ji. What are the charts telling you? On Friday it rose 2%.
Yeah, so JSW Energy, from the long time, we are seeing the range bound activity. The range is come around the 525, then the downside and the upside is come around the 565, 70 level. So its consolidation is going on. So I believe definitely still the consolidation will go on. So if there is a someone has the view for the 1 month, 2 months, so keep the stop loss around the 510. We can see the near-term target like 570, 580 and the 600 level. We will get the fresh breakout above the 600 level. Then we can see the big run up to the say 660, 670. So as of now for the midterm, keep the stop loss 510.
All right, that's on JSW. What about crude? In terms of, earlier the sentiment that it may be spiking. We've seen, of course, a marginal cool off on crude, but inflationary pressures remain. Do you feel that perhaps it could continue to play a little bit of spoil sport with the markets, Ratnesh?
Yes, so definitely, now I will talk on crude in rupee terms of in rupee terms. So we have seen so many major hurdle around the 8500 9000 level around in the crude oil. So I believe that that around that level we will see the continuous supply, and the downside if it come around the 7600 7300 level, so it will be a good support. So I believe that we will see this range bound activity, but not a major downside from here, because around the 7300 7500 level is a very good support. So any short, I will say any short below the 7300 will be the very short, not here.
8:46, ladies and gentlemen. Let's look at what the GIFT Nifty is telling us. Remember, as I was pointing out, a live starts above the 200-day moving average for the Nifty after a gap of 102 sessions. So the GIFT Nifty is pointing to a nice 170-point uptick. Let's presume we get 70 out of this. And the Nifty obviously shut shop on Friday with very strong gains. You had the Nifty trading at 24383. A 100-point uptick will take you to almost 24,500, where they are very strong option writers. Remember, the previous Friday, 6-7 days ago, the Nifty was at a low of 23,606. So from then on till now, you've rallied about 620 points, and that itself is a very positive indicator against the backdrop of falling oil, rupee strengthening, FIIs adding fresh positions. So you should see 24,500 in early deals, and then probably some profit booking. Ratnesh ji, what are the 2 or 3 stocks on your charts?
Yeah, so definitely first one from the mid cap is Avalon. So Avalon, I believe it is continue making the higher high in the BSC in the fresh breakout. So Avalon, it's a good bet. Maybe after the gap up open, but still I believe that if we get the chance around the 1790, 1750 level, it will be a good buy for the even the for fresh buyers. Avalon, we can see the target in the midterm 1900. So keep the stop loss around the 1705, and we can see the target 1900 level. And the second one is the Asian Energy. So Asian Energy is also, we have seen the continued consolidations going on around the 390 level, 380 level. So I believe that it could be a good buy around the 380, 390 level with the stop loss 350 for the target 430, 450 level.
Okay. Lots of other earnings today as well, or reactions: DLF, Escorts, Kabuta. We've got G Shipping as well, Kalpataru, Kansai, Nerolac, a whole host of these. I haven't looked into each of the numbers, but I mean, most of these are expected to report today actually. Anything that you're watching out for, Shell, from an earnings standpoint?
Well, Abha, not really much. I believe Muthoot Finance will give an opportunity if it opens a little lower for people to accumulate it. Remember, we've seen 4,100 and now below 3,000. So nice 25% correction is done. The earnings were mostly baked into the price, and let's hope the rally on Muthoot begins. You remember Manappuram Finance is at a fresh record high. All jewelry stocks are doing good. The sector leader in gold financing, which is Muthoot, was the laggard, and I'm hoping that you will get an opportunity to go long.
All right, let's focus on auto once again. Maruti, I just want to pull up those numbers. Mixed set. They did have decent profit, but of course margins came under pressure. So standalone net profit was at 3,352 crores, is down 10%, but still above estimates. I know we touched upon Hero, Ratnesh, but can I come back to Maruti as well this morning? And it was up about 3.5% last week.
Yeah, definitely. As I mentioned that this month we can see the very good performance in Maruti. So I believe that a little bit hurdle here around the 14,500, 14,800 level. Once we get the close above, start trading above that, we can see the target 15,200 level. So I believe if someone holding, book some profit around the 14,500, 800 level, then trail stop loss 14,300 level, and if we get the close above mentioned level, then we can see target 15,300. So definitely we should positive in Maruti.
All right, let's take a break on that note, and we'll be back with more on the other side.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multibaggers at BTTV.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only
on
on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Several dead, many missing, and thousands displaced. Nature has unleashed its worst fury in God's own country. Flash floods have triggered landslides and waterlogging in various districts. India Meteorological Department issued orange alert for 12 districts including Pathanamthitta, Alappuzha, Kottayam, Idukki, Ernakulam, Wayanad and Kannur. Thousands from low-lying areas have been moved to around 209 relief camps across the state.
We are in Rani, Pathanamthitta, again one of the worst affected regions across the state because the entire town was facing severe waterlogging in one day's heavy rainfall. This is the LPG school in Rani. And we're learning that when it started raining heavily, when the water level started increasing, they had to run out of their houses and shift to these camps. There are 10 families and around 22 people staying here, including men, male, female, and also children. They're saying that they ran in those same clothes that they were wearing. They couldn't take any of their belongings or anything. And it was later the district authorities that came over and gave them a clothes to change, and also some of the essential necessities, to stay here till the situation gets better. Now the situation is clear there, but they'll have to clean and, make the house in a livable condition and then shift back to their homes.
In several districts, roads turned into rivers. The situation remains serious with floodwaters entering homes in parts of Kottayam and Pathanamthitta.
Well, we are in Aranmula in Pathanamthitta, where severe waterlogging is still affecting many regions here. In fact, there's a major relief from rainfall, but the waterlogging continues in some regions, and this is the one region where there is severe waterlogging. And you can see around me there are many houses. All of these are empty, and as people have moved to various, camps, it might look like I'm moving in a water body, but no, that's not the case. In fact, it's a road. It's one of the main roads here, and since it's filled with water, people are now using boats to commute from one location to another. Now, around 8 deaths have been recorded across the state, and also around 200 houses have suffered damages.
Following the widespread damage caused by the rain, Chief Minister V.D. Satishan convened an emergency review meeting and directed ministers overseeing affected districts to remain on the ground to coordinate relief measures. Authorities are urging people in the hills and low-lying areas to stay vigilant, but the situation on the ground continues to remain grim. With Shibi Mol KG in Pathanamthitta, Bureau Report, India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only
on
on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
It is a mega air connectivity boost for Andhra Pradesh. Alluri Sitaram Raju International Airport at Bhogapuram is now functional. Prime Minister Modi inaugurated the airport in presence of Andhra CM Chandrababu Naidu. The airport, built at a cost of nearly 5,640 crore rupees, was completed months ahead of schedule. Spread over 2,200 acres, it is designed to handle 6 million passengers a year in the first phase.
2014 तक देश में केवल 74 एयरपोर्ट ऑपरेशनल थे। आज ये संख्या 166 है। एक समय था जब हवाई उड़ानें सिर्फ बड़े शहरों तक सीमित थी। एनडीए सरकार में आज छोटे शहर के साधारण लोग भी फ्लाइट से आ जा रहे हैं।
The new airport aims to significantly improve air connectivity for North Andhra and boost tourism, trade, logistics and industrial growth in the region.
ఆంధ్రప్రదేశ్ కాక్సనిచ్చి ఈరోజు నిలబెట్టిన వ్యక్తి నరేంద్ర మోడీ గారు. నేను మిమ్మల్ని అడుగుతున్నా, ఆంధ్రుల సెంటిమెంట్ విశాఖ ఉక్కు నిలబెట్టింది ఎవరని గట్టిగా మీరు చెప్పాల్సిన బాధ్యత మీ పైన ఉంది. ఎవరు ఎవరు విశాఖ రైల్వే జోన్ మంజూరు చేసి విభజన హామీని నెరవేర్చింది ఎవరు?
During the unveiling of the airport, Prime Minister Modi also took a jibe at Congress, saying earlier airports used to be named after dynasts.
ये धरती अल्लूरी सीताराम राजू की धरती है। अल्लूरी सीताराम राजू जी ने जिस धरती पर आदिवासी हितों के लिए अपना जीवन समर्पित किया, आज उसी धरती पर आंध्र प्रदेश के एक नए एयरपोर्ट की शुरुआत हो रही है।
The airport is all set to begin its operation from 17th of August. That will mean that Vizag International Airport operations will not only be shifting here, but this will be the new name and the new address for the Vizag International Airport. Mugulu art or Andhra Rangoli is the integral part of every Andhra household. And when you are building up an ambitious airport, international airport in Andhra Pradesh, how can you miss that? And that's exactly what has been prominently represented at Alluri Sitaram Raju International Airport.
We are almost 6 months ahead of schedule. they competed. And then, of course, now today we are happy to announce that as Prime Minister of India dedicated this to the nation. And now 17th of August, we are going to open the airport. We are ready for that with all the things. Before bringing the parallel airport, we also planned for government of Andhra Pradesh. 7 routes have been widened as much as possible to make a smooth traffic, point number 1. Second thing, what also they also did parallelly, what they did actually, how we can improve the performance. So what they did, they put 7 centers they kept in the Vizag.
India Today has consistently tracked the progress of this airport from its inception to its completion.
Right behind me, you could see the runway where today the validation flight landed. And this airport is special in many means. Number one, it gives you the cultural identity of Andhra Pradesh pretty much in its building structure. The runway is Cat 1, which means that it will be operational 24/7. More importantly, even in case of cyclone, if the wind speed is up to 275 km per hour, even then the airport operations will run as normal.
As of today, if you take it, 96% of the works have been completed. So what the final works only left out? You can see that flooring, you can see this, you can see the ceiling, you can see the security arrangements, all complete and all the things.
India Today was the only channel that spoke to Aviation Minister Ram Mohan Naidu while the construction of the airport was underway.
In fact, the time to finish the airport was in December. We have 12 months. But our Chief Minister, you know, the visionary Chandrababu Naidu Garu, he is not someone who is going to wait for the deadlines. He is going to create his own deadlines. So he has created a 6-month early deadline for us. We are very much on track of it.
The newly inaugurated airport is set to transform the state and boost connectivity and unlock new economic opportunities across Andhra Pradesh. With Amit Bhardwaj, Bureau Report, India Today.
From overnight global queues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
From overnight global queues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakai. Let's take you through the top stories at this hour. Asian markets deep in the red despite Donald Trump's claim that Iran talks will begin. Korea down over 4%. That's because of tech, of course. In Japan, traders are waiting and watching the joint US action on the yen. Crude oil prices tumble as much as $4 on peace hopes in the Gulf. Stocks of oil marketing companies as well as Indigo will be in the spotlight. Auto stocks in focus today on record sales in July. Good days ahead for the rupee. Strengthens 118 paise against the dollar in previous 5 trading sessions. Inflows of nearly $41 billion via the FCNR scheme and FIIs slowly returning to equity helped the currency. 3-day meeting of RBI's interest rate setting panel begins today. Decision made tough by global uncertainties, lower rains and prices which threaten to rise. Markets eagerly watching the decision on Wednesday. FMCG king Hindustan Unilever shifts focus to the health and wellness category, says it's extremely bullish on the growth opportunities in the area. Announcement of missed revenue and profit estimates in Q1. The rupee is strengthening further against the dollar. Rupee opening 23 paise stronger this morning at 95.15 and it closed at 95.38 on Friday. So this morning gaining a touch further and that's gradually easing up towards the 95 and then of course 94 mark, as opposed to 96. Now we're joined by Shailendra Bhatnagar and Neeraj Dewan this morning. Great to have you both with us and kicking off a fresh week and a fresh month. Neeraj, let me bring you in first to get an overall perspective on how you're viewing the action. The war and crude oil prices have been on again, off again, and I'm not sure how much, really the markets are watching that. Earnings this time have been largely aligned. So what do you feel is the next fillip the markets are waiting for?
Yeah, good morning. Good morning to you both. I think the way the markets have been behaving for the last couple of weeks, it's quite constructive and positive because domestic results have been good. And even the data that we got over the weekend, whether it's auto sales, GST, they all been positive specifically for domestic economy. Some results, margin pressures have been visible, but that is because of the raw material prices going up, because of the war that is still undergoing. But volume growth have been good, top line have been improving. So definitely it's a positive scenario, positive built up for the rest of the year. So we just finished the first quarter, and normally third and the fourth quarter is when actually momentum really builds up. So there are ingredients for a good second half of the year. One just has to watch how this war going to pan the last maybe couple of months, or how it's going to happen for the war. But otherwise, I think it's a good constructive view for the rest of the year.
All right. Shail, let me bring you in on the charts as well and what the levels are suggesting. What are the key indicators suggesting in terms of where we go from here?
Well, Abha, it's a gap up and a 190-point gap up, 24,572. This has exceeded all expectations. I'm hoping that we'll get a close above 24,500 today. Low oil, strong rupee, and a weak dollar are all helping Nifty. Yeah. And there are massive breakouts in 11 fresh sectors. So all the way up and maybe some kind of a consolidation profit booking today. but a close above 24,500. Abha.
It is looking good this morning, that's for sure. Let's also take a look at auto because that's where a lot of the action will be focused today on the back of monthly sales figures as well as some key earnings. Rural demand also continues to be a key monitor for the industry, especially after an uneven start to the monsoon. Mahindra's farm equipment business reported a healthy 19.2% operating margin in the June quarter, although it was lower than a year ago due to higher commodity prices. Despite these headwinds, Rajesh Jejurikar, Executive Director and CEO, Auto and Farm Sector at M&M, remains optimistic. Here's what he told Business Today TV's Sakshi Batra.
Let's talk a little bit on the tractor business also. Again, strong performance. If you could help us understand what are the trends you are looking at in the rural demand, especially how confident are you about the outlook with the weak monsoons that have panned out so far, sir?
Yeah, so you've touched upon the weak monsoon, and the good news is that every day the deficit is reducing, which is good. And it was almost a 40% deficit of rainfall a month and a half back in June, which is now down to, I was just seeing the data till yesterday was 14%, and the day before was 15 or 16%. So it's really literally improving every day. Firstly, the sentiment on the ground is not as negative because, cash flows from Rabi have been strong, which has led to, 19% growth in wheat procurement out of the Rabi cycle. The sowing that's happening on Kharif this season is also not that bad. It's caught up very quickly over the last few weeks as rains have come in. And the deficit over same period last year right now is only 4%. So, Kharif sowing is at a very good level. Also, we are seeing a move towards mechanization because, there is a lot of farm labor shortage. And government spending in rural has been good, which is putting in a fair amount of money in the rural economy. So, all of these are enabling factors. Of course, there is the overhang of El Nino still, and we need to wait and watch on how that plays out, post-September. But so far, we are seeing a reasonable amount of positivity on the ground.
All right, Neeraj, let me get your take on, some of that commentary from M&M. And when we're talking about, of course, the fillip from rural demand, Escorts Kabuta has also reported fairly strong sales figures.
Yeah, the numbers have been surprisingly positive, even from the farm equipment space. So overall, auto space has come out with very good numbers. Passenger vehicle sales by Mahindra & Mahindra, Tata Motors have been very strong. And, even the two-wheeler space, you're seeing that, they were, as per expectation, or slightly better. So overall, the auto space seems to be in a good space. And the surprise positive from the farm equipment tractor sale also will boost. So definitely the top line is good. I think the margin can improve once, crude stays at a lower level. So that will also help, the margins in the coming quarter.
Okay, market opening ticks on your screen. Let me just run through that with you for a moment. And it looks like we are in for a gap up as anticipated. Up about 0.5%, 140 points up. So not close to 200 points, but near enough. And it's looking strong this morning. Nifty Bank is up about 0.5% right now. Let's pull up auto. Let's pull up some of the other pockets, see where the strength is at. IT is also decent. And we've got auto at about 0.8% higher. I do want to pull up the individual gainers and losers to get a sense of the market breadth and take a look at that, and we can come back to the sectoral indices after that. And let's take a look. We are keeping an eye on M&M. We are keeping an eye on, there you have it, M&M is up 2%. Bajaj Finance is up 3%. So that's looking really strong this morning. We've got Tata Steel, Hindalco's, some of the metal majors, IT, Infi, for instance, Tech Mahindra continuing to participate. Dr. Reddy's also looking good this morning from the pharma pack and after the recent semaglutide scare. So those are a few, and on the downside, mixed bag, but the cuts are limited. Sun Pharma and a few others there. Bajaj Finance, let's just take a look at that as well. And take a look at, I think it's of course a little bit earnings related, but ICICI, Eternal, Bharti, SBI, let's pull up some of these as well. All of these are in focus this morning and are looking very strong on the index as of now. Bajaj Finance as well, some of the names that are looking incredibly strong. I just want to come to Shell on some of these. Shell, what's driving the action across some of these key Nifty names?
Abha Bajaj Finance. Sales rose 19%. This is all earnings led, 23,165, and net profit up 27%. So margin expansion, 6,081 crores, and the counter is off to a flyer. This is a fresh record high, 2% higher. And in the same breath, Muthoot Finance, terrible set of numbers. The counter is the top traded, and you have a 9% downtick on Muthoot Finance at about 2,820 crores. So these are two earnings-led markets, and of course, a very, very strong advance decline in the beginning of the show, and that's pulling the Nifty up very, very sharply. 2,200 shares in the green versus 531 in the red, so it's an easy 4:1. FMCG, metal, PSU Bank, autos in top shape. Abha.
FMCG, metals, PSU banks, and FMCG, remember, I mean, you've got an HUL commenting on moving towards wellness, which is clearly a theme, and Nestle beating those margin pressures as well. Just pulling up the two NBFCs, and I want to come to Neeraj on these. Muthoot, the markets are giving it a miss. We're seeing downgrades. We're seeing price target cuts this morning, Neeraj, on a Muthoot. We've got 28 analysts, of which 14 have a buy, 7 hold, 5 have a sell on the stock currently. And markets are not happy with the numbers this time around. So price targets are being cut across the board. Margin compression, of course, is something that we've seen. Price cuts due to competition. And again, range-bound gold prices, some of the factors weighing on those earnings. What is your view on a Muthoot Finance, Neeraj?
Yeah, see, as far as competition is concerned, PSU banks also are offering this gold finance, but that is not something new. That has been happening for the last 3, 4, 5 years. Little more maybe, but mostly the worry is because the gold prices have been subdued. I think that really impacts somewhere the margin and the credit demand for Muthoot Finance. So I think that is what is weighed in the numbers as per my understanding. I think if the stock is correcting today or maybe have a couple of days of correction, I think it will again become a buy as per my understanding valuation wise. After correction, you can look at buying Muthoot, but not immediately. Let it settle down, let it correct for a day or two. Because, eventually if gold prices were to stabilize and maybe move up a bit, and, your interest rate, scenario where you're assuming interest rate hike may happen because of inflation. If that scare is also away, I think again, it'll come back. But it's a very well managed company overall. So I think corrections will be buying opportunities. So one should wait and watch.
All right. I'm just taking a look at the overall market as well. Breadth intact, as Shell mentioned. The initial bump up is steady, so we're still holding fort around that point. Metals are participating today. OMCs, of course, on the back of crude cooling off. Bajaj Fin, let's come back to that as well. And everyone's sounding surprised this morning at the bump up. Everyone's sounding surprised at earnings. Neeraj, Bajaj Fin is a market favorite, so I think healthy performance in itself is not surprising, but I think the kind of strength it's continuing to show, the stock is now up 3% this morning and 11%, 12% in a week. What is this telling you? What is this indicating about the way forward?
Again, wherever we've seen sale, there is definitely a sales improvement. So Bajaj Finance does a lot of consumer durable financing, a lot of electronic, a lot of that kind of financing. So definitely the business is improving. So I feel that the stock has really moved up in anticipation of the results, plus the results also good. So there is the upside potential. The momentum is strong right now. And, overall, it may consolidate after a run-up, but overall, I feel that it's a good positive trajectory, which most of the financials are showing. So I'm positive on NBFCs and financials as a space.
Okay, couple of others. We've got Arvind Companies up, I think, 12%. Let's bring that one up for you. And Urban Company is looking really strong. They've actually delivered a net loss of 92 crores in the quarter versus a profit previously. Just looking a little deeper into those numbers, but clearly the markets are responding well to it. On a sequential basis, I think the loss has narrowed. That's the sort of fine print coming in. And revenue from operations also are looking healthy. In fact, they're very healthy. 528 versus 367 crores. So they've said that net transaction value is up 42% year on year to 1,465 crores. They've also added 1.2 million users during the quarter. That's the first time they've added that million user mark in a single quarter. So that's huge for the company. One of the strongest quarters yet for Urban Company. And that's what the markets are reacting to this morning. Exciting times on some of these new age listings. Neeraj, what would you say?
See, it's a new age company, and the parameter that they are portraying are positive as far as internals are concerned. But I normally don't look at companies which are cash flow negative and which are not showing you any profits. There is definitely some improvement from the loss that they had earlier, but still it's a massive loss that they have come out with. So I really don't track the stock, so I can't comment.
All right. It's a tough crowd for some of these new age listings, but good numbers there for Urban Company. Now, Persistent, let's pull that up for you. Here, the profit has actually slipped 9%. And right now, in fact, continuing to see margin pressure coming in on that one. Below estimates, and I think it's largely that. It's just that, it's weak numbers this time around. So no hidden gems on this one, but 3% down this morning. Neeraj, let me get your view on this as well.
See, the stock had also moved up a bit earlier, because of some news flow. As far as IT is concerned, I think IT has become more like a trading bet. Numbers are not improving. The guidance is not improving. It is only that when the stocks correct a lot, valuation-wise, they deserve a bounce back. So there is definitely some buying which comes at lower levels. But it can't be you can't really change your view right now, because even the management guidance which has come from the numbers declared so far is not so positive as far as the rest of the year is concerned. So let the companies come out with better guidance, then we can change a view for an investment view on the stock. But as a trading view, whenever the stock corrects, definitely there's a bounce back which comes that we've seen for the last 2-3 quarters now.
Sure. Persistent's been a market favorite, Shell, but this time around, the market's seeing the numbers more or less in line in terms of order flows, so on, citing weaker margins, lower profitability, and also saying that apart from the top clients, the next few accounts remain subdued. So what does this say for future outlook or guidance? Because everyone's keenly watching everything that comes out in terms of commentary from the IT pack.
Well, Abha, if you recollect, Persistent had also announced a very large buyout of a rival company at a price which the markets did not find very accretive. So that is also a negative where, your free cash flows are getting deployed on an asset which might not be as good as what you have paid for. Apart from that, the stock has rallied from 4,200 at the bottom of June all the way up to 5,600 last Friday. So I think, those rara days of IT sector are no longer there. This is going to react negatively on those two developments, poor performance as also the overhang of a slightly expensive buyout. You need to look at Divi's Labs, fresh record high on a very strong set of earnings, profit up 66% at 902 crore rupees and sales up 28% at 3,080 crores. So again, margin expansion here, and needless to say, a fresh record high. It's the top traded counter, Abha, on the National Stock Exchange, 387 crores traded.
Absolutely. Good spot there, Shell. 3% high on a Divi's, looking incredibly strong post-earnings. And I think I just saw a mid-cap name, Aarti Surfactants, that's also at an upper circuit. We've got a few in the mid-cap broader markets. Clean Science is up 8-9%. So there are a lot of other smaller stocks that are really on fire post some of that earnings action. I'll take you through Divi's in a little bit more detail shortly. But okay, I think it's a price target hike that's come in by Macquarie, and that's what's driving the counter, as Shell also mentioned, almost 4% higher right now. First target above 10,000 on this counter and looking incredibly strong this morning. Now, from semiconductors to clean energy and defense, critical minerals are becoming the backbone of India's growth story. At the BT Infrastructure Summit, Union Minister G. Kishan Reddy spoke on why Atmanirbharta in minerals is no longer a choice but a necessity.
We are incentive over 46,000 crores in large-scale coal gasification. This is a new activity in India. To convert coal into the synthetic gas, fertilizer, diesel, methanol, and chemical feedstocks, creating greater value addition while supporting cleaner industrial growth. Without steel, there cannot be infrastructure in India. Without coal, there cannot be a steel. Similarly, India cannot aspire to become a global semiconductor manufacturing without securing critical minerals. We cannot build batteries without lithium, cobalt, and graphite. We cannot achieve our clean energy ambitions without copper, nickel, and rare earth elements. Therefore, mineral security is at the core convergence of economic security, energy security, and national security. Recent geopolitical developments have reminded the world that economic security and national security are closely linked. These challenges have again underscored the importance of the Atmanirbharta and resilient supply chain. We have also transformed the coal sector and mineral sector through commercial mining activity, greater private participation of 100% FDI under the automatic route, creating a more efficient and investment-friendly ecosystem. We are leveraging artificial intelligence, drone-based exploration, satellite mapping, and advanced geospatial technologies to improve exploration, mining, and planning, and operational safety.
All right, we're almost out of time. Neeraj, let me get a closing comment from you. 24,546 on the Nifty, up a strong 160 odd points. And clear stars in trade, Divis, Bajaj Finance, among others. Closing comments from you on what we should look for as we move into a fresh month and a fresh trading week.
The numbers have come out quite good in some of the companies, whether it's Bajaj Finance, like you mentioned, DV's Lab, and some of the banks also come out with good numbers. Infrastructure companies like L&T also have a good, strong order book, and they are also saying that the margins will improve. So all this points to a good second half. So there can be volatility because of the global situation, but I think domestically things are really looking good. So one should be constructive and looking at opportunities to build up their portfolios to add to stocks for the rest of the year.
All right, Neeraj, great having you with us. Shell, thanks so much as well.
Thank you.
Completely out of time on the show, but let's hope this positive momentum continues and we head towards 25,000 this week. Thanks so much for watching.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and a warm welcome Monday on this wonderful session on Dalal Street, ladies and gentlemen. It's a very strong gap up and we've held for the first 15 minutes of trade, 24, 550 for you. Weak oil down $4 a barrel. A strong rupee up 1.2% last week versus the dollar, as also very strong FII inflows in Dalal Street, as also in the broader economy via the FCNRB deposit, are all boosting markets as if there is no tomorrow. Ladies and gentlemen, look at Divi's Lab, very strong earnings, 3% higher, 8311. Bajaj Finance, again very strong earnings, 2.5% higher, 1170. Both Bajaj Finance and Divi's Labs are at a fresh record high. In pain, Muthoot Finance, Q1Q numbers are terrible, 10% lower, which is the first circuit for a FNO stock, 2784, and this is a price which was last seen in September of 2025. So the stock has fallen substantially. What's on gainers list? AB Capital, something that I've been pointing out, 4.5% higher, 423. Reddington post earnings 6% higher, 343. Deep Industries, very strong show, 6% higher, 637. These are all record highs. I'm talking about from the auto ancillary space. Precol Limited, you have strong gains coming into stocks such as Majestic Auto. So the markets are in good shape, and we are now joined by Mr. Mitesh Panchal to discuss the ebb and flow of charts. Namaste Mitesh ji, a very warm welcome. A very positive surprise for the Nifty, 24,547. What are the charts telling you for the market?
Good morning, Sharji. Good morning to all our viewers. So the story of the chart remains the same. 23,800 is a bottom, 24,800 is a top. So as long as we are traveling in this range, there is no, so to say, a view on the index. The firm view will come only about 24,800, and the firm view on the bottom side will come only about 23,800. But what we can assess right now is that 23,800 continue to remain as a floor, because it's been the third time when the index has taken a strong support in the recent past and bounced back. But what about the resistance? So the first resistance which we are testing today is 24,500. Let's see whether the index will close above this level or not. And then the second resistance is 24,800. If we manage to close 24,800 on the upside, yes, we can say that now then the index will be out of the range, and probably we can talk about the higher level. So far we are in the range. Let's see to it whether the two resistance, 24,500 and 24,800, is taken over or not.
Okay. In terms of strength, both Bajaj Finance and Divi's, which are Nifty stocks, are doing immensely well, both at record highs post earnings. What is your view on Divi's especially?
So as far as Divi's Lab is concerned, yes, the stock is at a lifetime high, and since last few weeks, stock was making a comeback. For an example, as per our method and system, the stock appears on the buy list as on 22nd of May 2026 at 6885. After that, the stock has spent close to 7 weeks in the consolidation zone between 6447 on the downside and 6960 on the upside. For the week ended 17th of July 2026, finally we have broken that range, and stock closed well above 6960. The close on 17th of July 2026 was 7258, and after that in the last 2 weeks stock has made a phenomenal run. So yes, it's a good to go. As per the system, it's a buy, so one can go long at the current level as well.
Okay, fair point. The rupee is pretty much acting as you had suggested a couple of weeks ago. After 4 successive week of relentless selling, you have a green week which ended Friday. Would you want to comment on the rupee here?
Yeah, so Salji, rupee, as far as rupee is concerned, 95.20 is a floor. So once 95.20 is broken, then we can see a slide up to 91. So we are waiting for 95.20 to get broken on the downside. If it's broken in terms of price, then yes, we are heading for 91, 92. So again, the view remains the same that we are not heading for 100, but probably we are heading for 80 in the next 12 to 18 months. And here a strong rupee appreciation story has, sorry, the strong rupee appreciation trajectory has already started, and we may see a strong appreciation going forward as well.
Okay. Let's just take a detour into the market. Let's look at top gainers today. You have Aarti Surfactants 20% higher, 481. You have Blue Dart 9% higher, 5635. Very strong volumes. Dalmia Sugar 381, 8% higher. Strong moves coming into Sangvi Movers 7.3% higher, 440. Gujarat Apollo is 7% higher, 370. Deep Industry 6% higher, 634. That's the strength that is coming into the market. And in terms of gainers, look at NetWeb 4% higher, 4738. Look at Urban Company 15% higher. A view on Urban Company post its earnings, Miteshji?
We do have a limited chart history, so I cannot take a longer term view on that. But the recent high continue to remain as a pretty strong resistance. So any view should and must be formed only above 156, because consecutively back to back on 2 weeks, that is a week ended 30th of April and the week ending 8th of May, the stock has made a top at 156. So no comment unless and until the stock crosses 156. Once the stock crosses 156, then only we can have some sort of an idea whether the stock is entering into a new trajectory or not. But till that time, wait and watch.
Okay, 5th May is when it hit 156 before earnings came in, and today's rally is, ladies and gentlemen, fueled by a fairly okayish set of numbers. Let's also look at stocks that are in all-time low. Anything that I would like to mark? Well, nothing much here, but strength in terms of earnings-led moves that are coming in. NBFC is in top shape. AB Capital, Miteshji, fresh record high, 4.7% higher, 423.
Yeah, so AV Capital, the stock was gaining momentum above 380 only, Shailji, and above 380, if you look at the chart pattern, it's all about heart of R bottom formation. So going forward, the stock will attract 450 in the near term and 520 in the medium to long term. So yes, current level with a stop of 405, one can go long in AB Capital for the potential target of 450 and 480 in the next 1 to 2 months.
Okay. 940, ladies and gentlemen. Let's look at the Nifty now. We've had a fairly strong and decent gap up, and the gap up has sustained over the first 15 minutes of trade. Miteshji, after 102 sessions, the Nifty is now back above 200-day DMA, and this is a high that we have last seen in 2nd of March. What is the prognosis for this immensely significant development?
Again, Shelji, the point is pretty simple. The hypothesis is pretty simple, and the analysis as well is pretty simple, is that we stuck into the range. So it is not that the very first time we are at this level. I think in the past we have made a couple of attempts, but unfortunately unable to cross this. So as I said earlier, even not getting excited crossing 24,500, the real test is getting 24,800 on a closing basis, that too on a weekly basis. So if that has been taken over, then we can say that yes, the steam is back, the people are back in the market, and probably we can talk about 26,000 or a new high. But as long as 25,800 is defended on the upside, I don't think so we'll be able to make anything on that front. So let's wait and watch. I mean, at the current level, 24,500 is not an exciting level for me, because it might happen that we might see a bit of a consolidation phase going forward as well. So the real kicker is in 24,800, crossing 24,800 on a closing basis.
Right. One must also remember that the Nifty was at 23,600 the Friday before, and from then on it's been a wonderful uptick on the index. What else is gaining? It's Gabriel. This is an auto ancillary which is doing immensely well. Let's get a view in on Gabriel from Mitesh ji.
So as far as Gabriel is concerned, again, the stock is trading at a lifetime high or near the lifetime high. As per the system and method, the stock qualified on the buy list on 3rd of July 2026 at 1232. Since then, it's a heart of hard bottom formation. The silver lining is that stock is now comfortably trading above its immediate resistance level of 1386, which it has hit on 10th of October 2025. So yes, again, on the volume front, we are getting a good comfort. So good to go as of now. Probably stock will enter into a new trading range between 1500 to 1600 going forward. So even at the current level on decline, one can go long into the stock.
Okay, 942. As I was pointing out that the first 20-25 minutes of trade have been good, and taking the cue from the Nifty is Bank Nifty, ladies and gentlemen. The top 4 stocks are in good shape. You have strength in the Nifty PSU banking setup as well. The index 1.3% higher, SBI 1.5% higher, PNB 0.7% higher, Canara Bank 1.1% higher, Bank of Baroda adding 1.35%, and of course Indian Bank 1.3% higher. The Nifty Private Banking Index is in good shape, 0.75% higher. HDFC Bank, ICICI Bank, Axis, IndusInd and Kotak all in the green. A view on the banking space, Mitesh ji, what looks good, what doesn't look that good?
What looks good is undoubtedly the PSU basket. And if you look at today also, the Union Bank is making a new high, Bank of India is making a new high, Bank of Baroda is making a new high, Can Bank is making a new high. So what is looking extremely good on the chart is the entire PSU basket. What is not looking good is the private sector bank, and so to say 2 banks. First is your Axis Bank and second is your Kotak Mahindra Bank. So that is not looking good on the chart. Else, I think it's a good to go as far as the PSU basket is concerned.
Okay, we'll call it time here, Mitesh. Thank you for your wonderful views, and we'll be back again together fairly shortly. So, ladies and gentlemen, it's been a great day for markets. 24,500 has been reclaimed after 3rd of March. The Nifty is above 200-day DMA, all thanks to a strong rupee. Let's look at what the rupee is doing in early trade. Remember, last week it added 1.2% versus the dollar, and today itself it has appreciated by another 22 paise thanks to strong FCNR inflows on the deposit side and a positive number by FIIs on a weekly basis, a net purchase of 7,300 crores of Indian equities. What you see on the rupee is the highest since 8th of July, and it brings good cheer and good momentum to Dalal Street. We are at 24,555 on the Nifty, 170 points higher. The Nifty Bank 500 points higher, and the Nifty IT index 155 points higher. All in good shape. Let's hope we get a close above 24,500 today. That itself will be a major achievement after 102 sessions below 200 DMA. Thank you.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Ladies and gentlemen, good evening once again. As we are keeping our eyes on the 2047 target towards Viksit Bharat, and we are looking forward to India becoming a developed economy by then, the real question is not that whether we can build infrastructure at scale, but it is whether we can build world-class quality, resilient designs, and of course, globally competitive infrastructure as well. That's something that we are going to be finding out, that how much muscle is in India's Bharat when it comes to infrastructure right now, and how much more do we need to develop still. I'll start off with you, Dr. Bharat, and start off by understanding that India has been investing at an unprecedented scale when it comes to infrastructure. Is there still a lot of impediments that are slowing down infrastructure ambitions that we still have set for ourselves?
I think as someone who's spent his entire life in first 25 years in project finance and then moving to the industry, two things that have brought a fundamental shift in the last 10, 12 years. One is implementation. There is nowhere in the world that you have 34 metro projects or build more than 30 kilometers of road, or do 200 gigawatts of renewable energy at the lowest price. The other is the consciousness on quality, because it's no more a low-cost, low-quality country or economy. And with the success of Digital India, people for the first time tasted in public investments scalability, affordability being done at speed. And the other thing about India is the rise of the consumption economy. The middle class pyramid has inversed. So there is a willingness to pay. The traditional model of a supply side push is changing into a demand side pull. Of course, there are many other bits, the financing of infrastructure, the ecosystem and the intermediate layers, whether it's advanced materials and logistics and supply chain improvements, some policy initiatives, and green and AI as two new big entrants into the room. I think as Hitachi Rail and Hitachi Energy, we have our hands full, and we are still, original idea used to be that we'll export out of India too. But the busyness that we have in the deals at hand in India is very telling, and that I think for any Indian is a very proud moment.
Absolutely. Rajiv, I'll get you in here. How is India's manufacturing ecosystem really stepping in when it comes to fulfilling India's infrastructure ambitions at this point in time? Are we on course to develop smarter, stronger, more sustainable infrastructure materials as well? What is the capability that we are looking at today vis-a-vis what do we need to develop?
Yeah, sure. So, as Mr. Bharat mentioned, and also in the previous panel discussion, the panelist mentioned that thanks to the vision of our Honorable Prime Minister, we are seeing an era where, most of the things that we planned are coming to, becoming a reality. At Jindal Stainless, we are also committed to, developing a sustainable infrastructure for India. And also we can already see a sea change in the way the public policy is coming out, and the government agencies, the developers are evaluating materials more by the life cycle cost and not solely on the L1 projects. I'll just give an example as to, at Jindal Stainless, we not only developed a few important grades for use in infra segment, but also were successfully able to convince the government authorities that, it's not the L1 alone. You got to see what is the material that you are using in your projects sustainable? Are the practices that you are using sustainable? Is it about L1 all the time, or you want infra which is once fit it and forget it? So to that extent, I'm happy to report that the government is looking at infra with a fresh lens of sustainability. Lots of things India is doing. We were talking about high-speed rail in the previous session. High-speed rail, we are seeing the reality of one line coming into force. But we should, I think, focus more on developing manufacturing capabilities within India, wherein we can develop those high-speed trains. And, companies like ours and my fellow panelists also representing large corporations. And we can do really pitch in terms of, helping government realize this dream.
Okay, Amit, I'm going to be coming to you. When it comes to technology, can it be the force multiplier when it comes to achieving our infra ambitions by 2047 in creating smarter, more sustainable, opportunities and growth that we are looking at?
This is your mic. Firstly, thank you for having me, and I think it's a very interesting panel, and all the panels we saw this morning. So, I think from a technology perspective, there is a lot of talk about AI. So technology obviously is going to be a big factor in moving infrastructure very fast. So let me first come to before technology. I think we heard Mr. Vinayak Chatterjee talk about a lot of problems in infrastructure, and I think he's right. There are still problems. But when you look at the budgets alone, just before COVID 2019, from now, there is almost the budget's actually gone up 3 times in infrastructure. And I know the spend in real estate, which is my industry because we do elevators and escalators, is 5 times. So now to build that speed of manufacturing and a demand, which Mr. Kaushal just talked about from a consumer point of view, we need to really get a lot of technology in. We need to get a lot of digitalization in. And digitalization, so when you build infrastructure or you build factories, BIM, which is the information modeling, business information modeling, becomes extremely important even for smaller businesses, even for smaller manufacturing, because that integrates a lot of things and brings everybody on the same page. Whether they're at a distance, even if you're building roads, or even if you're actually, even if you're connecting, even the smaller roads, or there are a lot of roads that are already built but they're trying to make them better. Even for that, BIM becomes very important. Then second part is the IoT, the cloud-based technology and the AI that actually integrates to see what faults are coming in. That you can easily see that now through IoT, through the cloud network. I'll give you an example which I can give from my industry. All the elevators that are connected remotely, we predict failures. So we know where a failure is going to happen and we fix it even before it happens. And the client or the customer, our customer, doesn't realize that something is going to fail because it's already fixed. Similarly, that technology can be used for roads. It can be used for bridges. Third thing, again, technology comes to prefabricated. It comes to modular structures. You don't have to build everything on the site, so that there is I'd say, I think it makes it easier if you have prefabricated modular design already built and then put in, particularly in bridges, flyovers, etc. So that gives you a lot of speed. And today, to build infrastructure, we need speed because there are a lot of hassles. Fourth is a single window concept and an integration between the states and the central government so that they're all on the same page. If somebody has to, let's say, build a factory, an MNC coming in, we just heard in the last talk there that a lot of MNCs are now manufacturing in India, Make in India becoming so big, and I'll just talk about 5 points for this. Fourth point, that is very important, that the ease of doing business is actually a single window concept even between the central and the state government. It's much, much better, but there can be more digitalization happen so that the speed actually goes up. And when you look at manufacturing, for instance, again, by 2047, we are saying that 25% of the GDP is going to come from there. So that will help. So roads, ports, airports, we're going to 400 airports, I believe, by 2047 from 160 now. All that needs speed, and that can only happen through technology, through innovation, and through protecting people, again, through IoT and AI-based systems.
Fair point. Ankur, I'm going to be bringing you in. When it comes to, of course, the kind of demand that you're looking at this point in time, at the same time, the supply chain issues that keep on cropping. How are you looking at the current situation vis-a-vis what do we need to achieve, and whether we have enough seamless way to go when it comes to our supply chains?
Thank you for having me here. So, in that sense, I would say the supply chain management has improved quite a lot in the country. In the last few years, I would say post-GST era, and with the expressways that have come up, obviously the government has worked very hard, and the Honorable Minister, Mr. Gadkari, has worked very hard in that. And I would say like our raw material, which primarily comes from South Korea or say from Middle East, right, which used to take almost from Mumbai, Nhava Sheva and Mundra, it used to take almost 7 to 8 days time, 9 days time to Dehradun. It now has reduced by almost 50%. So that supply chain management has improved a lot. We ship across the country, we ship across the world right now. And to Chennai, it used to take maybe initially 10 years ago, it used to take maybe around 10 days time. And now within 5 to 6 days, you have the material in Chennai or any part like Kanyakumari as well, Coimbatore as well. So supply chain network management has improved a lot in the last few years. And I'm sure this is going to further keep on improving. As more and more expressways are coming up, more and more connectivity is happening. So this thing is obviously for a global, for India to become a global network supplier. Right now we are net importers, we are not net exporters, right? So I personally, we as a made in India company, 100% made in India company, made in India products. So I personally believe that yes, we need to rise more of our export shares, and we are working towards that.
Okay. Dr. Bharat, everybody is talking about how we are expanding our road networks massively. Ankur also pointed out how the time duration has reduced when it comes to such massive highways between Delhi and Dehradun. But whenever we see such expansion, at the same time, monsoons fail our Indian citizens every time. We've heard of late what has happened at the Delhi-Dehradun flyover as well. So how are you looking at what is the challenge that still needs to looked at?
So, if you allow me, maybe I can just take 1 minute to that very important question on supply chain.
Sure.
Because India was being looked so far as a transaction, and now it's become integral to strategy. So the interconnectedness between OEMs and the supply chain companies, the credibility track record of supply chain companies, and they're humble and hungry, they want to do the next. So when you look at it as an infrastructure player, 40% has to only become 60%. You don't have to.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is where our focus will be on the earnings of Narayana Hrudayalaya, which has come out with its Q1 numbers, where the revenue has seen a sharp uptick of 78% year on year.
on a consolidated basis, coming in upwards of 2,684 odd crores. We've also seen the operational profits up by about 40 odd %. Although we've seen slight cool off as far as the margins are concerned, we're also going to be looking at how some of its India and overseas performance has been. The India revenue has risen 17% year on year, whereas the Cayman revenue has surged a sharp 39% on a year on year basis. We've also seen an uptick as far as the UK business is concerned as well for the company. Let's get speaking with the top management of Narayana Hrudayalaya to give us more understanding of what have been the key factors behind the growth this time and what's the outlook for the rest of the financial year 2027. Let's welcome on board Sandhya J, the Group CFO for Narayana Health, joining in on the program. Welcome to you, Sandhya. Good to have you with us. So strong top line growth. Congratulations on that. Give us a sense of what have been the key factors that have driven this growth for you for the top line.
Good morning, Sakshi. Thank you for having me here. So overall, we've reported our highest ever revenue as a group, even on an organic basis, if you keep the effect of the UK edition out of it. A large part of it has come from the India performance. It has been very healthy, like you mentioned, 17% growth without any bed addition. That's something that I wanted to call out. So all of it has come organically, higher footfall, improved throughput. Cayman, the new hospital, is fully up and running, and therefore the full flow through of that has come. And Cayman Insurance has done quite well, almost 3x the revenue same quarter last year, though the base was lower. So that's also contributed quite well. And integrated care in India, which is the clinics and the insurance business, has also done substantially well. So all of this put together has given us a very strong performance as far as the revenue is concerned. As far as the margins is concerned, India again has delivered a very healthy margin profile, coming on the back of improved throughput and the leverage that is coming through because we've been able to deliver higher revenue without adding capacity and costs. Cayman, again, the hospital segment has fully recovered in terms of margins, and therefore that flow through is coming through. We are seeing dilutions in Cayman Insurance. India integrated care, those are by design because these are early stage businesses and they do require an initial cash burn till they are able to catch up in terms of their cash flow turnaround. And UK, of course, we have taken a business which is by design a lower margin portfolio, but a more stable portfolio. So therefore, we do have headspace in the UK to grow, and we've seen a seasonal impact in the UK. We can talk about it more, which has caused some amount of dilution into our overall profitability profile.
Okay, let's talk about the Cayman business. What's the outlook there for the rest of financial year 2027, since you've said that it's fully up and running and the contribution has grown very strong? What is the headroom from here on as well?
So as far as the hospital business is concerned, I think we are at a stable state. You know, in countries like Cayman, you don't see the kind of growth that you see in India, but you see very healthy cash flows. So I think hospital will continue to generate healthy cash flows. Insurance, we are taking it a little more carefully to ensure that our loss ratios are brought under control. We have done better than last quarter in the current quarter, but we need more work to do in terms of bringing down the loss ratios as far as the insurance business is concerned. And to that extent, we are also moderating some of the policies that we are underwriting. Overall, I think Cayman will be able to show improved performance through the year.
Okay, let's also talk about the India, the kind of performance that we are seeing in the Indian market for you. How are the occupancy levels right now? And if you could also give us an RPOB as to how has that grown and what is your expectation for the rest of the year?
Sure. So we actually measure ARPIP, which is average revenue per patient, instead of RPOB, because we believe that is a little bit, it doesn't exactly give you the underlying measure because it gets diluted by the midnight occupancy, which becomes the denominator as far as RPOB is concerned. Our ARPIP for Q1 is IP, which is the inpatient ARPIP, was about 1,62,000 per patient, average revenue per patient. And our OP ARPIP was about 5,100, which is very similar to where it was in Q4, but definitely significantly improved from where it was same quarter last year. A lot of the ARPIP uplift is coming because of the the higher end procedures we are doing, the improved throughput that we are able to realize, and also the benefit that we are getting because of the integrated offering that we are able to give to our customers through the clinic business.
Okay. On the margins, of course, at 18% odd, you are still leading the industry. But at the same time, when we compare it to what had happened in Q1 of FY26, there was a 23% kind of a margin that you had posted. So what has changed in the last 1 year? And how do you see the band going forward from here? By the end of FY27, if you could give us a band at where you would be comfortably ending as far as the margins are concerned.
So, if you see the margin of India hospitals for FY26, we have almost expanded more than 400 bips. So, there is a substantial improvement that you can see in the India hospital margins. And like I spoke about Cayman as well, there is dilution coming in from insurance in Cayman. Otherwise, the Cayman hospitals have caught up. The reason you are seeing a significant decline Q1 to Q1 is because of the addition of UK, which has come in at a base of 8% margin. UK operates between 8 to 10%. The market itself operates in mid-teens. So I don't think UK will ever catch up to an India kind of margin, but we have that head to catch up between where we are and where the market is.
Okay. So since you talk about the impact of the UK business in this current quarter, are we going to see any residual impact in the coming quarters as well? When do you see the UK business to give you that stability that you're looking at? And how do you see it panning out for the rest of the financial year?
So UK is a longer journey because we have to make the way we are looking at that business. One is that we are working in terms of the payer mix. Currently, we are significantly NHS driven, and that's by design, and it's also a good thing because NHS is a good stable payer. But we have capacity, and we want to fill up the incremental capacity with more private pay, which comes at a higher realization, but it's a longer journey to get there. And likewise, on the cost side, we have created a very strong cost platform using our tech, and you've seen us reap those benefits in Cayman and in India, and we are able to take that to UK. But again, both of these are structural and long-term in nature. A lot of impact will not be seen. We will improve, but you won't see a significant turnaround kind of impact in the current financial year. Okay. But over the medium term, you will be able to see the benefit of these initiatives we are taking.
Okay. Let's also talk about your current status of the expansion projects that you're looking at, and over the next 12 to 18 odd months, which are the hospitals that are expected to come on stream and start contributing?
So we have committed to 3,000 crores of capex, of which 1,000 crores we have spent so far. But most of it are greenfield or built to suit in nature, and therefore not at the moment only one small hospital is going live in the current quarter, and then we don't have anything substantial coming up in the next 12 months. So current year, we would assume that we are not having capacity increase, and any growth that you will see in the current year has to come organically through improved throughput.
Okay. And if I have to understand your own capital allocation priority, what is it going to be focused around? Is it entering newer markets, adding beds, or is it going to be more acquisition focused?
So, as we've already shared, our key investment priorities, definitely we have to create capacity in India. But in India, a lot of our capacity is coming greenfield, brownfield. We are not wary of acquisition, but we don't get it at the price point that makes sense for the price point at which we want to offer to our customers. So we will be opportunistic about it, but we will continue to invest to grow in India. And we are continuing to invest in integrated care and insurance, both in India and Cayman, and those investments will continue. At the moment, these are our priorities. We will look to stabilize the UK business and improve the revenue and profitability of that business.
For your new hospitals that you're talking about, what is the kind of ROCE and payback period are you targeting for those?
So, ROCE at a hospital level is not the right measure to look at it because the way we run in a very shared service. The hospital docks onto a platform that we've created at a group level, and therefore being able to measure ROC at an individual hospital level is not a right way to measure. So from a payback point of view, historically, we've always had a payback of 8 to 10 years. Now we are looking to accelerate that payback and turn it around much faster, because our platform, both tech as well as operational platform, is much more stronger right now, and our ability to dock into the platform is much better. So we are looking at a payback which is less than 5 years, and a much more faster break even for our new hospitals. But I think unless we do it and show, I don't think we can speak about it.
Okay, let's talk about your cash flow and the debt on the books, and how is the situation going to pan out for the rest of the year as well?
So at the moment, we're very, very healthy in terms of our cash and debt position. And for the rest of the year also, it would continue, because the build up is happening in a progressive way. I think we would get stretched in terms of debt only a couple of years from now when all the projects go live. But we also believe that our cash flow position is getting stronger as we go along, and therefore we will be able to cross that bridge quite comfortably when that comes. So at the moment, we are very low on net debt to EBITDA, very low on debt equity, and quite comfortable in terms of our cash position.
Okay, and if I have to ask you for the rest of FY27, which are the geographies or hospitals that will drive the growth for you? What is your focus going to be, if you could give us top 2 or 3 priorities as well?
So for India, I think the flagships continue to perform, but the non-flagships have also contributed quite substantially to our growth. And therefore, I think we are trying to fire on all cylinders in India. As far as Cayman is concerned, it is a stable performance regime. So I don't think you will see significant growth from a revenue point of view, but it will continue to deliver stable cash flows. UK is something that we are working on. We should see growth in the UK, not at the levels of India, but we should see reasonable growth in the UK.
Okay, and if I have to understand on the overall top line growth expectation, what is the, of course the double digit is expectation, but what is the band at which you can expect to grow in as far as the top line is concerned?
I don't think we want to give a forward-looking guidance on this, but I think we've given enough information out there for you to be able to make an educated guess.
Okay, fair point. All the best to you, Sandhya, then for continued success on the upcoming quarters, and hopefully we'll get to speak with you as and when we progress as well very soon. Thank you so much for being with us and sharing all these insights from the quarterly earnings. All right, viewers, I hope that this has given you more insights as far as the earnings of Narayana Health is concerned, the outlook as far as the company is concerned as well, and which are the segments that are likely to outperform vis-a-vis provide some stability. They're comfortable with the cash flow and the debt position also at this point in time as well. But thanks a lot for joining us on the same. We'll of course keep getting you more markets coverage on the other side.
Hello and welcome. You're watching BTTV. This is Astha Chopra. Well, today we are in Gift City for some very interesting announcements done by Arth Bharat investment managers. And for that, we have a very special guest with us, Mr. Sachin Salrekar, who is the managing partner for the same. Thank you so much, Sachin, for speaking to us. First of all, I would like to congratulate on the same thing. And let's address the elephant in the room first. You have announced so many great expansion plans for the company as well. Can you please shed a light on that?
Thank you. Thank you for your wishes, and thank you for giving this opportunity to speak to us. We are expanding in a big way. So we are very positive about Gift City as well as India story. So we are doing two things. First, we are doing inbound, a lot of inbound, which Gift City is obviously our hub for that. In addition to that, we are also expanding our outbound opportunities. We are bringing with a retail global equity fund, starting with small amount of $2,000 maybe. For initial investments, so that everybody gets an opportunity to invest in global markets and take advantage of the growth that we see from there. So there are certain sectors which are not there in India, like the artificial intelligence, semiconductors. So this will give opportunity for Indian investors to take advantage of that growth in those sectors, which is not present here.
There is one also major point, your international footprint expansion plans as well. What countries are you targeting, or what areas are you targeting going forward?
So we have received an in principle approval from Abu Dhabi Global Markets. So we have already set up an office in Abu Dhabi. So the Middle East obviously is a very big linchpin for our growth. I've been there in the region for more than 2 decades. So obviously that's a top of our mind to grow in that region. In addition to that, we are also applied to Monetary Authority of Singapore for a license, a fund management company. So we intend to launch a VCC there. We also want to grow that area because again, Southeast Asia, China, it's a big growth market from investors' perspective. We have certain unique opportunities that we want to bring through those jurisdictions, and that is what we bring in there. Mauritius is our go-to market for retail. We have a retail license there. So we would like to launch our retail fund out of Mauritius, and we also have in Cayman, but we prefer Mauritius as a destination for our retail funds.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is what sort of show that focuses on the biggest buzz on the D Street. Yet again, another week and no more Monday blues. You can see a smart move on the Nifty, 24,581 right now. Almost a 200 point of a jump on the Nifty. We are looking at the Sensex surging over 500 points as well. There's a broad-based run-up that you're seeing. We're at the day's high point within the first 1.5 hours, 1 hour of trade already. All the sectors on the Nifty are actually higher in the session. You can see FMCG, PSU banks, IT index, even the broader market supporting the move at this point in time. On the Nifty, you have ITCE, Shriram Finance, Infosys, TCS as the top gainers. Even Indigo is flying high at this point in time. Whereas on the declining side, we do see just about 6-7 odd names that are still showing you some decline. Sun Pharma, Bharti Airtel, NTPC, Maruti. These are the stocks that are declining at this point in time. But the market breadth is pretty strong, and seems like August has started on a very positive note. Let's actually welcome our guest on board. We have Kshitij Mahajan joining in from Complete Circle to share with us a fresh take on the markets. Welcome to you, Kshitij. Good to have you with us. Well, August has started on a high note yet again. And history also shows that August has largely been a positive month. How are you looking at the setup? Of course, we have a taco trade that has led to all across the globe momentum on the higher side as well. The planned strikes on Iran have now been taken back, and therefore we saw a sharp improvement in the crude oil prices back below $84 a barrel, and market sentiment has improved for the better. How would you trade this week?
Morning, Sakshi. I think what a fantastic way to start Monday. And obviously there are multiple reasons. One is look at the Q1 numbers. I think auto numbers you look at, any FMCG number you look at, consumption push is really real, and we can see that there were a lot of question marks about monsoon. Now we are struggling with many states with floods, and and I think we should recover with that also. But I'm saying overall sentiments are looking very positive with regard to India. In anti-AI trade also, where you see a lot of markets are getting corrected and valuations are getting reasonable there. Still on a very high side. India is a perfect market for many of the FI investors to come back when it comes to anti-AI trade markets. So they will look at us also. July was, after February was the month where you have a positive sales with regard to FI flows in India. So I'm saying overall these sentiments are positive for India, and as we always say that money rotates in various emerging markets or developed markets, and I think this is a time when you'll see when you see cars turning around and you'll see money flowing back to India. I'm very positive August can set the tone, and in second half of this calendar year you'll see a lot of money moving to India. With regard to East, my summation here is that I have a lot of clients there. In fact, I'm planning to travel this week itself. there's no attack on any of the residential areas. All US done, and I think it's at that fag end or maybe a last leg of the conflict. Maybe it will take 2-3 months more, but it's like more like Russia, Ukraine. Now markets will move on by looking into that. Something will come out and they will discount this and move on. So I think a very positive day to start.
Okay, let's focus on the FMCG space. The index is up by 1.8%. The top moving sector, of course, led by ITC, which is the top mover on the Nifty today. 3.9% higher at 292 odd levels can be seen as far as ITC is concerned. The shares have risen after the Q1 numbers. This despite the fact that a 27% decline has been seen on the standalone net profit. But the revenue has grown 28%. We've also seen brokerage houses also upgrading the stock, like Nomura has upgraded the stock to a buy with citing an attractive risk-reward profile, potential recovery in the cigarettes profitability as well. They are also, however, even though ITC has warned that the imported inflation, a weak monsoon and lower Kharif sowing and West Asia tensions could pose as near-term risks as well. But despite that, we've seen a strong surge. How would you look at ITC numbers and what would your approach towards this stock be?
So, first disclaimer, ITC is a part of our portfolios. I will not comment on ITC as a whole, but I can tell you that beverages, liquor, cigarette consumption, I think India is pivoting towards a fit India. So, I'm myself a marathoner. I can tell you, I see a lot of youngsters. You will see consumption going down. That's my personal view and I think that's a better way. People are realizing the next luxury is health, irrespective of how much corpus you build. But if you don't have health on your side, what are you going to do with that money? So I think one thing is very clear that India is changing for a better India, and this entire fitness campaign led by central government as well as youngsters, it will do well. On the FMCG space, my sense is look at a futuristic company, because you see all these big names which are a part of Nifty also with single-digit growth. So 1 or 2 quarter you might see a spark, maybe jump. But yes, overall, for the single-digit higher side single-digit growth, you not see much of action happening there. But yes, as you mentioned, the company has not done well over a period of time. There might be a cover-up rally which you might see in the stock. But yes, overall, you see, I see that FMCG can give you a stability in a portfolio. In fact, Sakshi, my sense is next 4 to 5 years' time that you will see the construct of Nifty will change drastically. What happened after GFC? GFC, after global financial crisis in 2008. Many of the companies involved, many of the new age businesses you will see coming and becoming a part of Nifty. And that has already been started. So yes, rather than just focusing on only FMCG side, focus on the real consumption side, where the real consumption is. Focus on the trades where you are getting from unorganized to organized. I think that's a bigger picture, bigger story.
Absolutely. Let's focus on some of the other key stocks also that are in focus. Today on the downside, we have Muthoot Finance from the gold financing space that has crashed by almost 11% post the earnings. We've seen some brokerage houses downgrade the stock, like Jefferies has downgraded the stock to hold from its earlier buy rating. It's cut the target price to 3,300 as well. And where Jefferies has pointed out that Muthoot Finance has seen a margin compression due to normalization of yield and rollover to lower rate slabs and price cuts due to competition as well. Although the customer additions have picked up for Muthoot, how would you look at the gold financing businesses at this point, Kshitij?
Well, it's a very good business. Obviously there are global, cuts in gold prices, and obviously we have recovered our currency a bit. So gold is traded in dollar. That's have been led to some correction here in India. My sense is 5 to 7% has to be a part of gold has to be part of your portfolio. On the gold financing side, that's a much more easiest way of taking a quick money. And as the consumption pattern will increase, as this EMI culture will increase, you'll see that gold financing will also pick up. Again, a disclaimer, it's a part of our portfolio, but I can tell you one thing that as a gold financing and gold as well, it's a good hedge in your portfolio. And yes, these are 1 or 2 quarters which may go up and down, but you're not investing here for a quarter or two. You're here for a long run, and that's why I think You have to pick the right bet by doing your due diligence. But yes, gold financing as a business will keep on doing well. But you have to bucket, Sakshi. You can't just keep on adding and just taking any percentage. You have to see where the conviction is much more, where you have growth which is coming much more, and where there's a new element is there. Then you take little higher allocation. And if you can't do that, then there are mutual fund, PMS, and AF and ETFs. That's the right way of going.
Okay. Let's also focus on the auto space. It's been a record July passenger vehicle sales, which has set the strong festive tone already. Right ahead of the season beginning, we're seeing Maruti, Tata Motors, Mahindra & Mahindra retaining the pecking order as far as the kind of sales figures are coming in as well. Some of them have posted some record numbers too. Your own sense, of course, Maruti is also reacting to its earnings as well, and it's down by about 0.4%. But the kind of sales momentum that has picked up over the last couple of months and this time around also coming in on top of those, how would you look at the auto pack, and what would your own pecking order be in terms of passenger vehicles, commercial vehicles, two-wheelers? How are you looking at where is the opportunity to be had?
So my sense is, I think we are selling the same number of cars, maybe 2-3 lakh more. Like before COVID, we were around 40 lakh. Now we are around 43 lakh on a yearly basis. China is doing 2 crore. Per capita GDP difference is huge. China is around $13,500. We are around $2,600. So once you have this stepping up, and once government push was there last year, 22nd September, we have GST coming, and at that time also, during my discussion with you and few other places, I clearly mentioned that it might take 2-3 quarters for numbers to reflect. And just go next day and start buying things on the auto side. But yes, the consumption is there. People are upgrading themselves, whether it's two-wheeler, four-wheeler, commercial vehicle sales are up, and you will see this happening. We are a little more bullish on the EV side of the story also. Company which are playing side, they will do well. But you can't discount the biggies which have 48-49% market share to move. It's very easy for them to maneuver. And in many places, EV might not be the right choice, but I think all this will coexist. So, we have few names. We have, in fact, the right way of playing it through is OEMs also. So, Auto Ank also. So we have Uno Minda as a part of our portfolio.
Okay.
Recommendation. These are part of our portfolios. And it's been we have Sandhar as a part of our portfolio. We have M&M on your four-wheeler side. We have Aetherins few portfolios. And then, yes, KPIT for the EV part of the technology we have in the portfolio. So these are the part of our PMS portfolios which we are playing. In some part, as you said, commercial vehicle, we have Tata Commercial Vehicle as a part of the portfolio. So few names are there, and we are looking at adding more, because on the manufacturing side, clear-cut push is there, and then manufacturing, almost the major part of manufacturing is your auto, and there's a lot of export opportunity also, and we are building that capacity very well. I think one should look at and playing this entire theme as a whole, rather than just playing through one or two stocks. When you are convinced about a theme or a sector, then map the entire value chain. That, okay, as you said, someone who's doing a good work on the EV side, on the two-wheeler side, someone who's doing good work on the commercial vehicle side, or on SUV side, on tractor sales side, then map everything and then play the entire theme. And this theme is going to be evergreen theme, my senses.
All right, okay. Anything else apart from these sectors that we discussed, which is now coming on top of your radar for the second half of the calendar year?
So yes, I think defense is one where we are very, very bullish. I think defense as a whole has a lot more to offer, not only your domestic consumption, but as a export consumption, export business also. That's one sector, and it includes everything from tech part, from drones, from missiles, from rockets, from fighter jet planes, everything. Then you map everything, and there are auto anchors also in defense. You'll be looking at that many of the Indian companies now will participate in, will move from making some parts of, let's say, engines to making the engine by themselves only. So we will not only copy, but initially we will ensure from our side that a lot of R&D going at our end. Many of the businesses are doing that. That's one sector which we are very bullish on. Then second, actually, for what we are talking here is financialization of saving. That's a huge opportunity, irrespective of how much these campaigns are there. And thanks to these campaigns, mutual funds, and few others.
Yeah.
6 crore unique mutual fund users. There are 62 crore PAN card linked to Aadhaar. So that's your market. And we say 23.5 crore Demat account holder, but unique account holders are around 14.5, 15 crore. So I think that journey will become very good. Then you again map the entire value chain, which broking company you like, which depository you like, which mutual fund house you like. So there are so many listed names, which banks you like, which are at a good valuations, scope of growth is high, book size is low, they can grow well with good compliant NPA names, which NBFC you like, which SFC you like. And this will become huge because easy credit, still in many places, the credit cost is really high for people around. But all these NBFCs and banks can offer easy credits. And I think that's again a very, very, very good sector. Again, one new sector which I think is a new age businesses and story around data centers, which will become very big. So you should always focus one who's looking at what is going to be a theme for the future. And where the government push is also there. We have 14 PLIs going, and now obviously there are scopes for data centers till 2047, no tax. So I think now somebody will say there are hardly any businesses in data centers, but you map the entire ecosystem. Who's making data centers? You need cables, you need AC, you need batteries, you need transformers, you need coolants, you need hose pipes. So you need everything in that data center, because once you have the data center coming, everything will go up. You have land owners also, which will make money out of it. So I'm saying, then you map the value chain, and then you go and buy the entire value chain of that thing. Again, it's easier said than done. We also go through a lot of plus and minuses in our picks, and then there's a lot of research work which goes at the back end. My suggestion is that look at how you can play it well if you have time, right? Otherwise, take a fund. In fact, I think
that's the best way. Yeah.
Last thing, one dark horse I think is IT is going to pivot, and mid and IT should do very well from here onwards. And I think it's been unnecessarily beaten down, but I think my sense is that it will pivot very fast, and dark horse which we want to play.
Okay, point taken. Thank you so much, then, Kshitij, for being with us on the program and highlighting all of these opportunities for all our viewers watching the show. Thank you so much. Appreciate your time with us on the What's Hot. All right, viewers, we'll wrap it up on that note. But coming up next is our personal finance show, Money Today. And today we're going to be discussing mutual funds ka funda, especially in case you are a beginner as far as mutual funds are concerned. Up next will be a discussion on the types of equity mutual funds there are and how should you really take your pick for your own portfolio. Stay tuned for that.
Welcome, you're watching BTTV. This is Astha Chopra. Well, today we are in Gift City and we have some very, very important and interesting announcements related to Arth Bharat investment managers. So for that, many congratulations for you. First, I would like to introduce yourself. Hi, Nachiket Savrikar. You are the fund manager for Arth Bharat Global Multiplier Fund. So, so your niche is specifically how the stock market is doing despite of all the geopolitical tensions which is happening. You are the correct person to talk to. So first of all, so let's build a clear picture about that. There are so many things happening around the world. How are you seeing the risks which are affecting the global markets right now?
Risks are always there. Let's start that. And currently the way I look at it is, we started the year thinking that the US
Hello and welcome. You're watching Money Today, our brand new personal finance show. And today, of course, we're going to be discussing mutual funds ka funda, especially equity mutual funds is something that we're going to be broadly discussing today. In case you are somebody who's just starting out on your investment journey, are not sure about how to invest and where to invest in when it comes to mutual funds, equity mutual funds particularly, then this is the show for you that will, of course, simplify a lot of those complications
positions that you have been looking at this point in time. Let me welcome our guest on board. We have Nasir Salim, the MD of Flexi Capital, joining in on the platform. Now, Nasir, of course, we do know that equity mutual funds are now being hailed as the best way of investing and creating wealth for investors. And of course, for the last many years, they have proven to be one of the best asset classes, where investors can continue to grow their wealth as well. But for all those who are starting just now and are not sure of whether this asset class is for them or where exactly should they look at, there are so many multiple categories now that exist as far as equity mutual funds are concerned. There are so many jargons to deal with. So we are going to be trying and helping all our viewers simplify all of that in this show. So we'll start off with the very basic, simple. What are equity mutual funds and why should every investor be definitely keen on looking at it?
Good morning, Sakshi. Great to be back and with you in your show. So clearly, I think 2-3 key points. They're very interesting conversation to start with, to be honest, because as mutual funds are getting a lot of popularity. I think the essence is how exactly are mutual funds on equity and how do they work? What are they all about? I think, broadly, Sakshi, equity mutual funds are basically pooled monies, which have been pooled from many investors and invest primarily in shares of listed companies, right? I mean, that's the broad perspective that your viewers need to understand.
Yeah.
A professional fund manager is the one who selects those stocks based on the fund's, mandate, whether it's, we'll get into that, whether it's large, mid or small or any other thematic funds. And then they benefit from 3 broad categories, right? One is diversification. You have a professional guy who's managing it for you. So there's professional management. And there's obviously participation in the growth of businesses without having an individual to pick up stocks themselves. So they're dependent on a professional guy, a professional fund manager who's mandated by SEBI, and it's obviously participating in the best of businesses that the mutual fund team or the fund management team decides to pick up stocks for.
Absolutely. Now, who should be looking at investing in equity mutual funds is a very important question that a lot of our viewers will want to understand for themselves. And, what is the kind of investment time horizon that they have to be prepared for before they go for equity mutual fund investments?
So historically, Sakshi, I would say this, when you said who and why, and we'll cover both these points together. Number one is equity as an asset class historically has been helping investors participate in economic and corporate growth over long periods of time. Markets, of course, have been very volatile in the short term, as we've been witnessing over the last few quarters. But the disciplined approach in investing in longer horizons, which has the potential to create wealth through compounding. The word is compounding, as actually. And therefore, any investor who ideally has a time horizon of 5 years and beyond or more becomes the longer holding periods, which obviously smoothens out any short-term market fluctuation. So clearly, equity mutual funds need a horizon of at least 5 years and plus to make some great returns, which helps from the fact of compounding. We call compounding the 8th wonder of the world. This is it. So it's long-term with compounding benefit.
Long term, at least for 5 years, is something that you have to look at when you're looking at equity mutual funds. That's the bare minimum if you really want to see some kind of compounding to truly work for you in your investment portfolios. That's the minimum that you should have in your mindset. Of course, it's not like there is any lock-in. You can, of course, get out tomorrow. But this is a lock-in that you have to enforce in your own minds, that you have to stay disciplined with your investments and have a long-term horizon to truly see the magic of compounding unfold for your own portfolios when you're looking at equity mutual funds. That's something that investors must know. But now, like you also alluded to, we have to know what are these funds, where are the opportunities. So how should investors be really looking forward to? Now, there are 3 broad categories: large cap, mid cap, small caps, which are the basic ones that everybody looks at, but usually gets confused, and which ones offer the better opportunities, or should it be a mix of all 3? What would you advise here?
So 3 things clearly, Sakshi. Number one, don't start your journey with just looking at funds. I think we have to take a step back and figure out 3-4 key things here. Number one, what is your risk appetite? Then number 2, your time horizon, right? Number 3, are you willing to accept certain short-term losses for long-term capital gains. I think these are very core, and therefore my request is you must seek a professional and an experienced person who can help you navigate through some of these choices. Then comes, the choice of fund, as you rightly said, Sakshi. So there is, there are multiple funds today as we speak, which has been mandated by AMFI and by SEBI. In this case, there are often we hear terms like large caps, mid and small caps. I think the distinction broadly between some of these categories, between large, mid, and small, since it's, we're going to be discussing it a little more in detail. Large caps are funds which are relatively more stable. Mid cap on the other, and small cap funds can, for example, experience sharper ups and downs. Higher growth potential often comes with higher volatilities, actually, and therefore, so investors should choose based on their risk profile, which I mentioned to you, and investment horizon. So somebody who's looking for a linear journey, 5 years, linear journey, not very high in terms of market volatility, wants to stay away from any major drawdowns, look at the large cap option. Somebody who's interested in looking at long-term growth, but with higher, returns and higher volatility can consider mid and small. And then it's obviously a function of time and then a portfolio creation, Sakshi. So not one formula fits all, right? It's a function, it keeps changing, dynamically changing, but broadly, the broad principles are based on these that we just discussed.
Okay, but should as a beginner one only start with an index equity fund? Is that something that, will probably prepare them from what is going to be happening as far as large, mid and small cap funds are concerned? Would you advise that?
As a starter, yes, that's not a bad idea at all. There are many passive funds available through index participation, as you rightly said, Sakshi. I think, for most investors, because an index fund, ideally will be very diversified. And then that can be a sensible approach to, because, different market segments perform differently across different cycles. And therefore, an index fund, yes, as a start could be it. And there also we suggest, the mode, the starting also has to be, through staggered in an SIP or in a drip feed method, which can be, taken exposure to.
So that's a very important point that you mark out, Nasir. There is another confusion that always, comes in the mind of investors, whether they should have an SIP approach or whether they should invest in lump sums whenever the markets correct, so that they are able to invest at lower prices. What do you ideally advise investors to do when they go for such equity mutual funds, index, large, mid, small caps? Where exactly and how should the approach be?
Okay, so again, a great question. I think clearly, we would say that clearly to start with, number one, given where we are, if your goal is long-term, Sakshi, you can never make money in the short term. So please align your long-term goals with long-term investing, right? When we commit to long-term investing, the best way to do this, at least that we've witnessed over the last 22 years, is when you look at averaging out your entry points. Basically what it means is, you've bought something today, buy it again next week, buy it again next month, keep buying it. As long as you're in the right category of funds, you've taken the decision of investing. It should be in a SIP format, what we call systematic investment plans, which are very, very popular, gaining a lot of popularity as far as India is concerned. We see currently the book at 25,000 crores of money that goes in every month, Sakshi. Now, this is all on account of compounding benefits, discipline. So therefore, as against lump sum, the other quick point that I would want to allude to here is, rather than identifying a single, winning segments actually, or what we call popularly as FOMO, where a particular fund may have done really well in the last 3 years or 2 years, investors must be, they must use the diversified exposure routes, which basically means market leadership can shift over time, and diversification helps reduce that risk of relying too heavily on any one category. So large, mid, small, entry through SIP, long-term commitment, discipline, not looking at them every day, committed for the long, for compounding long-term wealth creation.
Okay. Another thing is that there are also now a very newer, mutual funds that are making their way and are being preferred by a lot of experts as well, such as hybrid mutual funds, such as multi-cap, funds as well, such as balanced advantage funds. If you could explain to our viewers what are these funds all about and why should investors also pay attention here?
Okay, again, this dates back to this entire discussion, or rather relates back to this entire discussion, Sakshi, of asset allocation, right? A lot of investors, especially, over the years who've kind of managed to save a considerable chunk of money through investing, now need some asset allocation, which originally should have happened at the beginning of their investment journey. So SEBI and AMFI have, gone ahead and said that there are these category of so-called hybrid funds, like hybrid cars we have. So they're also called hybrid funds. What they do is they, mix in a bit of fixed income, which is debt in this case.
Okay.
A bit of, gold has become very popular now. Commodities, for example, gold and silver is also coming through multi-asset funds. They also come under category of hybrids. Then there is, balanced advantage funds, which are again sweetened by some equity, some fixed income, a combination of some commodities. Those come in play. The point here to note is there are two broad kinds of hybrid funds. One, which has a bare minimum equity allocation of 65% of holdings. So say, for example, if you're putting 100 rupees at a fund level, 65 of those has to necessarily go into equity oriented schemes, in that fund. That gets you the advantage of equity taxation, which is 12.5% long-term capital gain if you hold beyond 1 year. The other category is, where it's an open mandate. You can go as high as 65%, as low as 35%, and that also gives you certain other taxation advantages. It's very important for you to have a discussion with your advisor, your distributor, to see which option suits you as an investor the most. The reason why they're getting popular is because they're very well diversified, as I told you, in different asset classes. And the idea of diversification here in these particular funds actually is that if, say, for example, gold comes down, it doesn't necessarily mean that the returns that you've made on your fixed income part of the portfolio or the equity part of the portfolio gets also reduced. That holds up, and therefore it works in a negative correlation between each other. So it's a best strategy to be adopted if you want asset allocation between different exposures. The third one that you spoke about as a separate category those are called multi-cap funds, and they come in with separate sets of rules.
And is there any clear difference between multi-cap and flexi-cap? If you could break that for our viewers as well, because a lot of confusion happens here.
Very valid point, Sakshi, and it does lead to a lot of confusion when we also interact with clients. Clearly, multi-cap has a separate mandate, flexi-cap has a separate mandate. Multi-cap, first and foremost, basically maintains allocations between large, mid, and small cap stocks, essentially to a minimum of 25%, which basically means actually that in a multi-cap fund, they need to necessarily maintain 75% allocation on the overall fund, right? Because if you've got minimum 25 in large, 25 in mid, and 25 in small, so that comes in at 75, and they can't go below that. The fund manager mandate cannot go below 25% each of those categories. Flexi cap, on the other hand, gives a complete, flexible situation. They call flexi cap is because it's flexible in nature. And what it does is that gives the fund manager the flexibility to move across market segments based on the fund manager's assessment of opportunities, and has no minimum or maximum limit. However, I must tell you that it does have a 65% capital allocation to equity or equity-related instruments in order for it to qualify as a equity taxation instrument fund. So that's the key difference. 75, 25, 25, 25 in multi-cap. Here, there's no minimum, but a minimum overall equity allocation of 65 in flexi-cap.
Okay, let's help all our viewers understand when they're going for equity funds, which are the categories that they must necessarily have in their portfolios. What do you advise?
Our recommendation is clearly when you're looking at equity allocations, you must have an index fund or a passive fund, as you rightly said.
Yeah.
Those are very, that's the starting point. Number two, bring in a bit of multi-asset hybrid funds, which has an equity taxation because it also gives you that additional kicker in terms of certain commodity plays, which is now becoming very attractive. in the current cycle that we are in. Number three, please get in some good quality large and mid caps because you're potentially betting on corporate India, which is expected to do really well over the next decade and continuing to do so. And I would say for an aggressive investor, maybe a little bit of we could do some combination of the small cap, but those are again very, very highly volatile. So please do seek inputs from your advisor. But broadly, I would again start with just those 4 points. Number one, index, definitely a passive index fund, a multi-asset or a hybrid fund. Then you get into a large and a mid cap. These four are definitely core to your holdings. And then of course, if you feel you're getting comfortable, do spring in a bit of small cap funds, but those clearly, Sakshi, the horizon is
for
10
high.
years.
Absolutely. So that's a very important point. Now, apart from this, I want to understand in terms of the mistakes that common people do when they look at these funds, and also, one of the common mistakes that everybody talks about is that it's now easy. There are a lot of platforms where people go compare these funds, see their last 1 year, 3 year, 5 year returns, and basis that just select whatever they find that this has been a better performing fund, so it suits me. What do you advise investors as to how to go about selecting the funds for themselves?
So 2-3 points there, Sakshi. I think one of you rightly said, I mean, the biggest mistake is chasing recent top performers and investing without a goal, as we spoke, and reacting emotionally to short-term market movements and fluctuations and ignoring their own risk tolerance, right? So clearly, and you can't only go on past performance returns. So I think, clearly the way to do this is, number one, you need to have certain filters in place. Right? So actually, number one is, it could be a filter just on return, which is fine, but that should have only say a 25 or a 30% weightage. The second one is fund manager. What is the name of the fund manager who you're investing with, and the fund house? So there are qualitative aspects also. So please look at his past performance, and that's all available today on all public domain information. So you look at the AMC, the asset management, the fund manager's name, how long has he been associated with that particular fund or that particular style of investing. Put another percentage there. 20% goes in there, 20% goes in returns. Then there are certain other scenarios which you consider, which is in this case in terms of just volatility. How volatile has the fund been over the last 5 years, 10 years, 7 years? Look at long-term data. Don't look at short-term spurts or short-term spikes in the returns of this particular fund.
Sure.
Number four, one last quick one, Sakshi. Number four is, how has those funds that you're considering performed in worse times? For example, look at the COVID scenario. Right now, we have the Iran and the US escalation. How have they done in the last 6 months or 3 months? So all of those will also give you a bit of a telltale on how you can choose those funds. And then last not the least, AUM size. How big is the asset under management that you're investing in? One, with the AMC, also at the fund level. What are exactly the assets that the fund is currently holding? So some of these will help you decide the way forward on these funds.
Very important. Lastly, what I find as in my common interactions with a lot of people, I'm sure even for you also this would have been true is that when people come up and they say that, I have invested in so-and-so company's funds, they actually tend to give more importance to the brand rather than the category. That's where the confusion happens as well. Does it truly matter whether you're investing in, the funds from ICICI to HDFC to SBI or maybe to Quant, Mirae Asset? There are so many companies offering mutual fund schemes. So is there any difference when you choose the brand over the category?
That's a very, very important question, Sakshi, and I'm very glad you raised that. So every asset manager, has a different style of investing, right? For example, ICICI, since you mentioned that name, they follow something called value-based investing. Then, there are certain others that follow growth style of investing. Now, obviously for your viewers, it'll be all very complicated to understand, what exactly is growth versus value versus quality. So look, it's a very simple procedure. Don't go only as per the brand. Please read up. You'll get information. You need to do some self-reading as well to understand. The brand helps you decide in which category you may choose basis the style of investing. So, for example, if I were to look at ABC, and out of A, B, and C, if I'm looking at only value style of investing, which means I'm buying, funds which are today trading at a discount to its historical averages in terms of price to earning bands, not getting it very complicated, but just simply telling you. A lot of viewers understand price to earnings. So when I'm looking at value style of investing, then I look at, say, for example, if amongst A, B, and C, if A is a good track record in value, then I will go to A and I will choose which fund from there. Right? Similarly, B and C. So it is very important. Don't just go blindfold on the asset management company. You have to understand which styles they adopt and then choose the best fund in that amongst them.
Fantastic. Nasir, this conversation can go on, and of course we'll try to do multiple episodes explaining each of the points that we have briefly touched upon in our conversation today. But I'm sure as a starting point, this has truly helped all our viewers to understand the basics of what are equity mutual funds, what kind of returns can you expect, what kind of horizons you need to have, what kind of categories there are to choose from, and how should, as an average investor, you must have exposure across various categories as well. All of those things you marked out, and of course help them understand where are the common mistakes to be avoided as well. So thanks a lot for being with us on this platform, Nasir, and of course we'll keep getting you back for more conversations around the same.
Thank you, Sakshi. Wonderful. Thank you very much.
All right, viewers, we'll wrap it up on that note as far as Money Today is concerned, but do stay tuned. Up next, coming up, more market conversations.
Suman, thank you very much for doing this, the first session kicking off this summit, because this is the most difficult, because you have to hopefully start on a very good note, and we want to power this summit through good thoughts, and you are somebody who's been leading India's renewable power revolution, if I may put it that way. It's clearly reached a stage of maturity. But in the broader context, I really want you to begin by explaining to this audience here, and as well as those who are watching us live right now, what is the progress that India has achieved in the near recent past with regard to renewable power, because everything that we see around us tells us that it is an imperative. Give us a sense of where we stand today.
Yeah, thank you, Siddharth. Thank you to BT for inviting me for this session. It's an important question that you've asked, and I can only give you a very positive answer. And that positive answer is actually that we stand at a pretty good point right now. Our renewable energy journey is well on its way right now. As you know, we are in the process of crossing 300 gigawatts of installed renewable capacity, out of which wind and solar account for a large majority, more than 2/3 of that. The target is, we all know, has been 500 gigawatts for a long time, and we have been on our way to achieving that target. Last year, we added 50 gigawatts of renewable capacity, and this year it's probably going to be exceeded as well from that number. Last year, we also overtook the US as the second largest, as the second largest country adding new renewable capacity, and we are now number 2 after China. So I think we are actually very well positioned just in adding new renewable capacity. Of course, and I'm sure you'll talk about that, what are the things that we need to do in addition to that really are the things that we all now need to focus on.
Let's take one more contemporary issue. All of this has been accomplished in I would say difficult circumstances, or you could choose the word to describe the situation. When I say that, it is in terms of our inadequacy of certain raw materials, inadequacy earlier some years ago of a manufacturing based companies like yours have done a yeoman's job in solving that crisis. But the broader geopolitical context, the last 6-8 months have taught us that dependency is bad. How significant a role is renewable power going to play in the near future to reduce that dependency that has been exposed with the West Asia crisis?
It's an interesting question. I think where renewables has now got to is, the numbers that I mentioned earlier, we've done a pretty good job. But now we're at multiple inflection points. Number one inflection point is that renewables is now about 20% of power supply. We know it's intermittent. The grid is already having a difficult job absorbing this power. In the middle of the day, solar is almost 200 gigawatts. The total peak capacity, peak demand is only 270 gigawatts. So even if you back everything else down to the maximum, we still have sometimes surplus power. That's a problem. Similarly, all the solar goes away in the evening. When the demand, the sort of evening peak comes in, and you don't have sufficient power at that time. So we need to start shifting a lot of the daytime supply to the evening to match that. So we need much more storage. So that's the first thing that we have to do is start installing with every renewable capacity now much more storage. So that's, I think, one thing that we have to do, which is better grid management through a lot more, whether it's pumped hydro, whether it's battery-based storage, right? So that's inflection point number one. The second inflection point is the fact that we have really grown our renewable capacity today mostly through imported equipment.
Yes.
And that is something that we now need to fix in light of all the energy security issues that we are facing. Of course, importing equipment for electricity production is not the same as importing fossil fuels on a daily basis.
Correct.
Because you have to import that on a daily basis, otherwise your car stop running and so on. Whereas at least if you put up a solar panel, a solar farm, at least it keeps generating power and it's within your boundaries. So it's one less order of dependence, but certainly for future growth there is dependence still. So that's something we have to remove. So we now have to move the supply chain all the way back. We've done some work in that area, but a lot more needs to be done, right? To decrease that dependence that we have right now on imported supply chains. So that's the second dependence that we have to really, or second inflection point that we have to address. The third inflection point in a way is how do we make sure
Welcome back on Business Today Television, ladies and gentlemen. It's turning out to be a great day on the markets as far as equity is concerned. The Nifty is now 210 points higher, screaming past 24,550, now close to 24,600. Let's see what the option writers do here. Nifty Bank is 514 points higher. The IT index now 1% higher. Why is this happening? Well, the rupee continues to gather strength just as FCNRB deposits make their way into India, and of course the fact that oil prices have come off the boil. This is all a very, very big positive, and that Asia is very weak, so that the AI trade is now unwinding. The rupee now 21 paise stronger at 95.16 versus the dollar. All this is adding to fresh momentum on Dalal Street. Added to that, very strong earnings from the likes of Nifty favorites such as Bajaj Finance and Divi's Lab, both of them at record highs and showing very strong rallies. To discuss the way forward and where markets are headed, we are now joined by Mr. Prateek Nigudkar, Senior Fund Manager at Shriram Asset Management Company. Good morning, Prateek ji. A very warm welcome. It's turning out to be a great day on Dalal Street. How are you reading this changed direction as far as market is concerned and this very strong tailwind on the rupee?
Good morning, and thanks for having me again. It's certainly quite good, whatever we've seen so far in terms of the earnings season panning out as well. Of the companies that have reported so far, I think on an aggregate basis, we've seen close to 20% growth in top line. Even if you were to strip out, the losses that the oil marketing companies have made, we are looking at about 14-15% PAT growth YOY, which is quite good given the circumstances. Now, the gap between the top line and the bottom line growth, what you're seeing is essentially input cost inflation. So as the West Asia crisis manifested itself into an energy kind of shock, that shock is now percolating into returns as well, and that is why you're seeing that big gap between the top line growth and bottom line growth. A large number of auto companies, for instance, have reported now so far. Each of them, if you look at passenger cars, for instance, they've reported volumes growth in excess of 20%. If you look at two-wheelers, they've reported volumes growth in excess of 15-18%. But each of those companies have reported a big contraction in margins as commodity price inflation now begins to hurt them, despite having taken price hikes. So that is sort of a story that we're seeing everywhere. Other than that, I think banks have largely reported, with the exception of maybe an ICICI Bank. All other banks have reported a sequential decline in NIMs. But the commentary there is at least quite good, that bank after bank is now saying that you've seen the worst of NIM compression, and you'll see an expansion going through here. So we'll see. But I think, right, you likely said, this is quite encouraging. We've seen good momentum in equity markets in the month of July, and hopefully that continues.
Right. Let's look at what Shriram Finance is doing as far as its own fund management business is concerned. Prateekji, a generic view on how your top 4 or 5 companies, apart from banks, have performed in the quarter gone by. Where is value coming in, and where do you see growth and momentum within your own portfolio?
Right. So I think we've already spoken about autos. So autos is a theme that we continue to like. We've seen that since the GST cuts, all these companies reported very good numbers in terms of volume growth, like I said. Going forward again, what will be interesting to note is that most of these companies have done well as well. As you go into Q2, Q3, the commentary around margins is going to be very important. And the fact that now we'll have a large base to work with. So these, good volume numbers that you've seen over the last couple of quarters, they'll start becoming part of the base. So sort of outperforming that will be kind of difficult. So we'll see where the steady state kind of volume growth numbers go. And then, of course, the commentary around margins will be important. The other theme that we continue to like is power, for instance. Most of these power companies have reported very good numbers. Companies that are into power generation or power transmission, EPC companies, wires and cables, companies that are into diesel gensets, for instance. All these companies have also reported very, very good numbers, very healthy order books. So that is again a theme that we continue to like. Consumer has disappointed a little bit. We were overweight on beverages companies, both dairy products and carbonated soft drinks. Those haven't done as well as what we would have liked. And again, the culprit there is sort of erratic kind of weather patterns. Once you see a normalization of these erratic weather patterns, then I do think there is some value there as well, and some latent earnings growth to come by as well.
Okay. What is the view on the deposit, on the FCNR-B deposits as far as the inflows are concerned? Of course, we have 2 whole months left. What is your feeling of liquidity in the money market because of rising FCNR-B? And what is Shriram AMC's own estimate how much money will come in?
I think by most estimates, the deposit numbers is already up to $40 billion. I think by most estimates, they should top close to $100 billion is what we think. If you look at the bank commentary so far, most of them have reported very good credit growth numbers, but what has lagged for them is the deposit growth. So garnering additional FCNR deposits would certainly help ease some of the pressures that they're seeing in terms of lack of deposit growth. So I think all in all, this is a very good, very welcome development for the banks, especially for the ones who have a large sort of overseas presence. If they're able to garner meaningful deposits, so I think that would give them a good runway for continuing the kind of credit growth that we're seeing over the last couple of quarters without really running into credit deposit ratio kind of issues that have plagued them, or at least some of the banks in the last 1 year or so.
Okay, so news coming in 2 days ago is that the Reserve Bank of India has mentioned that FCNRB deposits have come in to the extent of $36.725 billion over the last 2 months, and remember the deadline for this is September 30th. So let's see how these inflows come in, but a very strong view coming in on the rupee after that, and you have a strong rally on Indian markets. Look at how FIIs have turned the corner, and last week the net FII investment in India was to the tune of 7,300 crores, which itself is a very positive development, even if the quantum is small. It's the twist in the outflow which is now converted into inflow, which is a big plus. Let's look at Shriram AMC's portfolio, and you have pharma stocks, in particular Ajanta Pharma, as also the power sector ancillary space on which Prateek has already spoken about. Prateek ji, a view that you might have on the strong tailwinds in pharma, are they likely to continue? Just a week ago, President Donald Trump threatened 100% tariffs on pharma generic exports 1 year and 200% tariffs 2 years. How do you think that framework works?
I think most of the tariffs that he's announced in the past have already been struck down in US courts. So we're less worried about that. Essentially, how we've constructed our portfolio is to largely look at companies that are more domestic focused, companies that have been able to grow their domestic franchise. And if you look at the IPM data for India at least, we've largely concentrated our portfolios to companies that are catering to growing domestic needs, such as the cardiac, such as the opthel kind of part of the portfolio, and dermatology. So I think these are largely the areas that we've sort of positioned our portfolios, the companies that benefit from this. Most companies in India have reported very healthy numbers. So I think that is a space that we want to be continuously invested in. We will look at valuations in that respect. Some of these companies have done very well, and we'll like to sort of take profits as and when these companies have reached profit target prices. But largely, this is a space that we continue to like, and we will be invested here.
I fail to, you have a very strong position in Eternal Limited from the internet space. This is, of course, amongst the top 10 stocks, but nothing much when it comes to new age stocks. Of course, Eternal is now a part of the Nifty 50. You have also another stock from the same business, which is Swiggy. Apart from that, nothing much here. A view on the internet space in India. Why don't you sort of like it as much, probably, or is this a more cautious approach?
Yeah, so I mean, within that space, we like companies where there is an established sort of business model, companies that have proven that they can, grow while keeping unit economics sort of in place, unit economics profitability in place. So that is one space that we continue like. We do think, the Indian consumer, the preferences are changing. These are companies which are taking away market share from the brick and mortar place. And there is obviously a large runway ahead of them in terms of the addressable market. But we're not really chasing names where we don't think there is a path to profitability. We'd like to stick to names which are already profitable. The companies that you named, for instance, have a large presence in quick commerce. They already have an established food delivery business that is throwing off cash, and they're making good use of that to expand their offerings in the quick commerce space. So we've been very selective in terms of what we like, but the ones that we like, we tend to have large overweights there.
Okay. A view that you may want to offer on this dismal performance from banks. Of course, you've mentioned that in your opening remarks. And at the same time, NBFC is doing phenomenally well. Given that both of them are in the same business of lending, what makes NBFCs outperform at a time where their private sector banking counterparts have been found below par?
Right. So what has plagued the banks largely is the cost of deposits, right? Because deposits have been competed away, their NIMs have come under pressure, right? If you look at the larger banking space itself, I think it's doing quite well. It is also probably to do with the obsession with NIMs as well, where investors have sort of punished some of the banks. But I do think they represent good value right now because they've been growing the loan book at a very, very steady clip. The asset quality remains benign. It's just that in this rate cutting cycle, the cost of deposits kind of came under pressure, which wasn't really the case for NBFCs because most of them are not really deposit taking entities anyways. They're largely wholesale funded. So which is what I think you've seen the difference in terms of performance. But if you look at the larger lending space itself, the asset quality for all these NBFCs, banks in general, has been quite benign. And the growth has started to come back over the last couple of quarters. So it's only, I think, a matter of time before the banks also turn the corner and start sort of delivering in terms of performance as well.
Okay, fair point. Anything that catches your fancy in the IT setup? Of course, you have a strong position in a mid-cap IT company, but apart from that, there is a dip in Infosys as well as TCS. How are you watching the IT space after this Q1 earnings?
Yeah, I think if you go by the earnings, there was nothing that was too encouraging. I think most of these companies have continued to report sluggish kind of growth. And the outlook also, they weren't really too buoyant. Most of them have actually cut down their guidance as well. Having said that, I mean, you had some sort of a reversal in the AI trade for a majority of the last month, which is why you've seen the kind of bump in terms of returns, at least in the IT space last month. They've actually had a very good month. I think since COVID, this was probably the best month that IT has had. But that is largely down to the fact that whatever was happening in the world externally. And as that AI kind of trade unwound, at least partially, you had some money gushing into IT, which is why they did quite well. These companies certainly do represent a reasonable kind of value at this moment if you were to take a leap of faith and believe that their business models as they had existed in the past don't get upended with whatever is going on in the world of AI. If you think they will be able to grow reasonably, mid to high single digit growth while keeping margins intact, I think there is a good case to be made that IT should deliver good returns from here. If you're more skeptical, then I think it's still probably too early to get into IT, and they would probably need more clarity on the growth side to sort of increase your exposure to IT.
Okay, fair point. Let's also look at another segment of the market that's doing extremely well, and that, ladies and gentlemen, apart from pharma, is the hospital space. This is the diagnostic zone of Narayan Hirdalia, of Apollo Hospitals, Aster DM, the likes of Lal Path Labs, so on and so forth. It's a popular trade, Prateekji, and valuations, of course, have now been at the upper end of very, strong rally. Now, how are you looking at the hospital space? Are there still some hidden gems here?
So we were invested in hospitals, and particularly what we liked was the mother and child care kind of hospitals, where you have a niche and there is a large sort of untapped market. There are a few companies in this space which are sort of trying to cater and get into pediatrics, and especially this part of the segment that we like. There are companies that are growing their IVF kind of business, which is growing faster than the rest of the healthcare segment. So that is also something that we quite like. And diagnostics, you mentioned, right? There's a structural story there where the established chains are actually taking away market share from the mom and pop diagnostic centers. As India grows more self-aware, there's more awareness around health and preventive healthcare in particular. You would see a decent amount of growth coming to the diagnostic space as well. But you rightly said some of these companies are, trading at very lofty valuations. They're priced to perfection. But as and when we get the opportunity, we will try and increase our weights here because there are structural long-term trends that are affecting this particular sector, and that is one that we would want to be invested for the long term.
Okay, fair point. Let's look at some other segments where Shriram Finance has been avoiding the market, the AMC, my apologies, which is the defense space. Of course, we've had very strong rallies, and you have a presence of one very strong PSU defense counter. But apart from that, Prateekji, nothing catches your fancy. What would be a reason why you don't like defense stocks at this point?
Like you said, we have been invested in one of those, but again, valuations is certainly an issue for us here. Traditionally, these companies have been largely affected by the kind of order flow inflows or order flow news that has come through. And if you look at the last couple of quarters, the order inflow into what was expected has actually sort of been delayed by a quarter or 2 quarters, and that sort of creates unnecessary volatility in some of these names. This is certainly another structural story that one should be invested in. But I think what we don't like is all the volatility and noise around, public announcements of order books and things around that, which is why we think it's probably best to be underweight this sector at this point in time. But in general, we like the story. It's just that the valuations and all the noise around announcements is what we don't like.
Okay. Let's also look at one segment, Prateekji, which is the transformer slash power equipment play, which you also mentioned in your early comments. Have valuations and prices eased a bit, or is this still a trade where you would be rather cautious than optimistic?
Yeah, I mean, there's a lot of reason to be optimistic here. I mean, not just within India, but globally, because of the AI boom. A lot of investment has to go into power generation, transmission, those sort of things, and all of this needs transformers, wires and cables, conductors, those sort of things. So we're very bullish on this space. The kind of correction that we saw because of news flows last month actually gave us an opportunity to add to our positions. And this is again a space that is a multi-decadal kind of opportunity, especially given the kind of capex that we've seen. Company after company has come out in this result season and upped their stated exposure and stated AI-related spends over the course of this year and next year. So I think there is a lot of tailwind that is there for companies, not just in India, but companies that are exporting, power equipment, you said, wires and cables, transformers, those sort of things. So we're fairly bullish, and we were actually fortunate enough to actually, add to our positions last month in the fall.
Okay. We'll pause it here, Prateekji. Thank you so much for your views, and we'll be in touch again. Thank you for joining us, sir.
Thank you for having me.
That, ladies and gentlemen, was the Senior Fund Manager at Shriram AMC. Please continue watching markets. There's lots that's happening today. It's a great day as far as markets are concerned. Almost 24,600 for you on the Nifty. The first day that the market is above 200-day DMA after a gap of 102 sessions. Enjoy the rally.
All eyes are on the introduction of the Foreign Contribution Regulation Amendment Bill in the Parliament on Monday. The proposed amendments seek to tighten oversight of foreign-funded NGOs. This will be done through a new monitoring authority prescribing timelines for the utilization of foreign funds. The aim is to strengthen registration norms and fix accountability on key office bearers. More importantly, if an NGO loses FCRA registration, foreign-funded assets may go to a government authority, or government may even sell those assets. Consequently, NGOs won't be able to use foreign funds thereafter. Union ministers have hailed the bill, calling it a priority, and said that it is under examination after receiving suggestions from MPs.
पिछले बजट सत्र के समय इंट्रोड्यूस हुआ था, उसके बाद कुछ सुझाव आए थे सदस्यों से, तो उसका परीक्षण किया जा रहा है। उसके बाद आपको बताएंगे जब बीएससी में इसकी चर्चा होगी।
सर, एफसीआरए अमेंडमेंट को
कई इंपॉर्टेंट बिल्स हैं,
तो उम्मीद कर सकते हैं कि
बिल्स के बारे में मैं आपको समय समय में सूची दे दूंगा या सूचना दे दूंगा।
The Congress-led opposition calls the bill an executive overreach that endangers civil society.
Who we buy oil from?
This government's idea of bringing every bill is to weaponize the law. Their target is, organizations like NGOs which are not in line with their thought. It could be civil society organizations which are raising issues against the government. So they want to throttle them. They want to weaponize the law.
Is the state set for another showdown in Parliament? Bureau Report, India Today.
Those against will please say no.
Suman, thank you very much for doing this, the first session kicking off this summit, because this is the most difficult, because you have to hopefully start on a very good note. And we want to power this summit through good thoughts, and you are somebody who's been leading India's renewable power revolution, if I may put it that way. It's clearly reached a stage of maturity. But in the broader context, I really want you to begin by explaining to this audience here, and as well as those who are watching us live right now, what is the progress that India has achieved in the near recent past with regard to renewable power, because everything that we see around us tells us that it is an imperative. Give us a sense of where we stand today.
Yeah, thank you, Siddharth. Thank you to BT for inviting me for this session. It's an important question that you've asked, and I can only give you a very positive answer. And that positive answer is actually that we stand at a pretty good point right now. Our renewable energy journey is well on its way right now. As you know, we are in the process of crossing 300 gigawatts of installed renewable capacity, out of which wind and solar account for a large majority, more than 2/3 of that. The target is, we all know, has been 500 gigawatts for a long time, and we have went on our way to achieving that target. Last year, we added 50 gigawatts of renewable capacity, and this year it's probably going to be exceeded as well from that number. Last year, we also overtook the US as the second largest, as the second largest country adding new renewable capacity, and we are now number 2 after China. So I think we are actually very well positioned just in adding new renewable capacity. Of course, and I'm sure you'll talk about that, what are the things that we need to do in addition to that really are the things that we all now need to focus on.
Let's take one more contemporary issue. All of this has been accomplished in I would say difficult circumstances, or you could choose the word to describe the situation. When I say that, it is in terms of our inadequacy of certain raw materials, inadequacy earlier some years ago of a manufacturing based companies like yours have done a yeoman's job in solving that crisis. But the broader geopolitical context, the last 6-8 months have taught us that dependency is bad. How significant a role is renewable power going to play in the near future to reduce that dependency that has been exposed with the West Asia crisis?
It's an interesting question. I think where renewables has now got to is, the numbers that I mentioned earlier, we've done a pretty good job. But now we're at multiple inflection points. Number one inflection point is that renewables is now about 20% of power supply. We know it's intermittent. The grid is already having a difficult job absorbing this power. In the middle of the day, solar is almost 200 gigawatts. The total peak capacity, peak demand is only 270 gigawatts. So even if you back everything else down to the maximum, we still have sometimes surplus power. That's a problem. Similarly, all the solar goes away in the evening. When the demand, the sort of evening peak comes in, and you don't have sufficient power at that time. So we need to start shifting a lot of the daytime supply to the evening to match that. So we need much more storage. So that's the first thing that we have to do, is start installing with every renewable capacity now much more storage. So that's, I think, one thing that we have to do, which is better grid management through a lot more, whether it's pumped hydro, whether it's battery-based storage, right? So that's inflection point number one. The second inflection point is the fact that we have really grown our renewable capacity today mostly through imported equipment.
Yes.
And that is something that we now need to fix in light of all the energy security issues that we are facing. Of course, importing equipment for electricity production is not the same as importing fossil fuels on a daily basis.
Correct.
Because you have to import that on a daily basis, otherwise your cars stop running and so on. Whereas at least if you put up a solar panel, a solar farm, at least it keeps generating power and it's within your boundaries. So it's one less order of dependence, but certainly for future growth there is dependence still. So that's something we have to remove. So we now have to move the supply chain all the way back. We've done some work in that area, but a lot more needs to be done, right, to decrease that dependence that we have right now on imported supply chains. So that's the second dependence that we have to really, or second inflection point that we have to address. The third inflection point in a way is how do we make sure that this power that we're now generating, this electricity that we're generating, now moves into the non-electricity areas and begins to impact the rest of the energy value chain that today electricity does not touch. Electricity accounts for only 20% of energy consumption. 80% we don't touch through renewables today. So how can we start addressing that? Through green fuels. So those are the kinds of things that we now have to work on, which is more green ammonia, more green hydrogen, and start looking at those kinds of products as well.
Elaborate on this point more, because this is a very important point. Just 20% is electricity, the rest. Where do you see the fastest scope for taking renewable into non-electricity areas, as you just mentioned?
So, one of the things that we've discovered is that our dependence is not just on oil in the Middle East, it's also on gas, it's also on fertilizer imports. Most of our fertilizers are imported from the Middle East, either in the form of gas or in the form of actual urea that we are importing from there. That's not a healthy dependence to have, as we now know. So we need to start making those things in India. We can start making green urea by using green hydrogen as a starting point, which we can use to make through through renewables, basically, right? So now those are the kinds of areas that we have to move forward on. Similarly, there are lots of other applications, shipping, for example, sustainable aviation fuel. Those are all areas that we can start addressing now through the green fuel side. Plus, at the same time, we need to now increase electrification of the energy system. Today, as I said, is 20%. In the Western world, it's about 27-28%. China is now crossing 30%. And we need to increase this, and Niti Aayog in its own report of 2070 net zero has said we need to increase the electrification to 40% by 2050 and to 60% by 2070. So the targets are there, but how do we do that? We have to electrify the user industries, which means all cars and two-wheelers on the road and public transportation on the road has to become electric in nature. Then you can start supplying electricity to that. So those are the kinds of things that we have to do. We have to really start working on all the user industries, whether it's transportation, whether it's cement, steel, any heating application in industry. Those are all areas which consume energy and therefore cannot be addressed directly through renewable energy.
What about transportation, particularly in the goods segment, the railways, for example, or for the trucking fleet that really connects India on a daily basis?
Yeah, so those areas have to also get electrified. Today, they are very much at the infancy of it, right? And the issue is that there are lots of other benefits that we get by electrification as well. Obviously, environmental pollution that we all face is another area that gets addressed through doing all of that. So yes, those are all things that we have to address. For example, in steel, you have electric arc furnaces and you have blast furnaces. Blast furnaces use coking coal. Electric arc furnaces don't. They use electricity. Yeah. So now it's very easy to think about, okay, why not just have all electric arc furnaces rather than blast furnaces? I'm not an expert in steel making, so I can't speak to what the advantages or disadvantages are of going one or the other. But I know what the benefits are of electrifying that area. So there are quite a lot of these kinds of issues that we have to start addressing. And now there is a governance inflection point as well. And that governance inflection point is that renewables are so far driven from the Ministry of Renewable Energy with support from the Ministry of Power. Now this is going into a lot of other ministries. And all the other ministries also have to think about how do we start looking at energy consumption in a very different way. And how do we start moving the users, the industries, the consumers into a very different paradigm, and how do we have different vehicles or different equipment and those kinds of things. So there's a lot of work to be done actually.
Since we've got a good sense and really an upbeat picture of what is going on, I want to pick up that point that is asked of industry stalwarts like you, which is the private sector versus the public sector. And in the broader overall power space in India, we know the public sector has also done a phenomenal job over the past decades. In terms of private sector growth and the contribution, what would you say has been the private sector's contribution? And more importantly, going forward, will the private sector actually be the fastest driver of renewable power adoption and change?
I at some level, I would not differentiate between the public sector and the private sector. Ultimately, the public sector also comprises of companies that happen to be owned by the government as opposed to by, let's say, some other kinds of shareholders. A lot of them are also owned by public shareholders as well. So I would say we're all in it together. We all have to collectively work as fast as we can to decarbonize the Indian economy and electrify it as quickly as possible. So, the task is so large, Siddharth, that we need so many tens of hundreds of billions of dollars of investment that whatever we do is not going to be enough. So here, you cannot choose between private sector, public sector, some other sector. Here, everybody has to contribute and has to put their shoulder to the wheel, because this task, look, we are trying to change an economic system that was created over hundreds of years. We are trying to change that within 30-40 years, right? And we're trying to grow at the same time. So that requires a very significant intervention from all of us put together.
Okay, I'm going to ask you a broader consumer question, and this is not to get a news bite out on ethanol from you, but you'll understand the context of the question. One of the issues with regard to ethanol, and several well-meaning people who understand the good intent behind it ask that, okay, if it is being blended, fine, we'll live with that, but what about end prices for the consumer? I am taking that argument and asking you a question about renewable pricing, because a lot of people who use home renewable sources, maybe a small solar panel, talk about their experience that they have reduced their monthly bills. But on a broader industry level, this question about if renewable is good and it is leading to a transformation in the mix, what about consumer end pricing? Is there hope that this could eventually lead to perhaps more affordable power for the mass consumer in India?
I think one thing that is very clear to me is that any large systemic change of the type that we are trying to do right now is not possible unless there's a very strong economic logic to it. And that economic logic has to be valid for the consumers as well as the producers. Because if it's not there, why should anybody adopt it? And the government can only give so much subsidy. Beyond a point, they'll run out of the ability of giving money out to either consumers or producers to keep the cost down. So really, whatever solution we are working on has to be affordable. That is very, very clear. The reason that renewables got to this point, and in the beginning when renewables started, we all know it was very expensive. And then, I hate to say this, but the Chinese invested in massive capacity. That brought the pricing down substantially. That made it economical. And that is really what has led to the mass adoption of renewables that we are now seeing. If you look at most corporates in India, the reason a lot of them are keen to shift to renewable energy, much as I would like to say it is because of the goodness of their hearts towards contributing to climate change and all of that, is really not that. The reality is they're shifting because it is cheaper for them to buy clean energy. Yes. That's why they're doing it. And if it wasn't, then they would not have been doing it, irrespective of whatever push there would have been from the government. So the economic logic has to dictate everything that we do. But the good news there is that renewables is cheaper. Renewables is so much cheaper than coal-based power in India now that even if you install a lot of battery-based solutions to firm up the renewable energy, it is still cheaper than, or at the very worst, equal to coal-based pricing. And of course, coal-based pricing does not include the cost of climate costs and all of that. Plus, coal-based pricing is variable over the years, whereas whatever we give in renewables is fixed for 25 years. It's not inflation linked, it's flat pricing. Yes. So there are lots of advantages in renewable pricing today. And ultimately, the reason that green ammonia, for example, has not taken off so far is because it's more expensive than grey ammonia. Now, if you overlay onto that issues like energy security, then cost goes away as a point. And then the government has to step in and say, you know what, this is now a security issue. And therefore, we will have to provide that extra cost in form of subsidy, or consumers will have to pick it up, or something will have to be done, because you can't compromise on energy security and national security.
So how should the consumer therefore understand this? Because as this example has all taught us that consumers are not able to comprehend, and they are asking questions, why should I suffer a mileage drop, alleged wear and tear, and all of that, most unproven claims mostly, unless you show me some benefit as a consumer. I am putting that for the broader renewable ecosystem also. Show some green light to the consumer at the end of the tunnel.
You know, this is the beauty of our sector, which is that we have one big thing that is going for us right now. And that big thing that is going for us right now is technology. Technology continues to improve. So battery prices that you see today and battery performance and output that then impacts the performance of an electric car from an economic standpoint, that is going to keep improving in the direction of making it better and better for electric vehicles. So if today they are roughly on par, and perhaps they're actually even better than fossil fuel-based vehicles right now, because fossil prices, of course, should be going up, but by the way, the government gives massive subsidies on fossil fuels to consumers.
Exactly.
Right? So if the same subsidies could be given for electric vehicles, perhaps costs would be a lot more competitive. So it's, you know, it's because we live in a society or an economy where a lot of costs are not market linked, it's hard to really compare. And then it becomes a policy choice. Because as I said, the government can easily move those subsidies that they're giving on fossil fuels to giving it for batteries, make the price of electricity and electric vehicles a lot cheaper.
Okay, since you spoke about policy, in the time that we have remaining, I want you to focus on the policy imperatives going forward. Over the last 2 decades, and including in the past decade particularly, we've seen a lot of initiatives. Industry has also grappled with supply chain, it has grappled with COVID, lack of a domestic manufacturing base, so many other technical issues, grid connectivity. So 2 parts. One, what do you think is required from policy to provide a further impetus to the sector? And we will try and end with a future look on the role of AI, since you spoke about technology. But what is required on the policy front, Sumant?
You know, I think that, first of all, let me preface my answer by saying that the government has mostly got it right in our sector. And I think full marks to them for that. It's not been easy to make policy in a situation where there is massive change in pricing, in technology, in the external environment, in climate change, global developments and so on. So within all of that, the government has mostly got it right. What are the things that it needs to really focus on going forward? I think one of the things that is clear based on our, as we were discussing earlier, we need a much more end-to-end green energy ecosystem now. That includes not just the generation of electricity, which is really what we've been focusing on so far, but the user industry side, the supply chain side, and the mineral side as well, and the refining and processing of that mineral, of those minerals as well. And critical deficiency areas like rare earths and permanent magnets and those kinds of things. The government has to take now a holistic view across the entire system, because weakness in any one part of it means that the overall system is not going to come into place. So I think we now need to move from a system of setting targets for one piece of the pie to really looking at this much more holistically. And as I said earlier, there is a governance inflection point, which is that now a lot of this requires a whole of government approach.
Yes.
Because it's cutting across multiple ministries. And while some ministries like ours, MOP, MNRE, etc., are now wised up to how to make policy and what's happening in our sector, some of the other ministries don't have that same expertise and knowledge. So that transfer of technology and knowledge has to happen quickly so that all ministries can get to the same level of understanding on policy making and have the same kind of knowledge base. So I think that's one fundamental thing that needs to happen. The second thing I would say is that we need policy certainty in a lot of areas. That, as always, as you know, has always been an issue that industry looks for, because we obviously make long-term investments, so we need long-term policies.
When I put this question to policymakers, they say, well, you also have to give us the benefit of the learning curve. We are making policy and we learn and we keep adapting. Okay, a couple of final points, and because you spoke about technology, I just want you to reflect on AI and the kind of role it may be having in this sector, because we are seeing transformational impact in many sectors.
I think there are many areas in which AI impacts our sector. Obviously, we all can improve our own personal productivity and efficiency. Companies can become more efficient in how they work, but that, of course, is generic. In our sector, we can improve asset performance through better AI utilization. We generate a lot of data. That data can be analyzed in a better way through AI. I would say those are the primary gains that we can get: asset performance and general productivity enhancement. I think in addition to that, what we actually can, the other big connection is that you can't have AI without energy. And so they are actually linked at the hip in some ways. So we need to start providing a lot more energy to AI so that AI can actually go and grow as it needs to.
Okay, final point. You spoke about earlier at the start about how India is number 2 after China. And I remember talking to someone who had been on a trip to China recently, and he said, if you want to see the electric future, you need to go to China, nowhere else in the world. You know about what is happening there on the electric front across sectors. Do you think there will be a time that we will be standing next to them in terms of this sector and its adoption?
I would hope that would be the case, but I think we have a long road to cover. And it's only, let me say also that it's only vis-a-vis China that we have a long road to cover. I would say that we are pretty much further ahead than most of the other countries in our sector. And see, I think China saw the light maybe 25 years ago and realized that they have this big dependence on fossil fuels, and they decided to go down the electric path, and they've done a huge number of things. We are probably 20 odd years behind them in a lot of these areas. But there is no reason for us not to aspire to catch up. We should try. We should certainly give it our best shot. And if nothing else, we'll certainly be the second most advanced country on electrification. So I think that's also a good position for us to be in. And we can become an exporter of clean tech equipment, clean tech knowledge and know-how to the rest of the world. So I think that is what we should be moving towards.
Before all of you put your hand together for a round of applause for Sumant, I just want to say that how significant it is that in a culture where we pray to the sun, and hundreds of millions of people do that on an everyday basis for thousands of years, for that culture to now be talking about solar power and adopting it is perhaps in the fitness of our great history. Sumant, we spoke about modern technology, but there is ancient wisdom that we can also rely on. Thank you for sharing some wisdom on this sector with our audience here. A round of applause for Sumant.
Thank you. Thank you so much.
New energy era. We're living in an uncertain world, we all know, and while at this time, as the world navigates all these uncertainties, for us in India, the big challenge is how do we meet the rising needs for our energy, as well as build a sustainable, secure future. So I'll start off with you, Shalu, to understand how has the definition of energy security evolved over the last many years in India? And after the recent geopolitical tensions, Ukraine, Russia, West Asia war, what is on top priority for India? How do we define that, and what is on the top agenda?
Thank you. See, I'm a person who spent a lot of time looking at energy access over the past 10, 15 years. And I think that is at the core of how we have looked at energy security in the past. It was more about first bringing electrons and all molecules or biomass, whatever, like clean energy, taking it to millions of people, and then thinking about how do you secure supplies. So access and building infrastructure was at the core of how we define energy security in the past, and of course, expanding the ties. But today, over the past 20 years in particular, India has brought out almost 800 million people out of sheer energy poverty. We have achieved near universal electrification. We are supplying 20 to 22 hours of power supply in rural as well as urban areas on average. And we are constantly aspiring towards uninterrupted 24/7 highest quality of supply, so that we can, that can stimulate industries that require that kind of high quality power supply as well. And therefore, that's on the electricity side. But of course, even on other fuels, oil and gas, we've constantly been able to serve a growing demand. And so going forward, the way we are looking at energy security is a combination of affordability, secure supplies, and an ability to withstand shocks of the kinds that we saw this year. and then we've learned, in the process, and we have managed to diversify sources. Of course, numbers everyone knows, but in the essence, the way we look at energy security, thankfully, it's not like 100% dependence just on our own. So self-reliance is a very layered, word. It's not just about doing everything in India, because that may not be cost competitive, or we may not have all the resources, but it's about, leveraging strategic as well as, tactical partnerships to secure fuel. So I'll pause there and we can continue.
Gaurav, if you could highlight for us, what do you think is the biggest risk right now when it comes to energy security? Is it import dependence? Is it financing? Is it having the right kind of infrastructure? What exactly is it? What would you pin it down to?
Sure. No, thanks. So if we look at the overall energy scenario, not just right now, but also 2 decades hence, there are 2 or 3 key imperatives which emerge. One, of course, hydrocarbons will continue to stay, and the structural import dependence will also be there. So that, of course, will continue to be one of the main vulnerabilities that India has. When it comes to imports, I think infrastructure as well as logistics go hand in hand. In the sense that even for hydrocarbons, do we have enough storage or not to withstand some of the shocks? So that's a very important question to answer. The other important question, of course, is our logistics both on the on-land side, but also on the high seas or offshore side. Is our logistics able to provide us with secure energy supply going forward or not? So I think those are the 2 very critical questions. Everything else essentially can be solved, but these 2 questions need answers, and these 2 questions need actions. When it comes to import dependence, there is, not just the molecules import or energy imports, there is also, on the capital goods side, there is an import dependence. And one would need to structurally work on some of this, but also, acknowledging the fact that this import dependence is here to last, this will continue.
Dr. Palit, on that, where are we at when it comes to our energy import dependence? And how are we already strengthening our domestic manufacturing capabilities to overcome some of it? How long will it really take for us to achieve, in reality, self-reliance when it comes to energy?
Thanks, Shakshi. Let me frame it a little differently, because what I feel is that currently we are debating about fossil versus non-fossil in almost everywhere. It's something that we have to have taken the template from the West. For them, infrastructure is already there, so fossil versus non-fossil makes a sense. For us, I think the actual debate for energy transition should have been electrons over molecules. So electrons wherever possible, molecules wherever necessary. So if you can frame the debate accordingly, irrespective of whether we are using clean energy now or coal, but first electrify. So we are at roughly around 22% of our energy mix is from electrons, and 78% is from molecules. Out of that 78%, a large part of that molecules is imported. Roughly around 15 lakh crore worth of crude oil is imported. That's roughly around 4.5% of our GDP. That's exactly the amount, 4.5% of GDP, that is required every year to be spent on India's energy transition to cleaner fuels. So if we can save there, that money can come into India's green energy transition. Now, how do we do that? First, electrify all end uses wherever possible. Electrify transport. We have already electrified railways. We should try to electrify the heat, industrial heat, and that will take us to currently 17% of our GDP is from manufacturing, 17 to 18%. We should try to take it to around 30-35%. So you need more electricity. If we need more electricity, can renewables provide the supply? If not, we should not bother. If not, let's use coal. And we have to, and there is a myth that we will not use coal. currently we have around 1800 billion units of electricity production in the country. Roughly around 1250 billion unit comes from coal. In 2070, when we are going to reduce the coal-based electricity from 70% to 20%, but the energy demand will increase to 8,500 billion units. So still our coal-based electricity at that time would be around roughly around 1900 billion units, so which means 50% more than now, right? So what do you do? So the last 20% of that energy, nuclear is the solution. So nuclear is actually not competing with renewables. Nuclear is competing with coals because at the same price you can get nuclear, probably, if we can make some arrangements in the sense better financing model and other things. So coal will get displaced by nuclear. The renewables, we need to phase in renewables fast instead of having the narrative of phase down coal. So let's phase in renewables, focus on renewables. So that's how we meet the electricity target. The other part of the molecules is that we use a lot of oil and gas. 50% of our gas is locally produced, rest 50% is not locally produced. So about currently gas consumption is about 67 billion cubic meter, BCM. Out of that, we are importing 50%. CBG, compressed biogas potential in India is about 87 BCM. And if we can convert our agricultural residues, 500 million tons of agricultural residues to compressed biogas, 50% of our total.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is on your screen. Send me your questions here along with your name, location and contact details. Now, in case you are also watching our show live on our YouTube channel, Business Today, then you need to go to the Daily Calls Live and use the comment section there to send me your queries. I'll be happy to address all of those queries as well as we progress on the program as well. Of course, we'll start off with the market momentum that's pretty strong right now. 200 points of a gain on the Nifty. We are nearing 24,600 odd mark and we are hovering near the high point of the session. Across the board, it's great move as far as a big broad market buying that you're looking at. PSU banks, IT are the two sectors which are winning the street with top moving gains that we are looking at. Small caps and mid caps have also picked up in strength. You're looking at FMCG, autos, metals, all of them are actually doing very well in the session. At least 6 to 8 sectors are upwards of over 1% each in terms of the gaining action that we are looking at. On the Nifty, you have names like Shriram Finance now up 4%, Indigo as another gainer with a 4% up move from the IT pack. You have TCS and Infosys doing very well. Tata Motors passenger vehicles and Eicher Motors are also moving higher on the back of the strong, sales figures that we have seen for the month of July as well. Let me now welcome our guest on board. We are joined by Nilesh Jain from Centrum Broking to share with us his fresh take on the markets. Welcome to you, Nilesh. Always a pleasure to have you with us. Your sense on this very strong move in the markets that we've seen right at the start of August. How would you look at this move? Will it be sustainable is the question. Why this question? Because for a long time, last couple of months, we've just remained in one range between 23,800 to 24,300. We are seeing some sharp pull up beyond that, but will it be sustainable is the question. The external environment still very volatile, but the good factor is that the crude oil prices are ebbing lower and we're also looking at positive Q1 results back home as well. Do you think this momentum can sustain?
Very good afternoon, Sakshi. absolutely a very good move that we have seen in last back-to-back 5 consecutive session. So Nifty has continued its higher highs and high low formation, and this has been the 6 consecutive sessions of gain that we have seen. And apart from that, there are multiple developments that we have seen. Number one, Nifty has given a good breakout from a symmetrical triangle pattern. That breakout was forming since last almost 3 months now, and we have reached pre-war level, the war that has escalated between US and Iran. So we have reached pre-war levels about 24,500 levels. Apart from that, the US 10-year bond yield eased off below $100. As you rightly pointed out, Brent crude has also witnessed sharp decline. So, on the back of positive development in the global markets, we are likely to see a follow-up on the upside to continue. So, as far as levels are concerned, we are expecting Nifty to move towards its 200-day moving average that is placed at 24,770, followed by 24,000 in the short run. Maybe in the August series, we may see Nifty moving beyond 25,000 levels as well. Bank Nifty, which is looking strong on the chart, and we are expecting a move towards 58,300 to 58,500 on the upside, and it is trading well above all long-term and short-term moving averages as well. So, given this kind of a formation in the benchmark indices, we are expecting a follow-up on the upside to continue. Even if you see the broader markets, where mid-cap scaled to a fresh record high, small cap index merely few hundred points away from hitting a new record high. So broader market structure is also looking strong. So it's a buy and decline structure across all indices.
Okay, fair point. I hope that this has given an overall understanding to all our viewers as to how the markets are progressing, where is the momentum carrying on, and how does Nilesh eventually expect the markets to pan out from the current levels as well. Let's kickstart by taking some of your questions now. We have a lot of our viewers joining in, Nilesh, on our YouTube. So we'll welcome all of them who are joining in early. We have Hari Krishna, Rishikesh, Satya, Kamlesh, Govind, Aarti, Sai Sharma joining in early. Welcome to everybody who's with us. We'll start taking the first question from our YouTube. This is Govind Narayan, who says, I'm from Haryana. I need a view on HUL for the next 3 to 4 months. And I have a trading perspective. My buying price is 2,320. Can I continue to hold on to this stock right now? Of course, HUL recently was in focus because of its Q1 numbers. We have seen the volume growth is where the question marks came in, and therefore some of the ebbing lower of the stock thereafter. But your sense, over the next 3 to 4 months, do you see this FMCG giant performing well?
Well, Sakshi, I was looking at the chart, the broader chart, and if you can pull up since 2019, the stock has not given any meaningful return. In fact, absolutely flattish in last almost 6-7 years. So, looking at the broader setup, still looks range bound, not expecting any major upside from here. But on the contrary, if you see the other FMCG counters, namely Marico, Nestle, these are the counters that are doing well. And I'll suggest to shift your positions to these counters where we see more potential on the upside. Maybe Britannia can also be considered. So HUL purely from a pullback perspective, if you want to stay put, then keep a stop loss at 2025. That's 2025. And any move beyond 2250 will give a next leg of confirmation on the upside. So as of now, it is looking sideways. Just in case if it breaks above 2250, then only it's a buy.
Okay. Taking the next question, he says, Rishikesh is has the next question for you, who says, Sansera Engineering is the question that he has on Nilesh for 1 month. He wants to know, is it the right time to look at Sansera Engineering for the next 1 month perspective?
Well, looks slightly overbought because if you see on month-on-month basis, this has been the 6 or 7 consecutive months where the counter is forming a high top and high bottom formation. So structure still looks strong, and in next 1 month, quite possible stock may move towards 3,600 or 3,800 on the upside. So yes, there seems to be a potential of further upside from here as well. But in terms of taking a fresh longs, I'll suggest to buy on dip, or maybe in a staggered manner, you can start accumulating this particular counter, keeping a stop loss below 3250. I think the counter has a potential to move beyond 3800 level in the near term.
Okay. Next, we will take a query. This one is from one of our viewers, Raghu, who says, "Hi Sakshi, I have 1.5 lakh rupees that I want to invest in the short term. If Nilesh sir can suggest any good stocks to invest in." Well, the momentum is going up strong, like you pointed out, Nilesh. Is this the right time to do some stock specific picking for investors' portfolios? And if somebody wants to invest even lump sum money, is this the right time to invest in certain stocks?
Well, Sakshi, absolutely. There is a good momentum across all indices. As I mentioned, the benchmark indices are doing well. The broader markets are also leading from the front and trading at all-time high levels. So yes, couple of counters just want to highlight. Number one, Tata Motor commercial vehicle within auto space. If you focus Ashok Leyland, TMCV, and also Bajaj Auto, Eicher Motor, these are the few names that are doing well and looking strong on the chart as well. Apart from that, Motherson, Mindacorp, and also within defense names, Apollo Microsystems. So these are the few names where technical structure looks strong and one can consider taking bets from a short-term trading perspective.
Okay, let's take the next question. This one is Ankur Modi, who says, "Hi Sakshi, hope you're doing well." I'm very well. Thank you so much, Ankur, for writing in. He says, "Thank you so much for guiding us like a mentor as far as daily calls is concerned." Thank you so much, Ankur, for writing in warm words. Yes, our top market experts are true mentors to all our viewers as well, guiding them in just the right manner as to how should one be looking at every market move and the kind of stocks that they are in as well. Your question today is on hotel space, and he wants to know from you, Nilesh, between ITC Hotels and Lemon Tree, which one is offering good opportunity to invest in?
Well, ITC Hotel after recent correction looks good for a pullback. So ITC Hotel, yes, one can consider, but comparatively, Lemon Tree, it has a similar kind of setup. So out of these two, I think ITC Hotel is looking better place, and we can expect a move towards 175 to 180 in the near term. The risk and reward is looking favorable because the stop loss can be placed at 159. Currently, it is at 166. So there is a potential of upside move towards 175 to 180. So one can consider ITC Hotel over Lemon Tree.
Okay, let's take another question. This is Archana. She's from Bengaluru and she says, "This show truly helps me in my investment journey." Thank you, Archana, for writing in. And I hope that this show continues to help you as far as your own investment journey is concerned and help you with better strategies, better ideas of how to go about it too. Your question today is on Ether Industries. We'll try and understand that. On Ether Industries, any special, understanding that you can share with her? She has a long-term, 5-year kind of a perspective that she wants to invest in the stock with. Any suggestion on this one?
Well, Ether Industries right now trading at 1520. Am I correct, Sakshi?
I think so. This is the same one because she's not written any prices. We will go with this one itself.
Because there are two Ether Energy and Ether Industries.
So she's written Ether Industries itself.
Right. So Ether is right now trading at 1520 and constantly in an uptrend. So the structure looks strong. And yes, it can be a good bet from a short to medium term perspective as well as from a position perspective as well. And if somebody is taking a fresh long set current level, then stop loss should be placed at 1350. And I think buy and decline should be the strategy because counter can gradually move towards 1700 to 1900 in the near term. So yes, can be considered in a staggered manner. It can be added from a position perspective. 1800 to 1800 to 2000 kind of levels can be seen in the near term.
Okay, I hope Archana this has helped you out as far as Ether Industries goes as to the kind of levels that Nilesh has helped you with. Vinita has the next question and she says, "Good afternoon to both of you." Good afternoon to you also, Vinita. The question she has is on Deep Industries and she is now looking to re-enter into this stock. Probably she's already booked out profits initially and she wants to now know whether this is the right time for a fresh entry into Deep Industries. What would you advise?
A very good stock, I would say. A multi-year breakout that we have seen in this particular counter from the levels of 590. And right now it is trading in the slightly over territory. So from a risk and reward perspective, looks slightly overbought. It is not favorable. A better approach should be to buy on dip. If you get any dip towards 600, 580, that can be a good entry point. But yes, having said that, the structure and undertone looks strong and has a potential to move towards 660 to 700 in the near term. So one can go long in a staggered manner, keeping a stop loss below 560. The broader structure looks strong.
Okay, let's take the next query. This one is from one of our viewers, Sai Sharma. He says, hi Sakshi, I have HFCL shares in my portfolio at 188. Should I hold or sell? I do have a 1 month view on HFCL.
Well, HCL today we have seen a very strong rebound from the lower levels. Counter reclaimed its 50-day moving average as well. So we can expect a further upside move towards 210 to 220 on the upside. One can stay put, keeping a stop loss below 190. Maybe around 188 can be a good stop loss for this particular counter, and we can expect a gradual uptick towards 210 to 220 in the near term.
Okay, next let's take another question. This one is from one of our viewers, Kamlesh, who says, hi Sakshi and hello Nilesh sir. Sir, please advise on RK Forging. इसे buy करना चाहिए क्या और क्या entry level इसका होना चाहिए?
See, RK Forging में बहुत ही अच्छा breakout हमें देखने को मिल रहा है. In fact, if you see today we are getting most of the queries in from the mid cap and small cap space. If you see the momentum in mid cap and small cap is looking very strong, and that's the reason वहाँ पर काफी अच्छा breakouts majority of these stocks में देखने को मिल रहा है. So RK Forging looks good. इसे ऐड करके चल सकते हैं बिकॉज थोड़ा सा वॉलेटाइल काउंटर है, इसलिए स्टॉप लॉस स्ट्रिक्टली फॉलो करें. 645 के आसपास का सपोर्ट है, वहां पर स्टॉप लॉस लगाएं. काउंटर यहां से 700 प्लस तक के लेवल नियर टर्म में दिखा सकता है.
Okay, let's take the next query. This one is from Satya, who says, hi Sakshi, please help me understand as far as First Source Solutions is concerned for short term. I already have this stock in my portfolio. He's not mentioned the price at which he has First Source Solutions, Nilesh, but he wants to know, is it time to switch to any other stock apart from First Source?
See, IT stocks, we have already seen a very strong momentum across all IT counters. In the July series, IT was the outperformer. In fact, after numbers, we have seen FSL has given good momentum and good breakout as well. So I'll suggest to stay put in this particular counter itself, keeping a trailing stop loss at 310. There are high possibility that counter may move towards 340 to 350 in the near term.
Okay. Fair point. I hope that this has helped you as well. Let's take another question. This one is from Rishikesh, who says, hi, can I buy Urban Company and what is the target that you can advise? Today the stock has shot up over 15%. This is right after the earnings have come in. Some brokerage houses have also penciled in higher targets, and we have seen a very strong surge post Q1 numbers coming in for Urban Company. This is despite the losses that the company has posted. But of course, looking at other parametrics, we are looking at a lot of brokerage houses coming up with higher targets. What's your suggestion on Urban Company, Nilesh?
See, it's not advisable to chase the momentum when the counter is already up 14-15%. So given this kind of a spurt after numbers, there could be possibility that we may see some profit taking. So not advisable to chase the momentum as mentioned. Better strategy would be to wait for some meaningful decline, maybe towards 140, 138. That can be a good entry point. So it's an avoid as of now. Although if somebody is already holding the long position, can ride this rally by keeping a trading stop loss at 142, and the counter has a potential to move towards 155 to 160.
Okay, let's take another query. This one is from Aarti Jain, who says, hi Nilesh sir, I want to know if I can make any fresh investment in Samvardhan Motherson. What could be the entry point and what is the target that you can advise on Samvardhan Motherson?
Well, this particular counter is also on my radar given the fresh breakout that we have seen in Motherson. Right now it's trading at 153, and we have seen a fresh breakout. The counter is likely to move towards 160 to 165 in the near term. So if somebody wants to take a fresh entry, then can be added in two tranches, one maybe at current level or in another tranche. If at all you get any dip towards 148, 146, that can be the second entry point, keeping a stop loss below 143. Motherson looks good for 165 to 170 in the near term.
Okay, we'll take another question. This one is Sumit Lakhar. He says, I'm a regular viewer of your daily calls show. Thank you so much, Sumit, for watching our show regularly. His question is on Tata Steel. And Nilesh, he says, on Friday, I bought this stock at 197 rupees per share. My quantity is 250 shares, and I purchased them with a 6-month time horizon. How would you advise?
Well, metal space is once again back into the action, because if you see metal prices are have started moving up. So Tata Steel, after recent correction, we have seen multiple development. Number one, it has reclaimed its short-term 21 DMA, as well as it is making an attempt to break 200 DMA as well, which is placed at 191. The momentum indicators and oscillators have also given a buy crossover, so the setup looks positive. One can stay put, keeping a stop loss below 180. In the near term, the counter can move towards 205 to 210.
Okay, let's take another query as well from another of our viewers who's joining in on our YouTube. Kaushik Rana, he's from Vadodara in Gujarat. He says, Sir, Muthoot Finance, please help us understand after the sharp fall today, is it a good buy at the current market price? After the earnings, we've seen a sharp fall today, definitely.
Within this particular space, that's the gold financing space. You have two particular counter, Muthoot Finance, Manappuram Finance. If you see, both are moving exactly in the opposite direction. So Muthoot Finance, since last couple of months, in fact, since last 4-5 months, we have seen a constant formation of a lower top and lower bottom. It is trading in the falling channel pattern as well. So structure-wise, the structure is looking weak. Although we may see some bit of a pullback, but unlikely to be a sustainable one. Unless and until if it breaks above 3200, then only one can consider taking a fresh longs. Otherwise, it's an avoid. Avoid taking any contra bet. We may see another leg on the lower side going forward.
Okay, fair point. I hope this has helped you. Let's take another question. This one is from Srikant. He's from Mysore. And he says, I have Hero Motocorp shares, Nilesh, sir. 132 shares. I bought this at 5,777. Should I continue to hold or should I exit?
See, within two-wheeler space, we have seen a very good momentum in last couple of sessions. Hero Motocorp is also looking positive, and if you have already bought it, then stay put, keeping a stop loss below 5,300. Counter can gradually inch closer to 5,600 to 5,700. So the setup is looking positive across all two-wheeler space. One can stay invested.
Okay. Let's take the next question. This one is from Hari, who says, Nilesh sir, can you please advise me on Amara Raja batteries, please? How is this stock looking at the current market price for long term? It is now, I think, Amara Raja Energy as it comes out now.
Right. Give me a moment.
Sure. In fact, for some time, it's not been moving that much, but let's try and understand whether the situation is improving as far as the charts are concerned.
Right, Sakshi. So the counter is still looking sideways, although it is making an attempt to break the important resistance of 950. So just in case, if you see any breakout going forward from the levels of 950, then only it's a buy. Otherwise, you can see this counter moving in a range of 850 to 950 in the near term.
Okay, I hope that this has also advised you well. Taking the next query then, this one is from Sunny, who says, good afternoon Sakshi, good afternoon to you as well. Okay, your name is Sandeep and you're from Hyderabad. And he says, I have a question on Nesco. I have 50 shares of Nesco at 1200. Please advise me whether I should continue to hold on for long term, Nilesh sir.
See, from a longer term perspective, yes, it's a very good bet. But technically, if you see strong support area, that is currently placed at 990. So keeping that as a stop loss in your mind, yes, you can stay put. Counter earlier has gone near about 1500, 1600 levels. So roughly around 50 to 60% kind of uptick you can expect in next 1 or 2 years. So it's a good bet to be into, keeping a stop loss below 980. The setup is looking, as of now, is looking sideways, but yes, positionally looks good.
Okay, let's take the next query, and this one is from one of our viewers, and coming in from Patel, Mr. Patel, who says, I have BHEL shares, 270.
is the price at which I got this. I have 500 shares. What would you advise me?
Well, a very good entry point, I would say. Right now, it's trading at 412. So, I think holding since a long time, the structure still looks strong. So, I'll suggest to keep a trailing stop loss now, which is currently placed at 390. That should be your trailing stop loss. And you can ride this rally maybe up to towards 440, 460 in the near term. Setup looks positive.
Okay, let's take the next question. This one is from Jatin Dave, who says, Nilesh sir, good afternoon. Please help me understand on Reddington what is to be done. 313 is the level at which I bought this stock. 2,000 shares is what I hold. Please suggest me target and stop loss for the next 3 months. Just a couple of days ago, Reddington had shot up substantially post its earnings. Even today, it's up by 6.8%. So after some time of a lull, the stock is back in momentum. Nilesh ji, what would you advise?
A very good move. We have seen recently today the counter has given a fresh breakout as well. So yes, stay put. If you have already bought it, the structure looks strong on the back of a fresh breakout that we have seen. Good part is that volume have started coming back after a long time. So good price and volume breakout. We can expect a move towards 360 to 380 in the near term. Keep a trailing stop loss now at 320 and stay put.
Okay. Any key other stock that comes to your mind, Nilesh ji, before we thank you that you would like to advise our viewers?
Yes, Sakshi, couple of by recommendation. Specifically, the focus is into mid cap and small cap counters. So, first of all, Minda Corp, the counter has given a fresh breakout today. Looks strong on the chart for a follow-up move towards 750, 770 in the near term, keeping a stop loss below 705. It can be bought. Apart from that, we have already discussed about Motherson. Good breakout in this particular counter as well. So, keeping a stop loss below 149. Motherson is also buy for 160 to 165 kind of target on the upside. And another stock that's looking strong is Action Construction Equipment, ACE. So ACE is also looking strong for 1120, 1140 kind of target on the upside. One can keep a stop loss below 1080 and yes, can go long in ACE as well.
Okay, fantastic. Thank you so much, Nilesh, for being with us on the program and for guiding all our viewers there with their queries as well. Always a pleasure to have you with us.
Thank you, Sakshi.
Viewers, we are moving in strong as far as the Nifty is concerned. We are above 24,600 now. There is a smart 223 point of a jump right now. And more market experts, veterans are all getting more bullish on the markets going forward. We've also been seen, remember, the foreign investors which have been on a massive pulling out spree from the Indian markets. Seems like they are also looking at India favorably now. We have heard from Ramdev Agarwal, the chairman and the co-founder of Motilal Oswal Financial Services, as far as a possible shift as far as the inflows are concerned from foreign investors towards Indian equity markets are concerned is what he expects. Let's listen into what he truly had to say.
In last 2 years already we have lost a lot of FPI capital. I mean, they have been completely on the outflow, particularly in this year. Almost the speed is like almost 3.5 lakh what they have sold in 6-7 months. So clearly a lot of capital has left the country, and it was because of many reasons. I mean, domestic valuation, other markets doing very well, AI story not happening in India. So a lot of those things were there, apart from geopolitical. I mean, geopolitical has put pressure on India's forex situation because of the high oil prices and also all of it led to whatever has happened so far. So yes, it's a continuing trend, and we are seeing for last 1 week, in fact we are seeing reversal of trend where FIIs are actually looking at India more favorably. Probably they have oversold. So that's the situation right now. How geopolitical will shape up, that only time will tell. Who knows what's going to happen in Iran, what's going to happen to oil prices. So we will go, I mean, everything will pass, yeah.
All right, you heard from Mr. Ramdev Agarwal talking about how he expects the foreign investors to yet again look at India very favorably now. But let's also welcome another guest on our program now. We have Osho Krishnan joining in, Senior Research Analyst for Technicals and Derivatives at Angel One. Welcome, Osho. Good to have you with us. Look at the strong momentum that we are seeing on Monday afternoon as far as the markets are concerned. 24,600, it's been such a long time since we actually saw those levels sustaining onto the D Street. It's been a very narrow band of a range below 24,300 for the markets for some time now. But what does today's momentum indicate to you? And what would your approach be in this market?
A very good afternoon, Sakshi. Firstly, thank you for having me at the show. Well, yes, today's opening has been very optimistic. It has provided very strong undertones for the market. So I'm expecting that with the kind of a strong momentum and technical breakout we are witnessing on the daily time frame chart, from here onwards, the bullish trend is expected to be on a very robust front because there has been multiple positive developments on the daily time frame chart. Firstly, there has been a sloping trend line breakout. Secondly, there has been a positive crossover between the 20 and 100 exponential moving average. And thirdly, now the put writers are shifting positions on the higher strikes. So I'm expecting that with all positive developments and even the FIIs are also turning quite bullish, or they are now finally infusing capital into Indian equity market. So I'm expecting that there has been multiple positive developments for our market, and all these construes to a very positive development. So from here onwards, I am expecting that for on a positional basis, now Nifty has a target of 25,000. In between, yes, there may be some kind of resistance, maybe some kind of hurdles that can be seen around the 200-day simple moving average, approximately placed around 24,780 kind of a zone. So from here onwards, the trend is very positive. Any dips towards 24,450 to 500 can be seen as a buying opportunity in it.
Okay, fair point. Osho, we'll start taking some questions of our viewers now with you. We have Dr. Sham's question now. We'll take it on that one. He says, I want to know about PPL Pharma. I bought it at 183. What's the outlook on this one? This stock has recently come on the radar of a lot of technical experts. Do you expect any kind of a momentum here?
For PPL Pharma, the overall trend is quite decent. There has been multiple positive developments in the counter as well.
Yeah.
There has been a breakout from the zone of nearly 180, and now the counter has been into a bullish reversal pattern. So overall, I'm expecting in a short-term duration near about 220, 218 is the target that one can expect in the short-term duration. But overall now as the trend has reversed, so any kind of dip, any kind of profit booking towards 185, 190 can also be seen as buying opportunity. So one should stay intact with their long positions in the account.
Okay, I hope that this has helped you. Let's take another question. This one is from Anshu Sodi, who says, Hi Sakshi, good afternoon. Hope you're doing well. I'm very well. Thank you so much, Anshu. He says, I want to know from Osho sir on reviewing one of the stocks that I have invested in, and that is HiRect. I have 50 shares at 1332. I need a target and stop loss. First, let me pull up the stock that you're talking about. HiRect Limited. 1346 is the current price. Today the stock is up by almost 0.5%. Last 5 days it moved up by 3.5%, and last 1 month about 23% of a move. But substantial move over the last 6 months has been seen on HiRect Limited. It has doubled investors' money in just the last 6 months. And any suggestion on this one? Very small company, out of the visible range, but it has done well.
See, overall, Hind Rectifier has been into a very strong trajectory. In the whole year, it has now surged approximately 80%. So overall, the technical setup is quite on the overbought front, but looking at the momentum, the counter is looking quite positive. So I'm expecting that with the kind of breakout, it may seem above 1360, 1365 odd levels. There onwards, we can see a flat pattern breakout in the counter for another 250 points of movement on the higher end. So near about 1600 should be the target from short to medium term perspective. But again, that one should definitely keep a trailing stop loss because there has been very vertical and very strong movement. So some kind of profit booking can be seen. So for short term duration, 1245 is the stop loss that will be advisable. On the higher end, 1600 is the expected target for the count.
1600 and 1245. Those are the targets and stop losses that you should definitely look at as far as Hind rectifiers is concerned. We'll take the next question. This one is from Varun Parekh. He's from Ahmedabad and he says, आज Inox India का रिजल्ट आना है, ये शेयर कैसा लगता है और इस पर क्या आउटलुक है? Inox India के अगर आप चार्ट पैटर्न को देखें तो क्या सजेस्ट कर सकते हैं ओशो? क्या कुछ अपवर्ड मोमेंटम नज़र आ रहा है? ऑफ कोर्स रिजल्ट्स के बाद तो पता चलेगा ही कि रिजल्ट्स के ऊपर क्या रिएक्शन आता है, बट अभी करंटली आपको कैसा लगता है ये शेयर?
टेक्निकली अगर देखें तो एक नेगेटिव डाइवर्जेंस है काउंटर में, दैट मींस प्राइस एक्शंस पॉजिटिव ट्रेंड में मूव कर रहे हैं, बट टेक्निकल पैरामीटर्स एक लोअर हाइज लोअर लोज के फॉर्मेशन में मूव कर रहे हैं, जो कि एक नेगेटिव डाइवर्जेंस शोकेस कर रहा है. सो मुझे लगता है 1800 इसका काफी क्रूशियल सपोर्ट जोन है. इन केस 1800 के नीचे अगर काउंटर स्लिप करता है तो यहाँ से प्रॉफिट बुकिंग काफी स्ट्रांग देखने को मिल सकती है, बिकॉज रिसेंटली एक अच्छा मोमेंटम के बाद कंसोलिडेशन जोन में है काउंटर. सो 1800 का स्ट्रिक्ट स्टॉप लॉस मेंटेन करना चाहिए. हायर लेवल्स पे 2020 एक काफी स्ट्रांग रेजिस्टेंस है, तो जब तक 2020 के ऊपर सस्टेनेबल मूव नहीं दिखाता है तब तक के लिए इसमें लॉन्ग मूवमेंट करेंटली मुझे लगता है कि अवॉइड करना चाहिए, बट अगर पोजीशंस हैं तो होल्ड करें 1800 के स्टॉप लॉस.
ठीक है, आज जो रिजल्ट्स आएंगे उसमें आप याद रखें कि जब Q1 एंटर ही किया था कंपनी ने तो एक स्ट्रॉन्ग ऑर्डर बैकवर्ड के साथ किया था 1500 करोड़ के ऊपर की, और खासतौर पर रिसेंटली जो 939 करोड़ के कंपनी को ऑर्डर भी मिले थे. अगर हम कंपनी के ओवरऑल एनुअल गाइडेंस और मार्जिन्स की बात करें तो कंपनी ने पहले जो बताया हुआ है कि एनुअल रेवेन्यू ग्रोथ जो गाइडेंस है 18 से 20% और लॉन्ग टर्म एबिडा मार्जिन का जो टारगेट है 21 से 24%, इसको आप ध्यान में रख सकते हैं जब रिजल्ट्स आएंगे. एक्सपोर्ट्स कितना कंपनी का बिजनेस को कंट्रीब्यूट कर रहा है ये भी आपके लिए देखना ज़रूरी होगा. ऑफ कोर्स रिजल्ट्स आने के बाद हम आपके साथ और डिटेल्स शेयर कर पाएंगे. Next, let's move forward and take another question. This one is from one of our viewers, Sai from Hyderabad. ये ग्रीव्स कॉटन के बारे में आपसे पूछना चाह रहे हैं. 262 की इनकी बाइंग है लॉन्ग टर्म के लिए, 3 से 5 साल के लिए भी होल्ड कर सकते हैं. पूछना चाहते हैं व्हाट इज द एडवाइस ऑन ग्रीव्स कॉटन?
ग्रीव्स कॉटन में काफी स्ट्रांग रिकवरी देखने को मिली है रिसेंटली. इफ वी सी तो 130 140 से एक स्ट्रांग एंड वर्टिकल रैली आई है काउंटर में, एंड मुझे लगता है जिस हिसाब का ब्रेकआउट है 220 एक काफी कंफर्टेबल जोन है. जब तक इसके ऊपर रहता है काउंटर एक कंफर्टेबल जोन में ट्रेड करते हुए नजर आएगा. इमीडिएट बेसिस पे इसका पहला पड़ाव है नियर अबाउट 270-75 के आसपास. इसके ऊपर निकलने के बाद ही यहाँ पे मोमेंटम कंटिन्यू हो सकता है. तो यहाँ पे हमें ध्यान रखना पड़ेगा 220-270 के जोन के आसपास मूवमेंट रहे. इनकेस 275 के ऊपर ब्रेक थ्रू करता है तो और अच्छी रैली देखने को मिल सकती है.
Okay, let's take Shanta's question next, who says, Osho sir, can you please advise how is Bellrise Industries looking now and what is the next target going to be for Bellrise? Recently listed stock which had of course a stellar run up post the IPO also. Your suggestion on the limited charts that you have, any indication for a further up move?
See, overall this counter has been into a very strong secular uptrend. There has been no sign of profit booking or correction till now in the counter. So overall the technical setup is very robust. The counter is taking support from the 50-day exponential moving average, and from there onwards we are witnessing a very decent bounce. So in the short term period I am expecting 248 250 to be seen as the first target. If it breaches the zone of 250 on a sustainable manner, then another 12 point of rally, that means 262 will be the next potential target for the counter. So there should be a short term view in the counter because there has been strong momentum, and longer term duration is not very much convenient on the technical front. So better to trail profits till the time the momentum persists in the counter.
Okay, let's take another query, and this one is from Rishikesh, who says, hi Sakshi, can you help me with LNT? Can I buy this stock for 2 months?
For 2 months, LNT in general, these heavyweight counters might not provide that much of ROI in shorter term duration. So it is always advisable to invest from a medium term point of view in LNT. But currently on the technical front, no doubt the counter is looking very positive, and I'm expecting near about 4200, 4250 to be seen as the first target in a very short term duration. If there will be any breakthrough above 4250, that will be a sloping trend line breakout. Then from there onwards, we can see further momentum to be carried in the counter. But for now, 4250 is the target that I am expecting in the short term duration.
Okay. Sandeep asks you if you could share your view on BEL for the next 2 to 3 months right now.
Again, BEL is a very fantastic counter. It has always been into a very strong momentum. Recently, in the recent 2 or 3 months, the counter has not performed really well. There has been some kind of a strong consolidation. But at present, also, the counter is at a very strong support zone. So I'm expecting 390, 385 is still has a very strong support levels for the counter. On the higher end, not very much optimistic on the target. 422, 425 is the first and intermediate target for the counter. If there will be any breakthrough above 425, then we might see further momentum coming back in the counter towards 455 to 60 as next potential target from medium term perspective.
Okay, let's take the next question. This one is from Rohit Jain, who says, good afternoon, Sakshi. Can you please help me with a view on Aarti Industries from Osho, sir? I have got this stock at 720 in my portfolio.
720 is quite a very higher range for the counter, but no doubt in the recent period, the counter is now forming a rounding bottom formation. So that means there is a potential of bullish reversal in the counter. Now the counter is sustaining above the longer term duration EMA. So I'm expecting that in the coming period, the counter can see very decisive, decent upward movement. On a higher end, 510, 515 is the first and intermediate target for a short term duration. If there will be any sustainable move beyond 515, then we can see the rally to continue towards 620, 640 as the next potential target for the counter.
Okay, Osho, any key stock ideas from your own end before we thank you on the program?
Yes, one counter is looking very strong on the technical front. Uno Minda has witnessed a very strong double bottom breakout, has surged above the 200-day simple moving average and is having a very strong target of nearly 1280 as first target, 1340 as the next target from short-term duration. So this counter can be seen as buying opportunity. On the lower side, it will be advisable to keep a stop loss of 1150.
All right. Okay. Thank you so much, then, Osho, for being with us on the program. Always a pleasure to host you with us on the program as well. All right, viewers, we're going to be wrapping up the Daily Calls edition right here. But before we thank you, remember that you can always look at grabbing the latest edition of the Business Today magazine, which is now out on the stands. Remember, this is the new billionaires that we are going to be highlighting for you in this new edition, and how the founders of these 9 next generation companies are building tomorrow's businesses is something that you will get to see, from Prateek Maheshwari's Physics Wala to Harshal Mathur's Razorpay and Ruchi Kalra of Business. All of these companies are leading the way as to how they are looking at the second coming, and much more coming in from these next gen entrepreneurs as well. So a lot for you to catch up on. Do go out there and grab your copies. In case you cannot go out anywhere, you can definitely order your next edition of the Business Today magazine on Blinkit as well.
I think no conference today can be complete without, of course, talking about the digital economy. So even when we're discussing infrastructure today, we have to really take a closer look at how the digital economy is going to be a part of that and integrated in that. So let me kick off with you, Anku, and understand how we are placed currently and where you think we're headed in the next 5 years.
So I think overall, if you see the ecosystem building around us, it's very, very exciting time. And I represent MediaTek, which is a global fabless semiconductor company. And we design chipsets for verticals like smartphones, smart TVs, and all that, which is powering the digital for the end users. And of course, recently we also got into automotive and data center itself. So this digital infrastructure, I feel, is a very strategic requirement for the country. And also, if you look at sovereignty and those kind of factors, so the need is absolutely there. And recently, I think one of the things which have happened in the value chain of the digital infrastructure is that one key component is about the semicon manufacturing ecosystem. So because I am from that industry, so I would like to touch upon that. So although we are fabless, we design chipsets, but then the manufacturing also is a very important aspect. And that's where ISM 1.0 and ISM 2.0 have done a great, ISM 2.0 was just announced a few days ago. And overall, the intent is to have, India's own manufacturing ecosystem for chipsets and ATMP, OSAT, and also bringing in other parts of the value chain, like chemicals, gases. I think everything is, it's all encompassing in that sense. So this is going to be an important component. It's something which started very recently. And I think over the next few years, this is going to play a big role in providing the, taking the next step. Because, already we have, for the digital infrastructure, we have Jandhan, Aadhaar, and, smartphone penetration, 5G. I think all those are components which have already happened in the last 10 years or so. But now, to go to the next level of becoming indigenous, and that's where we are.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our earnings special edition where our focus is on Park Medi World after its Q1 numbers. The healthcare company has announced its standalone Q1 numbers as well as consolidated numbers. On the standalone basis, we've seen the quarterly revenue stand at 475 crores, logging in a 19% year-on-year growth. We've also seen the company's quarterly EBITDA of around 126 crores. That's a jump of 20% year-on-year. The EBITDA margins have also come in at 26.5%. That's an expansion of 20 basis points. The company's net profit stands at 88.6 crores, recording a 35% year-on-year growth, and the net profit margin is also seen an expansion of about 220 basis points and coming at 18.6 odd percent as well. Let's now get speaking with the top management of the company to give us an understanding of the growth drivers as far as Q1 is concerned and the outlook for the rest of financial year as well. Let's welcome Dr. Sanjay Sharma, the Group CEO and whole-time director of Park Medi World. Welcome to you, Dr. Sharma, and thank you so much for taking the time out. Strong start for you on FY27. We've also seen the stock prices inch up higher to near record high levels as well. Fourth consecutive run-up for the stock price of Park Medi World. We've seen I've read out some of the numbers that has seen across the parameters you've pointed out as far as the jump is concerned on top line, bottom line, and even on your margins as well. If you could help our viewers understand what were the key drivers behind this performance and how sustainable is this growth going to be for the rest of FY27, sir?
Firstly, thank you so much for the invite, Sakshi. And yes, we have delivered the Q1 on a very strong note, and it gives me great pleasure to inform you and your viewers that we have done well and we'll be continuing to do so well. The strong drivers which have led to this largely has been our exponential growth. One, we have added about from year-on basis, we have added about 960 bed from last quarter to this year quarter. So that is again one of the good growth drivers. The second growth driver has been largely our high-end super specialty and tertiary quaternary product mix, which has changed the product mix of high-end super specialty from 57% to 62%. And going forward, it will also be getting better. The introduction of Da Vinci robots by itself has led to this higher increment towards the specialized products. and that has also led to an increase in the ARPOB of about 12%. The other thing is this that the rate hike of CGHS, which the revision which happened in October 2025, the partial impact of that has been started coming in from Q1 onwards. So that has also been one of the contributors in this.
Also wanted to understand, as far as your occupancy is concerned, we see this decline from 68% to 56%. Is it largely due to the addition of the new beds that you just pointed out? And if you could help us understand, how quickly do you expect the newly commissioned hospitals to also ramp up, and by when should occupancy return to your historical levels?
Yes, your point is right that the occupancy has come down from 68% to 56%, and it has been largely because of this 1,000 beds, to be precise, 960 beds addition which we have done. In fact, out of this, Agra, which was launched, 360 bed was in February 2026, and Panchkula 350 bed was launched on 10th of April. So that will start delivering very soon. And I believe that going forward, the occupancy would come on track, but we would be still growing exponentially, and the bed addition and the hospital addition will continue to be so. But we look at an occupancy of about 65% on an average, which will come to.
Okay. Sir, if you could help us understand, how is your ARPOB looking like right now? That's the average revenue per occupied bed. And is that a metric that is something you track very closely?
ARPOB is not the single denominator in making our venture profitable, one. But the ARPOB has grown about 12% from 27 and a half. It has grown to about 30,440, 450. So it's been a 12% surge which has happened, and it is largely because of the high-end product mix, introduction of minimal invasive surgeries in larger way, robotics and others, and also with regard to the CGHS rate revision, which has started coming in effective. And we continue to feel that going forward also on a yearly basis, the ARPOB should have a trend of incremental rise about 10 to 12%. Though we'll still be affordable segment, because the nearest which I can see is about 80,000 plus. So we are less than half, and the affordability segment we continue to be in.
Fair point. Sir, since you are talking about all of these newly commissioned hospitals of yours, Panchkula, you've acquired Rudrapur, and you've also announced Meher Hospital in Zirakpur. You're expanding your presence in Gurugram as well. Give us an understanding of what's driving this aggressive inorganic expansion, and how do you identify these acquisition targets? What's your overall understanding of by when will they start to meaningfully contribute to your top line, sir?
See, firstly, we are a debt-free company. We hardly have any term debt with us, and we have 300 crores in our FD, and the current account also we have about 40-50 crores. So we are a cash-rich company, and most of these acquisitions, inorganic or organic, are happening through internal accrual. Going forward till FY28, we feel that no major external debt would be required, and largely we'll be able to do it from the internal accrual. One. The second part is this, that any institute or a hospital which matches our vision of providing high quality multi-super speciality at an affordable cost, if it matches and it is in sync with our vision, then we go ahead after doing the due diligence, and if the metrics are in line with ours, then we go ahead for the inorganic acquisition. Now, in this financial year, we would be adding, we are in the process of adding about 1,130 beds, out of which we have already launched on 2nd of August Rudrapur, which is a 330 bedded facility. It is our 17th hospital and 6th state where we will be operating, and that takes our tally to 4,290. Our target, identified target this financial year is 4,740. So we have more 450 bed addition which are already in the pipeline and in process. Next financial year, we'll be adding about 1,000 beds, FY 27-28. And by March 28, our identified tally would go to 5,740 beds in total.
Okay. So, when we talk about, your tri-city approach towards Panchkula, Mohali, now Zirakpur, you're building a significant presence there. Give us an understanding of what kind of market share opportunity do you see here, and also going forward from here, what's your own plan when it comes to the tri-city?
We had acquired Radiation Hospital, which is 300-bedded hospital in Mohali, and which has been doing extremely well at about 85% occupancy. And the requirement is to increase the beds, so we'll be adding 150 beds more out there. Panchkula is a greenfield project which we launched on 10th of April, which has added 350 bed, which is also uh, doing pretty well currently and has taken a good start. And with this, we'll be 800 bed. The new acquisition which we are looking at is in Zirakpur, which is again in the territory of Tri-City itself. And it is most of the surrounding areas, it is are the feeders. It is a 150 plus bedded facility. And we feel that with this, our tally in the Tri-City will go to 950 beds. Now, why we are consolidating here and we are the largest player in the Tri-City is because a lot of North India, including Jammu and Kashmir, Himachal Pradesh, Upper Uttar Pradesh, different hilly regions of Uttarakhand, they all come down first to the Tri-City and then move on to Delhi. And it turns out to be expensive for them with regard to boarding, lodging, and treatment and other things. So we are hoping that it's a one-stop area, the Tri-City, in which all major treatments, high-end super specialty treatments can be provided in Tri-City, which will be far more affordable and with the best of results. So this is the reason in consolidating in Tri-City.
Okay. When it comes to Gurugram, how much unmet demand are you seeing here, and how quickly do you expect additional capacities to get utilized there too?
See, currently in Gurugram, we have 303 hospitals, and the console bed strength is roughly about 700. And we are already running 85% occupancy.
Yeah.
And in Palam, we are starting one more 100-bedded Park Platinum, which is just adjacent to our Palam facility, which is already 225-bedded facility. And the regular requirement of the room not being available was the reason which was a driving force. This Park Platinum is going to be single room 100 beds, which we are looking at launching for high-end tertiary and quaternary products.
Okay. Despite commissioning your new hospital, sir, you have managed to expand your EBITDA margins and net profit margins as well. So, as newer facilities further mature and occupancy improves there, will there be further scope to expand your margins further?
Yeah, the expansion will keep on happening. So this will be a balancing act in our operational efficiency and with regard to the EBITDA and PAT. But we feel that we will be able to, for another 10, 20 years, we feel that we will be able to maintain the EBITDA between 26 to 27% and PAT between 16 to 17%. So ongoing also, we feel that this is the area. And there is a huge TAM. There is about 90% of population which is looking at high quality, affordable healthcare. And in a structured format to this scale, I don't see any major competition coming in. So requirement is huge.
Right.
So,
yeah.
Please.
So also, like you rightly pointed out, that you also have negligible debt and around 3,000 crores in fixed deposits as well. Does it give you the flexibility to continue to pursue more acquisitions, and should investors expect the pace of expansion to continue? And if you could help us understand, what is the M&A pipeline going to be looking like for the rest of FY 27?
See, the fixed deposit is around 300 plus crores, not 3,000.
Okay.
So, and we have about 40-50 crores in the current account. So that is the kind, and we are a cash-rich company, and generally it has been happening that whatever has been the total revenue clocked last year, the cash accrual has been similar around that in the next year, so in a growth path. And we feel that as and when the opportunity arises, also besides that, this is the only healthcare company where the promoters hold 83% of shareholding. So we have a margin here also. And being debt-free company, we have a large leverage to take further debt also. So equity dilution, debt, other things. If a large chain or any other which is in our line of vision, then we'll definitely like to go for it. And then we can go ahead for debt also.
Okay. So, sir, if you give us a long-term vision, say next 3 years to 5 years, maybe say by FY28 or FY30, what is the kind of bed capacity that you expect to see? And what's your long-term vision on your overall growth in terms of top line as well, sir?
See, top line would be difficult to, but what I see the vision is this, that by FY28, we have already identified the bed capacity we would be reaching at 5,740, and which I feel with the newer opportunities coming in, we'll be easily going surpassing that number. But our vision is to add nearly 2,000 beds per annum and take the tally to about 25,000 beds within coming 10 years.
Okay. So also give us an understanding, say by FY28, in your overall revenues, what is the revenue mix you see both geographically and in terms of your top performing hospitals as well?
See, we see that if I give approximate numbers, then we see that the revenue top line should be around say roughly 2,500 to 2,600 CR, and EBITDA will be maintaining in the range of 26 to 27%, as we have been doing it in past also historically, and PAT will be between the 16 and 17%. So that will be our growth trajectory throughout. And we don't see much change happening in that trajectory because we have been already on track in past. With regard to geographical mix, there has been our forte has been in acquisition, where we have been masters in turnaround of sick unit. Though Rudrapur and Meher are already running hospitals, profitable ventures, not to that extent, but we will definitely, with our vision and with our high operational efficiency, we'll be making them higher profitability, and the EBITDA will be in the range of what the profile we have been giving till now. So this is what we feel. The product mix on the higher super specialty and tertiary areas would be constantly increasing as we are going for minimal invasive lasers, robotic surgeries, and the requirement which is coming in. So we will be adding more products, and it will be probably coming across in most of the units where we would be providing this facility. So that will also definitely help in providing A to Z, most of the treatments under one roof only in each unit.
All right. Okay. Well, I wish you all the very best, sir, for the upcoming quarters as well. And thank you so much for speaking to our viewers through this platform and explaining your earnings and the outlook also going forward. Thank you so much. I appreciate your time.
Thank you so much, ma'am. Thank you very much.
All right, viewers, we'll wrap it up on that note, this exclusive chat with the management of Park Medi World. I hope you've understood the kind of focus that the company has in terms of increasing its capacity and, of course, continuing with its M&A move. They are confident of continuing to build on to the growth that they have managed to so far have as far as Q1 FY27 is concerned. Stay tuned with us. Much more coming up on the markets right ahead.
In this session, we are focusing on a topic that all of us grapple with every day, which is our cities. And the title of the session is Fixing the Commute. Now, this might sound very simple, but it is actually a very, very important thing. Vinayaka, I was just reading up something before this session that a survey of professionals in Bengaluru, a vast majority of them have said that they would change jobs just for the sake of a short commute to their workplace. And Vinayak, you spent a lifetime in infrastructure. You are now the founder and managing trustee of the Infra Vision Foundation. So why don't you give us your vision of how our cities can be more livable?
Thank you very much. Great to be with you on a panel again. And this is a subject that touches each one of us. There's no theory in this. I'm sure all of you after the session today, whoever's going home, would like to reach at least half an hour or 45 minutes before whatever you think is the targeted time. So it's a genuine problem, and it's also proving to be an intractable problem. So what I'm requesting you to do is, I just tried to put some thoughts together in a very quick 5-minute presentation, after which whatever balance time is there, I'd be happy to be led by your questions. I'll stand there. And
you can use that mic there. Use that mic.
So I am not going to spend too much time reading out slides because I presume all of you read English here. So I'll just tell you the highlight of the conclusion of the slide. Just grasp the English. And what this slide basically tells you that in India today, in urban India, we are not short of assets. There's enough happening in terms of, metro to light rail to various kinds of, to Uber, this, that. We're not short of assets. There are enough musicians. There are the violinists, the saxophonists, the trombone, the drummers, but what we lack is orchestration. Are they being orchestrated together? That is the problem. Next slide. The purpose of this slide is to say that the system works only if the totality of the journey works. The planning is done by people who are far from the daily commuter. The delivery is organized by one specific agency, either it's a metro rail corporation or it's a state bus transport organization. But usage is end-to-end. And look at the number of people who are involved in this. Does the commuter's perspective matter? So the point that I'm making is that the system works only if the totality of the journey works. Thanks. Okay, I need to check. Point to the next slide. So the user is missing, normally in every planning process. One journey through the city. Take a city like Ahmedabad. Try going from Heartland Ahmedabad to Gift City, and you'll know how non-seamless the communication is. Try going from Jogeshwari to Vikhroli Link Road, in spite of all the assets in place, and try going from Dwarka to Noida, or even Greater Noida, or the new airport today, Jewar. Try and catch a flight from Jewar Airport, and you'll know what we're talking about. So a commuter experiences the city as one continuous system, even when the institutions operate separately. The challenge is no longer moving more people. Somewhere we say ridership has increased by 10%. Ridership of Delhi Metro is now 40% or whatever. It's not moving more people. It is enabling the system to function coherently as one seamless system under pressure. Why do every time we talk of reducing private cars, why do commuters default to private transport? If you see a simple journey in Bombay from Oberoi Splendor, JVLR, right up to Cuff Parade. If you have your car now with the coastal road, you will reach in 35 minutes. You take a ride-hailing app and you will reach with another $250 of your purse, you will reach in 1.5 hours. Try taking public transport and see the number of interchanges. Just see the last point. How much time is it taking? 90 minutes. Vis-a-vis having a car that's 35. Of course, and it's not necessarily cheaper. See the number of interchanges. I mean, how do you expect a Bombay commuter, and this repeats itself in city after city in India, how do you expect a commuter to traverse so many nodes to reach his or her end destination? So my point that I'm constantly repeating is it is not the absence of built-up infrastructure. It is the discontinuity. It is the lack of seamlessness. So that is the core problem. Why does it happen typically? The point of this slide is to just emphasize that fragmentation grows gradually before becoming systemic. The asset is heavy build out. We have got a 1 lakh crore loan from Japan and we are building whatever, Delhi Metro, bullet train, whatever. So it's an asset heavy build out. Then comes the parallel systems that is evolving independently. Oh, by the way, we also have a Meerut RRTS. And by the way, we are also going to have electric vehicles under DTC. And by the way, we are also going to have 5 more nodes in National Capital Region of RRTS. Then there is no coordination mechanisms emerge after suddenly people realize that none of these systems are talking to each other. And then as the systems and the assets get set, operational integration becomes harder over time. That again is what this slide tells you, that the fragmentation grows gradually even before becoming systemic. So what is the inflection point? The difference lies not today. India is still obsessed with the quantity of infrastructure. We are putting in so many $1 billion. We are putting in so many lakh rupees. So-and-so city has announced a new metro. So-and-so city has announced a coastal road. This difference lies not in how much is being built. The good work is being done. How well is the system designed to work together? Integration, seamless integration. The purpose of this slide is to just coordinate the is to just convey the message that fragmentation is often experienced not institutionally. Fragmentation is experienced by people like you and me who are not traveling by metro, whereas you will go to London and travel by metro. You will go to London and take the big red lovely bus. You'll go to New York, you'll go to Singapore, you will be happy to use the public. So the problem is that the fragmentation, the institution builders don't seem to see. I don't know how they travel. As long as they're in government jobs, I suspect they got lal battis or whatever they have. But it is, the fragmentation is felt by journeys, people who are undertaking journeys. So what does this require? Please read the English on the slide. I'll read the conclusion. These conditions do not emerge naturally. Institutions are not just suddenly going to wake up one morning and say, guys, let's meet over a coffee and, unite our institutions and start working seamlessly from tomorrow. They have to be institutions have to be created, and they must be forced deliberately and early in the game to work with each other in a very coordinated manner. Just like London has moved from Oyster card to just, the TfL, travel for London, you just tap your credit card, finished. Even Oyster is gone. And the seamlessness of New York, the seamlessness of Singapore is there because they have been deliberately created. They haven't kind of just emerged with the morning sunlight. Next point. What is therefore the opportunity? The next shift from building infrastructure to enabling journeys that work seamlessly across the system. I'm repeating this point time and time again because I'm going to come to my concluding slide. Why does this matter for leadership? Integrated mobility systems are becoming central to broader urban rejuvenation and the vision of Viksit Bharat. Somebody just said, before at the introduction, Siddharth, you said, people are going to now leave their jobs in Bangalore, saying impossible hai, ghar se office pahunchne ka. I've been going to a tier 2, tier 3 city, right? A lot of people will not come back to India. People are saying, I need to find a workplace I need to find a home near my workplace. It is becoming extreme. So better utilization of existing infrastructure, reliable journeys, stronger public adaptation, lower congestion costs. There is a report which has not been quoted by Business Today, and I think you should do that. When you're putting all this together, is that there is a very recent report, I'm forgetting by whom, probably NCAER, in the household survey, that the average cost of an urban consumer in India, the average cost of day-to-day transportation has gone up from 9% of the household budget to 17% of the household budget. Now, where is this going to take us to? Will it become 25% of the household budget that you'll start eating less and traveling 3 hours more? So it's getting into ridiculous proportions. So the integrated mobility systems are becoming central to broader urban rejuvenation and the vision of a Viksit Bharat. Next. Now, this is my last slide, so that I have enough time for you. Okay. What is it that is required? It is not that the Indian policymakers, the politicians, the bureaucrats, our esteemed journalists, it is not that we don't know what is required. In 2006, let me remind you, gentlemen, we are sitting in 2026. 20 years ago, if this presentation was made, we would be saying that the Ministry of Housing and Urban Affairs recommends a unified metropolitan transport authority. It's called UMTA in short. For every city with a population above 1 million. Every city with a population of 1 million should have a unified metropolitan transport authority. 53 such cities exist as per the 2011. So it was thought through. The problem was known. Nobody did anything about it. And therefore, this was, in a sense, passed as a policy in Parliament. In 2017, the metro rail policy, the Union Cabinet's new metro rail policy makes central assistance for metro projects conditional. Remember, all metro projects in this country, other than Hyderabad Metro, which was promoted by L&T, every metro project in this country is by and large funded by 50% central government and 50% state government, with a lot of institutional loans thrown in, but I'm only talking about equity. The Union Cabinet's policy said that assistance for metro projects is conditional on the state government commitment to operationalize a UMTA responsible for all forms of urban transport, an overarching authority. Have we done it? No. Are new metro projects being announced? Yes. Then who's responsible? You announce a policy, you straitjacket the conditions in which you will support metro, And there's nobody asking questions other than a parliamentary standing committee in the 16th report in 2022 says the Committee on Housing and Urban Affairs is dismayed to note that despite a lapse of more than 4 years, well, they're counting 4 years from 2017, the parliamentary committee. They should be counting 20 years from 2006. Despite a lapse of more than 4 years, states are yet to constitute UMTA. So we are not even constituting an unified metropolitan transport authority, and all of you sitting in the room will sit in your cars and say, it's impossible to live in Delhi and Bangalore, look at the amount of time I'm wasting. Nobody seems to be doing anything about it. So if I have one expectation from this seminar today, Siddharth, is that you will highlight this issue and press by saying, bhai, pehle UMTA to karo, have one unified authority that unifies everything, then we talk. Thank you.
Thanks, Vinayak, for that, because very clearly a lot needs to be done, and you touched upon a very, very sore point, which is despite having all the knowledge, recommendations, policy suggestions, and the technical ability and expertise, things simply don't happen, and it's making living in urban India a bigger problem. You spoke about 25% cost. I would say that if you were to take the lower rung of the office worker in wage terms, the commute cost is far higher. You know, those of us who are lucky to have cars may not feel the pinch so much, and we agitate about a 3 to 5 or 6% drop in mileage. But look at the real cost that we pay here. 2-3 things to unpack. And I'm going to pick up the last point first. Why has UMTA not happened? Is it because of policy stasis, or is it because there are people in the ecosystem who have a certain way of working, and the bureaucracy and the political decision makers have not been able to push through change?
All two are correct. At the central government level, there is policy status. I mean, you've enacted a policy in 2006, for God's sake, and you have then in 2016 said that I won't give you central assistance for any new public transport project till you set up an UMTA. Then why are you continuing to give assistance? Why don't you put your foot down and say, follow it? When they put their foot down, the state comes up with a piece of paper, which is a legislative framework, which say, we have passed one act in the state legislative assembly called UMTA. There are many states, let me not take names, which have UMTA on paper just to show the center, you told us to enact UMTA, we have enacted UMTA, but not implemented. It is like when the Supreme Court said that nobody will put, other than this few people, nobody will put lal batti on their cars, the bureaucrats started putting blue colored batti. So, I mean, the fact is that there is policy status at the Ministry of Urban level. Why aren't you pushing it?
So, Vinayak, this recent division in the ministry, the creation of a second department, hopefully that will now focus on, a vast urban metropolis like Delhi. Is that like a change, even if it is incremental? How would you describe?
You use the word hopefully, no? I'll just stop at that. The second is at the state level. The state level is, by and large, the ministries in the state level are governed by reasonably powerful bureaucrats. And they have their fiefdoms. Now tell me, if I tell the rail ministry that, look, Bombay suburban rail is really about urban commute, right? The problems of Indian railways today is about declining share of freight and the absence of high-speed rail and the facilities to a modern-day rail traveler. Why don't you suburban to a Mumbai Unified Metropolitan Transport Authority? You think railways will give it? They'll say, ye to hamara ilaka hai, why should we give up suburban rail? So, I'm just giving you an example to say that whether it is the DTC head or whether it is the railways, there are entrenched silos who have honesty at their level, no interest at all in UMTA.
But Vinayak, we have also inherited a similar bureaucratic setup as the UK. How did London, for example, manage to fix this? After all, Yes Minister culture and that show came from London and not from India.
I think it has to do with a certain phase of enlightened bureaucracy. The TfL, Travel for London, has actually shown the way on many, many innovative things, and it's not just London. Other cities have also done it. So it has been an enlightened, like today, for example, you have got Nandan Nilekani to reset the exam system. Now, it took a major crisis in this country, which it shook the political system to say, Arey wah, we can actually digitize it, and we can get Nandan to do what he did in UPI. So you require a political class to understand that it has become such a severe problem that it will result in loss of votes or credibility. till you fix the problem. Now the point is that while I can blame the politician and I can blame the bureaucracy, what about blaming a bit of ourselves? How much noise have we made about, have you done a cockroach on an urban commute? You haven't. How many times has the media got a cover story by saying this is one of the pressing problems of the country as India is urbanizing? As public and population also, to be honest with you, we have not raised the level of our anger, our voice, our frustration in this specific area of urban transport. If onion prices go up, there is outcry. Farm laws change, outcry. Exams, papers get leaked, outcry. Urban transportation, each year you are taking 15 more minutes to reach your home. Is there an outcry? There is no outcry. We are equally to blame. Jab outcry hoga, politician sunega, enlightened bureaucrat act karega.
There are multiple agencies, yes. There are multiple agencies, and I take this journey that you highlighted, Dwarka to Noida, every day.
God bless.
Up and down, and there is an associated issue which is not the subject, but I know if I ask people to raise hands, they will raise hands. How many of you here have decided to change your home to be nearer your place of work? Can anyone raise a hand? And I can bet, I answer this on your behalf, that many times, despite your best intentions and hard work, you have been unable to buy a home because buying homes is another crisis.
That's a separate topic. The point is that now you have become so for those of you who are in private sector jobs, now that you've got a home close to your office, you are now semi-bonded labor, because if you change your job, and you've just taken a home in Greater Noida to be near one of those new urban clusters, and your next job is in Gurgaon, you had it. So you have become semi-bonded. Please remember that.
Okay, let's try and end this session on an optimistic note, because so much in India needs to be fixed, yet so much is also being fixed. And Vinayak, you have devoted your life to do this. I read your articles with great care, and you also talk about the positive part of it. The other side flip side of it is that when I started, my first memory that I know of Delhi pollution was when I was going for an entrance exam, and I took a scooter from someone. By the time I reached the exam center, that white shirt had become grey, and then I found out that there was fly ash on a road and it had all got deposited. Yet today, you see that traveling in Delhi is far more comfortable than it was 25 years ago, the time that I am talking about, because you have a metro service. In the future, what are the good initiatives that are being rolled out that will deliver for Indian citizens?
There is a lot of positive energy in talking about last mile connectivity. Increasingly, the heads of transport authorities are applying their minds to last mile connectivity, that if your metro ticket costs 40 rupees to come from Noida to Gurgaon, and your auto to reach from home to Noida station is 30 rupees, and from the station in Gurgaon to your place of work is another 30 rupees, then you spend more every day on e-rickshaws and autos than you spend on metro. So last mile connectivity, feeder systems, allowing metro rail corporations to run bus services that provide feeders into the neighborhood locality. All of these thoughts are gradually getting momentum. There is also decongestion happening, like the Delhi-Meerut rapid rail system is taking a lot of population out, and the people are making Meerut their homes. It's easier to get into central Delhi from Meerut than it is from outskirts. So positive thinking is happening, but while I would love to end on a positive note, I'm afraid I cannot. And I have to be frank with you, because the first thing that is required is at least our top 10 cities, please immediately, ek to cover story kar lo, that the top 10 cities require implementation, unified urban metropolitan transport authority. And if nothing else works, ab Nandan ko bula lo, exam ke saath saath wo bhi kuch implement kar le.
We don't need Nandan for this. You are a good enough expert. Listening to this very engaging topic, we have been blessed with another 4.5 minutes.
Oh, thank
you. So since you say that Umta is Umda, tell me, what requires for that to happen? Should we be writing letters to our MPs saying that please pick up and implement this? How do we go about getting this done? Because I imagine this requires a gigantic intervention. It is in the purview of states mostly to do this, right? It's not just the center who can recommend this.
See, every time a state implements a public transport system, it does not do it 100% with its own pocket money. It gets 50% metro assistance is from the center, Then there are basically loans from the central institutions, whether they are HUDCO or other or public sector banks or NABFID or IIFCL or etc. So can the finance, simple solution I have, tell the Ministry of Finance or tell Minister for Finance, Madam Sitaramanji, to issue a circular which says, look, this is our India's policy. Henceforth, any state that has not demonstrated ability to unify its urban transport will not get any loan sanctioned and not get any central assistance. Khatam hogi baat.
Okay, let me ask you also about a question that you mentioned, this point that you mentioned in your presentation. If you recall, he spoke about the Hyderabad Metro and the model under which L&T did it. I have a personal connect with that story because I was interviewing the L&T boss and then during that interaction spoke about the fact that free rides on that metro had very severely and obviously negatively impacted the prospects of that. It's a different model, Vinayak. You can talk about.
I can talk about PPP till the cows come home, but I have.
And then there was a big political backlash in Hyderabad. The chief minister then said, if the company can't do it, we'll take that project back. And remember, this is one of the finest conglomerates that we have. It's a global icon, frankly, from India. And here was a project that became almost a victim to welfareism.
Yes, it did.
So then what does industry do in such a situation?
Look, you have to take a step back because somebody of the stature of Sridharan had gone public at the time that India's first metro project was being conceived as a PPP by L&T, and he took a very strong stand that public transport should not be done by private capital. Urban transport all over the world is subsidized for larger economic interests, and therefore a public transport should not be purely a QSQT, return on capital game. It is a subsidized sector. And Sridharan had warned, even before the project started, that PPPs in metro and urban things is a wrong model. It should be done by the state, but should be done professionally. Like you, I have a personal stake because I did part of the detailed project report for Hyderabad Metro along with an American company called AECOM when I ran my firm. And I also drove the first test train there in a ceremonial sector because A.M. Naik was chairman and I was deeply involved with L&T Hyderabad Metro. But there is a larger issue is, should there be private investment in urban public transport? A large body of research suggests no. It is best left to the state, but O&M, the operations and maintenance and day-to-day functioning should be with the private.
What happened with the airport metro model?
Which one?
The Delhi one.
See, now that is very controversial because it has gone straight up to Supreme Court because there's been a blame.
No, let's talk about the economics of it. Private versus public sector running it. Eventually, it was DMRC that took
it over.
Let's avoid the sub judice matters. Let's focus on the economics of it.
See, the economics of it stems from the fact that there was, at the start of commencement of the project, there was a blame game between the EPC contracting of laying the whole track and its safety and security and speed versus when the private sector came in to operate it and found a lot of deficiencies. That was the core of the controversy. And that got settled or not settled in courts of law, and I'm going to stop here.
Yeah, the fair point. Okay, I don't know how many of you remember a highway project called NICE.
Yes, Nandi Infrastructure. Yeah.
No, nobody from the audience does. Okay, now when India started in its initial steps of PPP or trying to develop infrastructure through private sector, I think whenever case studies will be written or must have been written, NICE will definitely figure in one of them. From there to now, where a 1,000-kilometer highway is divided into small pockets and is being done faster, therefore, have we evolved, have things improved?
They have. India has made great strides in public-private partnership models. There are a lot of successes to be shown for it, including your airport sector, including the huge kilometerage of highways that have been built by BOT and HAM methods. But I will take you one step before NICE. The first PPP road project in this country was only 12 kilometers. It was done by ILFS in a place called Rao to Pitampur.
In Madhya Pradesh?
Yeah. ILFS's first PPP project in roads was Rao Pitampur Road of 12 kilometers. NICE came later, and NICE walked into controversies because in all such projects, the return on capital came not from toll collection, like the Ganga Express, but from land. And the moment you bring in large tracts of land, which the private sector is going to acquire from farmers and then sell it back to the market and then earn the profit on the road, it gets very complicated. Okay. That was the problem with NICE, as was the problem with Ganga Expressway. And therefore, to link private sector returns, as with L&T Metro, I mean, this is... I'm not going to say the right figures. I know the figures, but I can't say it publicly. But I know the DPR of L&T. X% of the return on capital, IRR, came from the operation of the railway, and Y% was supposed to come from the monetization of real estate at and surrounding the stations.
But that happened in our airports also.
Yeah, but that has happened late. At Aerotel, I mean, so coming back to that, the Y portion couldn't happen for various reasons. So this constant business of trying to link land monetization for the private sector, land monetization with some other project, doesn't work. And I think that's a lesson we have learned.
So you are therefore saying that a private developer should not be allowed to monetize land on the side because it is politically fraught? Is that what you're saying?
See, if it is large tracts of land around 1,000 kilometers or 500 kilometers of projects, it is fraught. But if you have an airport, which is a controlled area, see, the airport privatization demarcates a controlled area. Or if you take the slum redevelopment programs that I can see Adani as a sponsor is doing in Dharavi, it's a controlled area where the contours of the land which are being given to you by the government, you're not going around from the farmers acquiring them. They have been given to you by the government. The AeroCity that was being built by GMR, it didn't go around acquiring AeroCity land from the farmers. It came from the larger parcel of land that belonged to the Delhi Airport Master Plan. In such controlled conditions, of course, private sector should be allowed to monetize the land, but not in large unknown stretches. कि पूरा हैदराबाद शहर में 40 स्टेशन के आसपास आप monetize.
But now let me ask you a consumer question. There is so much land, it is being monetized by the Delhi airport operator, and you must have used facilities there, hotels there, restaurants there, other infrastructure. It's a great piece of infrastructure. It could be anywhere in the first world, really. But for consumers, we continue to pay through our noses when it comes to airport user charges. On one hand, the same operator is making money from such city-side developments, non-aeronautical revenue, plus you are taking money from my pocket. You are blending ethanol, but not giving me a discount. The oil company is getting a discount. Bhai sahab, matlab public ka to koi kuch kar hi nahi raha hai is desh mein.
It depends on the economics of the PPP structure. The fundament, you have to allow private sector to make a decent return on its capital. And therefore, when PPP formats are designed, they are designed with a certain, for example, in the power plant days, how were the power tariffs determined? Power tariffs were determined that koi private sector mein power plant lagayega, to 16% return on equity milega. Today, in the airports business, broadly, airports follow 4 or 5 different PPP patterns. I don't want to bore the audience with this, but in one of the patterns that are followed by many of the smaller airports, it is mandated that the private sector will get a return on 15% of the on the capital.
Why isn't the Nedumusari example, which was one of India's best airports in Kerala, funded by various private sector entities, multiple stakeholders in that? That's not such an expensive airport. It was done more than 2 decades ago, if my memory is right. Why isn't that an example for the rest of the country?
I'll have to, I won't be able to answer the question. You're talking about Cochin Airport, no?
Yes, absolutely.
Yeah. So Cochin Airport, what the economic structure is, and what is, see, at the end of the day, every airport, there is a revenue share with the government. Sometimes it's a revenue share at the top line. Sometimes it is what is called single till or double till. Single till means every revenue that comes into your SPV is shared with the government. And double till means 100% of the non-aeronautical revenue is shared with the government. And in many cases today, 30% of the non-aeronautical revenue is shared with the government. So the PPP formats require some degree of massaging based on various experiences. And that is an ongoing task. You move towards perfection, but you never really get perfection. But right now, there are about 4 or 5 different PPP models operating in aircrafts in the airport business.
Okay. DMRC, how good a model is it to be adopted more and more?
100%. DMRC is completely a state-funded, you're talking about Delhi Metro, no?
Right, absolutely.
It is 100% a state-funded metro. It has done an exceedingly good job. It has got cheap capital from developmental financial institutions from Japan, and it is a model that is to be completely emulated for public transportation across Indian cities.
Absolutely. We have Krishna Reddy Garuji here. We were just speaking about Hyderabad Metro and what happened there, but we will end this session. One final comment about building Bharat and the infrastructure effort that has happened in the particularly last 10, 12 years. How would you summarize the effort that has gone in so far, Vinayak?
That's a very broad question. I think we have made significant strides in infrastructure development in this country across various sectors. And right now, we are seeing a maturity of existing sectors. The discussion today is not on traditional railway and roads. The discussion has gone to high-speed rail. It has gone to newer sectors like hydrogen, renewable power, etc. So we are seeing a transition to newer sectors of infrastructure as the old ones have reached a steady state growth level. Where I am a little disheartened is that the extent to which we thought private capital would come in, and during the preparation of the 12th plan document, it was hypothesized at that time by Gajendra Haldia, Montek Singh Ahluwalia, before the Planning Commission was dismissed, that going forward, India would have about 37 to 40% of its infrastructure development funded by private sources, domestic capital, foreign capital, pension funds, sovereigns, etc. Unfortunately, that is down to 18%. So we are once again leaning on the state to fund infrastructure where conditions do exist, if properly handled, to get large dollops of private capital back again into private infrastructure. That has left me unhappy. So it's a mixed bag.
Absolutely, and that is why, if you have been wondering that why is the government doing so much more on infrastructure, the National Highway Program, the expansion in railways, the beautiful work that is happening in Indian railway stations, the airport expansion, Udan scheme, a lot of it is having to be done by the government because private sector investment is a question mark, but that is a subject for some other time. Vinayak, thank you very much for your time with us today. With that, it's a wrap on this session. Thank you very much.
This wonderful panel that we have right in front of you. So basically, ladies and gentlemen, we are going to discover and discuss the infrastructural push in the country. For those of us who travel by road, life has improved dramatically. Over the last 5 years, the government of India has spent somewhere like 11 lakh crore rupees per year to improve our roads, ports, airports, as also a large amount of digital infrastructure, and that change is absolutely visible. Something that impacts us all that we don't see is the Sagarmala project. This is basically linking 13 major ports and 200 minor ports to improve the cost of logistics as also reduce the cost of doing business. Let's discuss this in a great detail. We are joined by Mr. Sagar Kadu. He is the Director for Logistics, Ministry of Commerce for Industry in the Government of India. A warm welcome to all you gentlemen. Let's get from you, Sagarji, a brief overview of what Sagarmala is all about and how will it change the lives of people? Will it lead to reduced costs?
Yeah, so me first? Okay, fine. So before coming to Sagarmala, I think we'll just go back a little bit when Mr. Vinayak said. He said very important thing. He said about we are creating infrastructure, but what about the institutional capabilities? So I'll start from that institutional capabilities. When we say about the Sagarmala, before I'll say we discuss about the passenger transportation. Now let's discuss about the cargo transportation, multimodal connectivity. So everybody must have heard about the PM Gati Shakti National Master Plan. So that's aligned with how we develop our multimodal infrastructure for the Vikasit Bharat 47. And when we say about the Vikasit Bharat 47, it's like the flagship initiatives of the Government of India and our Honorable Prime Minister. It's in all the sectors. So we'll focus how we come to the infrastructure connectivity part of that. So when we talk about the National Gati Shakti, the whole idea is about understanding this problem in infrastructure development, working on that problem, remove his silos, and that's what it's all about, the Gati Shakti. We have an institutional capacity, a top brass, all ministries together, a network planning group is being created, where we are focusing the next generation infrastructure. We heard from the union minister also, honorable minister also, that there will be legacy infrastructure, but we are creating the next generation infrastructure also. So we heard about the high-speed railway, we heard about the Bharatmala program. Similarly, when we talk about the maritime trade, that's very important. And Sagarmala is all about that leveraging port-led economy. So now coming again to understand Sagarmala, I think we heard about the shipbuilding initiatives, maritime development fund, where the governments are putting the money to create the infrastructure into the port sector. We have a huge 11,000 approximately coastline, and export-import is the primary base. So Sagarmala is about modernizing that ports. You said the numbers, 13 and 200. Out of that, around 70 ports are operational, cargo handling operational. So doing that minor improvisation into the port, creating infrastructure, modernizing port, last mile, first mile connectivity, creating coastal community, and its overall ease of doing business.
Right. So let's get Captain Rahul Bhargav into the conversation, ladies and gentlemen. This is his 5th decade into shipping, and he's the CEO of Seros Shipping. And all the ports that we mentioned are served by this particular company. Captain, a very warm welcome to you, sir. Do you think this Sagarmala project will make your lives easier in shipping companies? How do you see your life changing now as what it was maybe 10 years ago?
Thank you. First, to begin with the years that I spent, I can vouch for it. In the last 10 years, we are seeing a focus of government onto shipping. After years, they have decided that the logistic GDP has been 13-15% as compared to the world standards about 7 to 8%. And that has been the brainchild from where this all thing has started. So we'll go back to the Sagarmala phase 1, which has started about 10 years back. And that is the time it was to, the concept was to develop the coastal shipping, inland waterways, and in short, if I say, bring the cargo cheaper.
Yes.
That was the concept then. However, now with Sagarmala 2.0, which has come in, the concept has changed. Concept has changed in the sense that now it is a maritime economic development. So where we stand for maritime development is by, as the sir said, bringing new ports, modernizing the port, going green, and building industrial clusters around the port. Now, if you have seen what happened in auto industries, let me draw a parallel between the auto industries of 1970s and shipping of today. The time the Maruti came in, we used to have only Ambassador, Fiat, and standard cars, and the Maruti came to India. So what Maruti did, Maruti is not selling the cars. It brought a backup area where we had the ancillaries came in. A lot of ancillaries came in, a lot of manufacturing started, a lot of jobs were created. And what Sagarmala 2.0 is actually going to do is going to make industrial corridors. It's going to have a industry behind the port. So there's going to be a lot of employment, new development, which is in line with our Atmanirbhar Bharat. It's against the Maritime Vision 2047. And all this thing is there. So definitely, government is on a very, very right step they have taken. Their focus is on development from all sides, which includes your road, railways,
Right,
port, everything. So that's where I feel it's the right way to go.
Okay, let's get a consulting view in at this point of time. We are joined by Vishal Gupta. He's the ED at Deloitte. Vishalji, when you look at how traffic moves from a ship into India and vice versa when a factory puts in a finished good and wants to ship it to the port. There are a lot of multimodal transport structures involved, and of course that's one area where the government has also worked very strongly over the last 10 years. How are your clients responding to this? What is your advice to them when it comes to multimodal transport?
Yeah, thank you. And Mr. Sagar has already mentioned that Sagarmala 2.0 is about easing the multimodal integration. It's not about infrastructure creation at port only. We are talking about end-to-end connectivity and industrialization around those corridors. So we take an example of Vadhavan port. Now, how is it being developed? This port will have 20-meter draft. It will be deep sea. We will be having larger ships here. Now, when the cargo reaches here, it will have some sort of automated clearances, which is backed by MET3. Between JNPA and Dubai, recently PM has launched MET3 program, wherein digital information exchange has been launched. So it will be covering all the ports gradually. Now, the paperless will increase efficiency, move the cargo from ship to outside the port gate very quickly. Then comes your rail and road. It will move faster because we have integrated our dedicated freight corridor, industrial corridor, road corridor, and industries around that corridor in a synchronized manner. It is not about creating infrastructure, but entire ecosystem. So everybody is welcoming this, and plus we are also working on, say, multimodal logistics park. We have already identified 35 locations. We are working on Gati Shakti terminals. So whole ecosystem is moving towards easing the cargo movement. Very similar to passenger last mile connectivity when it comes to modal shift from road or private taxi to metro. Because unless we have an ease of reaching from my house to my office in an integrated manner, I will not move.
Right.
Similar runs with the cargo.
Perfect. Yeah. Ladies and gentlemen, let me introduce Mr. Vaibhav Dange to you. He was until recently the private secretary to the Minister of Roads, Transport and Ports, as also shipping. For every road that you travel to your hometown in, and you enjoy a pothole-free travel and a wonderful expressway, which you can do 120 kilometers per hour, you have Mr. Dange to thank. Vaibhavji, the last 10 years we have seen the government go hammer and tongs in developing the road infrastructure. You get about 20% of outlay of capital expenditure each year, which is 2 lakh crore rupees. How can the private sector now participate in this setup and reduce logistics cost, maybe improve travel, and also give maybe a European experience on roads in India?
Thank you. No, I think as Captain Bhargav said, or even Mr. Sagar said, the whole idea is about larger vision in improving the logistic efficiency. So whether you are traveling on road, or whether we are talking about Sagarmala program 1 or 2, or whether integrating everything with a multimodal approach in PM Gati Shakti national mission, I think the whole idea is to improve that efficiency. So for example, the 23,000 kilometers of roads developed in Bharatmala, large chunk is focusing on economic corridors.
Absolutely.
So our efficiency of port, I think all of panelists here will agree, that efficiency of port will equally depend on evacuation, or how fast we are able to take our goods to the port or take out from the ports.
So I believe 3,000 kilometers out of 23,000 is aimed at ports.
Ports, economic corridors. And I think in Bharatmala and Sagarmala integratedly, every major port has been ensured that there is a good amount of connectivity, road connectivity. So I think government in last 10-12 years, with its consistent focus on infrastructure spending, all sectors of infrastructure, railway, road, port, airport, has created the necessary infrastructure and work and the environment. Now, it's, I think, the real time for private sector to build on this. So, for example, somebody spoke about Vadhavan port. Government is building the new port with the capacity of almost all the ports put together. That is the kind of capacity is being put at Vadhavan port. Now, government will create the port infrastructure. Ultimately, it's the private sector which will be building the berths, which will be operating the berths, which will ensure that. Similarly, on the logistics part, government has created the multimodal, like for example, Banaras, there is a multimodal, river port. In Jogipada in Guwahati, there is a multimodal river port, rail and road and river connects there. Now, it is for the private sector to start looking at opportunity in building, logistic parks, other kind of infrastructure to bring in that efficiency. I think somebody mentioned about coastal shipping also. So, for coastal shipping also, a lot of, I remember I was in the port ministry at that time and we were looking at building, coastal shipping, domestic logistics on a coastal shipping, which can bring in a lot of efficiency. For example, you are transporting goods from far east of India to far west of India.
Yes.
Coastal shipping could be most efficient way of doing it because otherwise we are polluting the entire country from east to west or north to, so those kind of, so whether it is Ro-Ro could be the better proposition, whether it's shuttling between, eastern Visakhapatnam, Tuticorin, all those elements. I think Deloitte only did that study, if I'm not wrong at that time. So, those kind of elements need to be brought in. So I think the government's consistent focus on spending on infrastructure to create that backbone has been there. Now it is, I think, time for private sector to build on, because that's where the real wealth will get generated. That's where the real efficiency will come in. I'll give you a short example before I close my comment. So, for example, I was interacting with the transport operators, truck operators. Because of the better road, their tire consumption per kilometer.
Absolutely.
Because their tire gets burned out when they travel. So their tire consumption per kilometer, the cost of tire consumption per kilometer has gone down from 26 paisa to 16 paisa. I think that's the logistics efficiency. That's where cost will go down. That's where, as he said, our logistics GDP will go down to 6-7%, 10%, if not 8% globally, but at least come down from 13 to 12, 11, 10. Something is...
That itself is so much improvement in corporate margin.
Absolutely, absolutely.
Right. Ladies and gentlemen, I have deliberately kept the question last to Mr. Sunil Vaswani. He is the ED at the Container Shipping Lines Association of India. Mr. Vaswani, firstly, the entire audience is very eager to know how are container shipping lines globally handling this West Asian crisis. It's a terrible, terrible time for you and your companies. How is it going? How are you handling it?
So, first of all, let me thank Business Today for having me here. It's indeed such a pleasure and a privilege to be sharing my thoughts with such an august audience. To answer your question, I think the last 5.5 years have taught us how to survive and how to continue with business during trying times. During COVID, if I may say that we were completely taken aback. No one knew that the demand would be so extraordinary, where the Western countries would be demanding more and more exports, and the Indian subcontinent would be struggling to provide that because obviously everybody was struck with COVID. But under those circumstances, I think India did a great job. The Indian ports worked beautifully and gave all the support to our container shipping lines to carry those containers. And of course, from our side, of course, we had to go through and get additional capacities, which of course, involved a lot of capital investment, but we survived. The next thing after that was the Red Sea crisis. And when the Red Sea crisis struck again, most of the shipping lines were forced to move out of the Suez Canal and move over the Cape of Good Hope. Now that again required additional capacities because your deployments had to be changed. Where you had one service moving, say, from India to Europe and coming back within 63 days with 9 ships, it automatically changed via the Cape of Good Hope. You required 13 ships with an 87-day round trip. So that kind of investment was again required further. Now coming to the current crisis, as a result of that, probably that was a blessing in disguise, that we are better placed to handle the situation today. Because in any case, most of our services are moving over the Cape of Good Hope. So there's not much of a disruption really. Right now when we say about the Houthis, again, cautioning or warning ships from moving into the Suez Canal, barring a couple of our container lines which continue to go via the Suez Canal, and they haven't disrupted that services yet. Right. But most of them are actually going over the Cape of Good Hope. So that's taken care of. Then the earlier part is that Strait of Hormuz, Now, with the blockage of the Strait of Hormuz, initially, of course, we did have a significant amount of disruption because there were some of our ships that were actually stuck inside the Persian Gulf. In fact, 2 of our ships even got hit. But what we did is we started the future services. We changed by moving out of the Strait of Hormuz. That is calling to the east of Hormuz. That is ports like Corfacan, Fujairah, Salalah, Sohar. So those services now are pretty much set, and they are moving along. So containers are moving in that direction. The traders got used to that. Of course, there is a significant amount of land movement after that. But that's said. So having said that, I would say that there is no real cause for alarm under the current circumstances because we have more or less handled the situation already. Thank you.
Wonderful. So, ladies and gentlemen, all of us realize that our lives have been digitized. You can't live without your mobile phone, your banking, your food needs, your entertainment, education, all happens in a digitized format, as also roads. Thanks to FASTag, travel is phenomenally easy. But is that true for ports? Let's find out what are the digitization processes that are happening on Indian ports. Vishal, I'll come to you first. I want to understand how far are we from a digitized port in this country? Where do we stand now? And what were the situations 10 years ago?
So, if we compare globally, we are advanced in terms of digitization and digital adoption.
You're talking about the port or the country?
As a country.
Yes.
But when it comes to ports, recent phenomena has actually made us focus on ports and shipping. So we are focusing now on not only infrastructure development with new Sagarmala 2.0, the connected development and integrated development with digitization. Now, digital twin, for example, has been initiated. Chennai port has already kind of done it. JNPA is moving towards digital twin, and others are catching up. So this is the first layer. Second, if you look at the processes, the paper-based processes, those are moving into digital direction. But as we come a long way in the road side, where we have developed the infrastructure and now we are talking about predictive maintenance and prediction about our assets, we have to move towards those lines. How do we move our cargo? What is the prediction? So AI is a buzzword, but we need to move towards those predictive asset planning and efficiency improvement through those digitization of assets. So that's the game next 5 years.
Okay, perfect. Yeah. So that's the consulting view. Let's get the view on the ship from Captain Saab.
Yeah.
So, Captain, how do you see life changing because of digitization? Is there an improvement over the last 3-4 years? How do you see the next 2 panning out?
Okay, we cannot live without technology, which is a must. And we will be left out if we don't embrace the technology. On ships also, when we used to sail long back, we used to rely on sun, moon and stars for our navigation. Those era is gone. Today you ask a youngster, they won't know anything because it is the GPS which tracks it. And they've forgotten the olden ways of navigation. So it's no longer a navigation, it's like walking on a road.
It reminds me of Odyssey, the guy fought for 10 years, took another 10 to reach back home.
Yes, that was a Japanese guy. Right. So this is the technology has definitely come in and it is making a much better impact. because then you know exactly how you're moving, your travel time is decreasing, efficiency is increasing, connectivity with the shore is increasing. When we used to sail, we hardly would hear anything from our home. A letter written a month back, we would receive on ship, and a letter written by us would reach a month later to our home. So there was no way of communication. Today, they are online all the time. So they are they have embraced so much of technology that it is making a life much, much easier. So definitely it's a large impact that's happening because of technology, digitization. If I say it is on the certification of the ships, we used to have the manual certificates. Now it's all digitalized. So things are changing much larger way and for betterment.
Right. Sagarji, maybe you would want to contribute on what the government's thought are on digitization. The reason why I ask you this is that somewhere in 2014, 2015, the government went hammer and tongs after creating JAM, which is the Jan Dhan Aadhaar and mobile setup. How is the equivalent of this working in the Sagarmala project?
So, right, just to start, when we talk about the logistics efficiency, largely has the three component, infrastructure we have discussed. Second is the skilling, the manpower. Third is largely a digitization. Now, when we say digitization, there are two aspects into digitization. One, at the individual level, each port, each shipping company, everybody is investing into a digitization. They are, making more of the software-based softwares or process improvement. When we talk from the government point of view, the first part of the digitization we have been working in last 5 years is largely first improving the processes. When we have to digitize something, you have to make the process simpler, then only you can digitize, particularly in the port and shipping. It's been very complex. When we talk about the logistics, there are so many stakeholders, so many cargoes, so many shipping companies, so many ports. So having standardization is the priority. That's we have been doing into the ULEAP or the LDB, what we are giving the tracking and traceability. So it's not only one Sagarmala, it's the multiple government systems are being integrated, because when we talk about the cargo, it's again Department of Commerce, DGFT is involved, Customs is integral part. Each port has their community system. So now our focus is more on the interoperability. Each port, each stakeholders is more or less is being digitized. So the government focus is to bring everyone on a single platform, have more interoperability, if not sharing the data completely with each other, but get what you need, so the ultimately the cargo user or the transporter or the exporter importer have the visibility across the value chain. So right. From government point of view, it's creating a digitization across the value chain.
Right. Vaibhavji, what's next for roads? All of us in the room use a lot of roads. Not many of us go to seaports, but roads are deeply, deeply linked to us. We've had a wonderful, seamless FASTag that's been introduced. There is apparently a new navigation tool in the pipeline. How will our lives Hello and a warm welcome, ladies and gentlemen, on Business Today Television. While all parts of the market are very, very enthused with this very sharp rally that we are seeing on the Nifty, 24,600 odd on the index, fifth consecutive day of gains. This is powered mostly by a very strong rupee. It added 1.2 percentage points last week versus the dollar, and of course this flow of FCNRB deposits, which helping the foreign exchange reserves, somewhere like $35 billion have come in so far in the first 2 months, and we still have September 30th to go. To discuss this, the broader structure of the cash market in India, as also ahead of the Monetary Policy Committee meeting, we have joined on the show by Mr. Aditya Pagaria, Senior Fixed Income Fund Manager at Axis Mutual Fund. Good afternoon to you, Mr. Pagaria. First off, against the backdrop of easing liquidity, a relatively stronger rupee, and of course rising forex reserves, what are your expectations from the Monetary Policy Committee meeting which has started?
Broadly, if you see, the August policy will happen in a very uncertain times where the West Asia crisis is still in place. But if you compare it with, say, a June policy when the situation was not as good as it is right now. So broadly, what we expect is in terms of growth and inflation dynamics that typically RBI looks before deciding on the MPC decisions. What we feel that if you see growth has been pretty good. The numbers that the companies have delivered have been above the market expectations. As against the RBI's forecast of 6.6% growth for FY27, we expect the growth to be closer to 6.8%. So growth is not a big problem. In fact, if you look at the CPI numbers, the inflation, that the second factor I spoke about, inflation has actually surprised on the downside for Q1 FY27. It was at close to 4.9%, 3.9% versus RBI's expectation of 4.2%. So with the crude prices in check and the growth numbers not giving a huge downward or any upward surprise, we expect the RBI to be status quo in this particular policy. And given the bazooka of measures that they had given in the June policy in terms of FCNRB flows, the removal of taxes, the introduction of FAR securities, the basket has increased. All these factors, I'm sure RBI would be more than happy to see the impact of that then, and maybe they might take some decision in the policy in October.
Right. Mr. Pagadia, do you feel that the liquidity has improved in the system? What are the anecdotal approaches that you can share with us which point to increased liquidity in the cash market?
So again, liquidity per se, if you see from the month of June, the liquidity has definitely improved. But the quantum of FCNRB flows that we are getting as a country, I mean, as you correctly said, that close to 35 billion of FCNRB and the rest flows again close to $5 billion, almost $40 billion have come into the market. But actually, not that kind of huge liquidity is not seen in the system as of now. There could be two reasons that government has been, I mean, the government cash balances are pretty high, close to 4 lakh crores. Plus, there are, some intervention by the central, basically the RBI to stabilize the money. So they are unwinding their short positions, and that is the reason we are not seeing huge liquidity. I mean, if you translate 4 lakh crores, I mean, $40 billion is roughly, 380,000 INR in terms of INR. These kind of liquidity is not there. The rates would have actually, the short-end rates would have collapsed actually, but that is not seen. But given the healthy flow of deposits, we expect these flows to, garner much more money. Roughly by September, we feel that the bank should be able to garner closer to 75 to 80 billion of FCNRB flows. The liquidity is a factor of how RBI allows it to come to the market, whether it absorbs the liquidity totally or it gives a partial liquidity to the market and absorbs the rest of it. So liquidity has been positive. We expect it to be more positive in next few months when the flows increase.
Okay. We still have September 30 deadline, which essentially means a clear 2 more months for the FCNRB deposit to close its window. $36 billion has already come in. What is your estimate? What could be a practical number to look at?
Our estimate is roughly around, with the pace that we have seen, we expect the FCNRB flows to be closer to $75 billion. Plus the rest of ECB and other flows, we might get another 25 billion. So roughly around $95 billion of flows we expect to come by 30th September.
That's a fairly decent number. Mr. Pagadia, there is this appreciation of the rupee that happened last week, about 1.2% higher versus the dollar, as also the dollar index has also slipped dramatically. What is your prognosis of the rupee?
There was some news report that RBI has actually intervened a lot in the rupee market by basically selling a huge amount of dollars. I guess one of the days they reportedly sold some $7 billion. That is one of the highest amount of dollar selling by RBI. As we said that, huge amount of dollar supply plus intervention by the RBI in the rupee market has actually helped rupee to be strong in terms of as compared to dollar, and we expect this strength to be there for next couple of months till we are getting FCNRB flows and other flows from the market.
अच्छा चलिए ठीक है. So that's the view on the rupee. So FCNRB about 80 billion and the rupee gaining strength from here. Mr. Pagadia, last week after months and months and months and months of net selling, we saw a consistent trend in FII numbers towards positivity. 7,300 crores was what they invested in the net level. What is your understanding and interaction with your equity research team? What are they talking about in terms of a changed FII mood? How do you read this 7,300 crores of net investments?
So broadly, if you see the FPI flows in equity or the FPI holding as a percentage of total market cap is in India is actually at one of the lowest levels in past so many, close to 17 to 18%. Obviously, with the improving macroeconomic factors, the West Asia crisis, it's not as in a bad situation as it was in maybe a month of Feb, March or April. Obviously, FPIs are looking at Indian markets. Whenever there is a healthy correction in the Indian market, they are happy to invest in Indian markets. And obviously, coupled with FPI flows in equity, we have seen a very healthy flow of money in the debt segment of Indian government securities. Obviously, the major factor was the kind of the tax exemption that it was given on the capital gains and the interest amount to the FPIs. So we expect these flows to continue in near future.
Okay, perfect. Now let's talk about the bond market. Mr. Pagadia, which side of the long or short is your bond portfolio structured at this point?
Remember we discussed this last time also. Again, our portfolio is on the short side of the bond curve. So basically we expect the liquidity to come into the system, the deluge of liquidity in next couple of months, and we expect the GSEC to underperform the corporate bond segment in next couple of months. One major change that happened over the weekend was there was some expectation of Bloomberg, including our GSEC, in their one
Yes.
of the
Hmm.
biggest portfolios. But again, that hasn't happened. So a bit of a disappointment, but that disappointment was actually nullified by the downward movement in the crude prices. So obviously, if the Bloomberg index is at a bay for next, say, 6-8 months or so, and the liquidity we expect to come in next couple of months, we are more positioned in the shorter end of the curve rather than going very long on the extreme longer end of GSEC.
Okay, perfect. Mr. Pagadia, what do you think is lacking in the Indian bond system? This Bloomberg addition was supposed to happen a couple of months ago, but it's getting delayed. Do you see some repercussions on the bond market? We were hoping to get in a lot of FII money in the bond market as well. That doesn't seem to have fructified.
I guess it is a question of when it is going to happen rather than if it is going to happen. If you see the, the press release that those guys have, they are happy with the kind of measures that Indian government has taken. For example, extension of FAR securities in the portfolio, as well as the tax exemption they have given for capital gains as well as the interest amount. So it's a matter of time. Maybe they would, and they expected something more in terms of their decision to include the government securities in their index. But it's a matter of time now. If not this time, maybe 6 months down the line, if they have any review, I'm sure they would be more than happy to include Indian government bonds into their index.
Mr. Pagadia, when you look at the broader structure of the economy, the pain that we have undergone since March, and the numbers that are coming in, whether it's quick estimates, GST numbers, auto data sales, the way pharma is progressing, markets seem to have come up. This is all despite a negative trend on monsoon. Broadly, are you happy with the way the economy is shaping up? Could we have been better, or are we headed for worse?
Now, obviously, we could have been better. As we said, we are the major imports for our country is crude, and any kind of logistical issue that happened with the crude, or the prices move up, obviously we will be impacted. But what's heartening to see is that we as an economy has been far more resilient in terms of how the crude shortage has been handled by the various agencies. In terms of there has been no potential supply concern that market was expecting that if Hormuz is closed for for a month or a couple of months, the war escalates, then obviously the crude imports will be impacted. But I mean, you see the way the government agencies have handled. They have diversified their, the way they import crude. And one biggest positive that we have seen actually is whenever there is a, ceasefire, noise of ceasefire, we have seen a sharp decrease in prices of crude. So this is very unlikely that, earlier people were expecting that even if the ceasefire happens, the crude oil is not going to correct for, or there won't be a sharp correction in crude prices. But couple of times we have seen whenever there is a, positive news from Middle East, the crude prices obviously, come down very fast. Obviously things would have been better if war
Sharply.
was not there. And I mean, the numbers, the growth numbers that we see, we expect the growth numbers to beat the actual RBI estimates for FY27. The RBI estimates the economy to grow by close to 6.6%. I mean, given the, I mean, right now the market circumstances, with the crude oil remaining close to $70 to $80, $85, we expect the economy to outbeat the RBI estimates, and we expect it to grow by close to 6.8 to 6.85%.
Okay, fair point. We'll pause it here, Mr. Pagadia. Thank you so much for your time and your views on where this segment could be headed. We look forward to interacting with you again. And of course, we'll keep track of that $80-90 billion number that you talk about as far as the FCNRB deposit is concerned. Thank you for your time, sir.
Thank you.
That, ladies and gentlemen, was Mr. Aditya Pagadia, Senior Fund Manager for the fixed income segment at Axis Mutual Fund. Thank you for watching. This wonderful panel that we have right in front of you. So basically, ladies and gentlemen, we are going to discover and discuss the infrastructural push in the country. For those of us who travel by road, life has improved dramatically. Over the last 5 years, the government of India has spent somewhere like 11 lakh crore rupees per year to improve our roads, ports, airports, as also a large amount of digital infrastructure, and that change is absolutely visible. Something that impacts us all that we don't see is the Sagarmala project. This is basically linking 13 major ports and 200 minor ports to improve the cost of logistics as also reduce the cost of doing business. Let's discuss this in a great detail. We are joined by Mr. Sagar Kadu. He's the Director for Logistics, Ministry of Commerce for Industry in the Government of India. A warm welcome to all you gentlemen. Let's get from you, Sagarji, a brief overview of what Sagarmala is all about and how will it change the lives of people? Will it lead to reduced costs?
Yeah, so me first? Okay, fine. So before coming to Sagarmala, I think we'll just go back a little bit when Mr. Vinayak said. He said very important thing. He said about we are creating infrastructure, but what about the institutional capabilities? So I'll start from that institutional capabilities. When we say about the Sagarmala, before I'll say we discuss about the passenger transportation. Now let's discuss about the cargo transportation, multimodal connectivity. So everybody must have heard about the PM Gati Shakti National Master Plan. So that's aligned with how we develop our multimodal infrastructure for the Vikasit Bharat 47. And when we say about the Vikasit Bharat 47, it's like the flagship initiatives of the Government of India and our Honorable Prime Minister. It's in all the sectors. So we'll focus how we come to the infrastructure connectivity part of that. So when we talk about the National Gati Shakti, the whole idea is about understanding this problem in infrastructure development, working on that problem, remove his silos, and that's what it's all about, the Gati Shakti. We have an institutional capacity, a top brass, all ministries together, a network planning group is being created, where we are focusing the next generation infrastructure. We heard from the Union Minister also, Honorable Minister also, that there will be legacy infrastructure, but we are creating the next generation infrastructure also. So we heard about the high-speed railway, we heard about the Bharatmala program. Similarly, when we talk about the maritime trade, that's very important. And Sagarmala is all about that leveraging port-led economy. So now coming again to understand Sagarmala, I think we heard about the shipbuilding initiatives, maritime development fund, where the governments are putting the money to create the infrastructure into the port sector. We have a huge 11,000 approximately coastline, and export-import is the primary base. So Sagarmala is about modernizing that ports. You said the numbers, 13 and 200. Out of that, around 70 ports are operational, cargo handling operational. So doing that minor improvisation into the port, creating infrastructure, modernizing port, last mile, first mile connectivity, creating coastal community, and its overall ease of doing business.
Right. So let's get Captain Rahul Bhargav into the conversation, ladies and gentlemen. This is his 5th decade into shipping, and he's the CEO of Seros Shipping. And all the ports that we mentioned are served by this particular company. Captain, a very warm welcome to you, sir. Do you think this Sagarmala project will make your lives easier in shipping companies? How do you see your life changing now as what it was maybe 10 years ago?
Thank you. First, to begin with the years that I spent, I can vouch for it. In the last 10 years, we are seeing a focus of government onto shipping. After years, they have decided that the logistic GDP has been 13-15% as compared to the world standards about 7 to 8%. And that has been the brainchild from where this all thing has started. So we'll go back to the Sagarmala phase 1, which has started about 10 years back. And that is the time it was to, the concept was to develop the coastal shipping, inland waterways, and in short, if I say, bring the cargo cheaper.
Yes.
That was the concept then. However, now with Sagarmala 2.0, which has come in, the concept has changed. Concept has changed in the sense that now it is a maritime economic development. So where we stand for maritime development is by, as the sir said, bringing new ports, modernizing the port, going green, and building industrial clusters around the port. Now, if you have seen what happened in auto industries, let me draw a parallel between auto industries of 1970s and shipping of today. The time the Maruti came in, we used to have only Ambassador, Fiat, and standard cars, and the Maruti came to India. So what Maruti did, Maruti is not selling the cars. It brought a backup area where we had the ancillaries came in. A lot of ancillaries came in, a lot of manufacturing started, a lot of jobs were created. And what Sagarmala 2.0 is actually going to do is going to make industrial corridors. It's going to have a industry behind the port. So there's going to be a lot of employment, new development, which is in line with our Atmanirbhar Bharat. It's against the Maritime Vision 2047. And all this thing is there. So definitely, government is on a very, very right step they have taken. Their focus is on development from all sides, which includes your road, railways, port, everything. So that's where I feel it's the right way to go.
Okay, let's get a consulting view in at this point of time. We are joined by Vishal Gupta. He's the ED at Deloitte. Vishalji, when you look at how traffic moves from a ship into India and vice versa, when a factory puts in a finished good and wants to ship it to the port, there are a lot of multimodal transport structures involved. And of course, that's one area where the government has also worked very strongly over the last 10 years. How are your clients responding to this? What is your advice to them when it comes to multimodal transport?
Yeah, thank you. And Mr. Sagar has already mentioned that Sagarmala 2.0 is about easing the multimodal integration. It's not about infrastructure creation at port only. We are talking about end-to-end connectivity and industrialization around those corridors. So we take an example of Vadhavan port. Now, how is it being developed? This port will have 20-meter draft. It will be deep sea. We will be having larger ships here. Now, when the cargo reaches here, it will have some sort of automated clearances, which is backed by Metri. Between JNPA and Dubai, recently PM has launched Maitri program, wherein digital information exchange has been launched. So it will be covering all the ports gradually. Now, the paperless will increase efficiency, move the cargo from ship to outside the port gate very quickly. Then comes your rail and road. It will move faster because we have integrated our dedicated freight corridor, industrial corridor, road corridor, and industries around that corridor in a synchronized manner. It is not about creating infrastructure, but entire ecosystem. So everybody is welcoming this, and plus we are also working on, say, multimodal logistics park. We have already identified 35 locations. We are working on Gati Shakti terminals. So whole ecosystem is moving towards easing the cargo movement. Very similar to passenger last mile connectivity when it comes to modal shift from road or private taxi to metro. Because unless we have an ease of reaching from my house to my office in an integrated manner, I will not move.
Right.
Similar runs with the cargo.
Perfect. Yeah. Ladies and gentlemen, let me introduce Mr. Vaibhav Dange to you. He was until recently the private secretary to the Minister of Roads, Transport and Ports, as also shipping. For every road that you travel to your hometown in, and you enjoy a pothole-free travel and a wonderful expressway, which you can do 120 kilometers per hour, you have Mr. Dange to thank. Vaibhavji, the last 10 years we have seen the government go hammer and tongs in developing the road infrastructure. You get about 20% of outlay of capital expenditure each year, which is 2 lakh crore rupees. How can the private sector now participate in this setup and reduce logistics cost, maybe improve travel, and also give maybe a European experience on roads in India?
Thank you. No, I think as Captain Bhargav said, or even Mr. Sagar said, the whole idea is about larger vision in improving the logistic efficiency. So whether you are traveling on road, or whether we are talking about Sagarmala program 1 or 2, or whether integrating everything with a multimodal approach in PM Gati Shakti national mission, I think the whole idea is to improve that efficiency. So for example, the 23,000 kilometers of roads developed in Bharatmala, large chunk is focusing on economic corridors.
Absolutely.
So our efficiency of port, I think all of panelists here will agree, that efficiency of port will equally depend on evacuation, or how fast we are able to take our goods to the port or take out from the ports.
So I believe 3,000 kilometers out of 23,000 is aimed at ports.
Ports, economic corridors. And I think in Bharatmala and Sagarmala integratedly, every major port has been ensured that there is a good amount of connectivity, road connectivity. So I think government in last 10-12 years, with its consistent focus on infrastructure spending, all sectors of infrastructure, railway, road, port, airport, has created the necessary infrastructure and work and the environment. Now, it's, I think, the real time for private sector to build on this. So, for example, somebody spoke about Vadhavan port. Government is building the new port with the capacity of almost all the ports put together. That is the kind of capacity is being put at Vadhavan port. Now, government will create the port infrastructure. Ultimately, it's the private sector which will be building the berths, which will be operating the berths, which will ensure that. Similarly, on the logistics part, government has created the multimodal, like for example, Banaras, there is a multimodal, river port. In Jogipada in Guwahati, there is a multimodal river port, rail and road and river connects there. Now, it is for the private sector to start looking at opportunity in building, logistic parks, other kind of infrastructure to bring in that efficiency. I think somebody mentioned about coastal shipping also. So, for coastal shipping also, a lot of, I remember I was in the port ministry at that time, and we were looking at building, coastal shipping. domestic logistics on a coastal shipping, which can bring in a lot of efficiency. For example, you are transporting goods from far east of India to far west of India.
Yes.
Coastal shipping could be most efficient way of doing it, because otherwise we are polluting the entire country from east to west or north to, so those kind of, so whether it is Ro-Ro could be the better proposition, whether it's shuttling between, eastern Visakhapatnam, Tuticorin, all those elements. I think Deloitte only did that study, if I'm not wrong, at that time. So, those kind of elements need to be brought in. So I think the government's consistent focus on spending on infrastructure to create that backbone has been there. Now it is, I think, time for private sector to build on, because that's where the real wealth will get generated. That's where the real efficiency will come in. I'll give you a short example before I close my comment. So, for example, I was interacting with the transport operators, truck operators. Because of the better road, their tire consumption per kilometer.
Absolutely.
Because their tire gets burned out when they travel. So their tire consumption per kilometer, the cost of tire consumption per kilometer has gone down from 26 paisa to 16 paisa. I think that's the logistics efficiency. That's where cost will go down. That's where, as he said, our logistics GDP will go down to 6-7%, 10%, if not 8% globally, but at least come down from 13 to 12, 11, 10. Something is...
That itself is so much improvement in corporate margin.
Absolutely, absolutely.
Right. Ladies and gentlemen, I have deliberately kept the question last to Mr. Sunil Vaswani. He is the ED at the Container Shipping Lines Association of India. Mr. Vaswani, firstly, the entire audience is very eager to know how are container shipping lines globally handling this West Asian crisis. It's a terrible, terrible time for you and your companies. How is it going? How are you handling it?
So, first of all, let me thank Business Today for having me here. It's indeed such a pleasure and a privilege to be sharing my thoughts with such an august audience. To answer your question, I think the last 5.5 years have taught us how to survive and how to continue with business during trying times. During COVID, if I may say, that we were completely taken aback. No one knew that the demand would be so extraordinary, where the Western countries would be demanding more and more exports, and the Indian subcontinent would be struggling to provide that, because obviously everybody was stuck with COVID. But under those circumstances, I think India did a great job. The Indian ports worked beautifully, and gave all the support to our container shipping lines to carry those containers. And of course, from our side, of course, we had to go through and get additional capacities, which of course, involved a lot of capital investment, but we survived. The next thing after that was the Red Sea crisis. And when the Red Sea crisis struck again, most of the shipping lines were forced to move out of the Suez Canal and move over the Cape of Good Hope. Now that again required additional capacities, because your deployments had to be changed. Where you had one service moving, say, from India to Europe and coming back within 63 days with 9 ships, it automatically changed via the Cape of Good Hope. You required 13 ships with an 87-day round trip. So that kind of investment was again required further. Now coming to the current crisis, as a result of that, probably that was a blessing in disguise, that we are better placed to handle the situation today. Because in any case, most of our services are moving over the Cape of Good Hope. So there's not much of a disruption really. Right now when we say about the Houthis, again, cautioning or warning ships from moving into the Suez Canal, barring a couple of our container lines which continue to go via the Suez Canal, and they haven't disrupted that services yet. Right. But most of them are actually going over the Cape of Good Hope. So that's taken care of. Then the earlier part is that Strait of Hormuz, Now with the blockage of the Strait of Hormuz, initially, of course, we did have a significant amount of disruption, because there were some of our ships that were actually stuck inside the Persian Gulf. In fact, 2 of our ships even got hit. But what we did is we started the future services. We changed by moving out of the Strait of Hormuz. That is calling to the east of Hormuz. That is ports like Corfachan, Fujairah, Salalah, Sohar. So those services now are pretty much set, and they are moving along. So containers are moving in that direction. The traders got used to that. Of course, there is a significant amount of land movement after that, but that's said. So having said that, I would say that there is no real cause for alarm under the current circumstances, because we have more or less handled the situation already. Thank you.
Wonderful. So, ladies and gentlemen, all of us realize that our lives have been digitized. You can't live without your mobile phone, your banking, your food needs, your entertainment, education, all happens in a digitized format, as also roads. Thanks to FASTag, travel is phenomenally easy. But is that true for ports? Let's find out what are the digitization processes that are happening on Indian ports. Vishal, I'll come to you first. I want to understand how far are we from a digitized port in this country? Where do we stand now, and what were the situations 10 years ago?
So, if we compare globally, we are advanced in terms of digitization and digital adoption.
You're talking about the port or the country?
As a country.
Yes.
But when it comes to ports, recent phenomena has actually made us focus on ports and shipping. So we are focusing now on not only infrastructure development with new Sagarmala 2.0, the connected development and integrated development with digitization. Now, digital twin, for example, has been initiated. Chennai port has already kind of done it. JNPA is moving towards digital twin, and others are catching up. So this is the first layer. Second, if we look at the processes, the paper-based processes, those are moving into digital direction. But as we come a long way in the roadside, where we have developed the infrastructure, and now we are talking about predictive maintenance and prediction about our assets, we have to move towards those lines. How do we move our cargo? What is the prediction? So AI is a buzzword, but we need to move towards those predictive asset planning and efficiency improvement through those digitization of assets. So that's the game next 5 years.
Okay, perfect. Yeah. So that's the consulting view. Let's get the view on the ship from Captain Saab.
Yeah.
So, Captain, how do you see life changing because of digitization? Is there an improvement over the last 3-4 years? How do you see the next 2 panning out?
Okay, we cannot live without technology, which is a must. And we will be left out if we don't embrace the technology. On ships also, when we used to sail long back, we used to rely on sun, moon, and stars for our navigation. Those era is gone. Today you ask a youngster, they won't know anything because it is a GPS which tracks it. And they've forgotten the olden ways of navigation. So it's no longer a navigation, it's like walking on a road.
It reminds me of Odyssey, the guy fought for 10 years, took another 10 to reach back home.
Yes, that was a Japanese guy. Right. So this is the technology has definitely come in, and it is making a much better impact, because then you know exactly how you're moving, your travel time is decreasing, efficiency is increasing, connectivity with the shore is increasing. When we used to sail, we hardly would hear anything from our home. A letter written a month back we would receive on ship, and a letter written by us would reach a month later to our home. So there was no way of communication. Today they are online all the time. So they are they have embraced so much of technology that it is making a life much, much easier. So definitely it's a large impact that's happening because of technology. Digitization, if I say, is on the certification of the ships. We used to have the manual certificates. Now it's all digitalized. So things are changing much larger way and for betterment.
Right. Sagarji, maybe you would want to contribute on what the government's thought are on digitization. The reason why I ask you this is that somewhere in 2014, 2015, the government went hammer and tongs after creating JAM, which is the Jan Dhan, Aadhaar and mobile setup. How is the equivalent of this working in the Sagarmala project?
So, right, just to start, when we talk about the logistics efficiency, largely has the three component, infrastructure we have discussed. Second is the skilling, the manpower. Third is largely a digitization. Now, when we say digitization, there are two aspects into digitization. One, at the individual level, each port, each shipping company, everybody is investing into a digitization. They are, making more of the software-based softwares or process improvement. When we talk from the government point of view, the first part of the digitization we have been working in last 5 years is largely first improving the processes. When we have to digitize something, you have to make the process simpler, then only you can digitize, particularly in the port and shipping. It's been very complex. When we talk about the logistics, there are so many stakeholders, so many cargoes, so many shipping companies, so many ports. So having standardization is the priority. That's we have been doing into the ULEAP or the LDB, what we are giving the tracking and traceability. So it's not only one Sagarmala, it's the multiple government systems are being integrated, because when we talk about the cargo, it's again Department of Commerce, DGFT is involved, Customs is integral part. Each port has their community system. So now our focus is more on the interoperability. Each port, each stakeholders is more or less is being digitized. So the government focus is to bring everyone on a single platform, have more interoperability, if not sharing the data completely with each other, but get what you need, so the ultimately the cargo user or the transporter or the exporter importer have the visibility across the value chain. So from government point of view, it's creating a digitization across the value chain.
Right. Vaibhavji, what's next for roads? All of us in the room use a lot of roads. Not many of us go to seaports, but roads are deeply, deeply linked to us. We've had a wonderful, seamless FASTag that's been introduced. There is apparently a new navigation tool in the pipeline. How will our lives change for the better as far as roads are concerned over the next 3 years?
Before I comment on that, on digitalization, if I may allow to, I think for me, digitalization, as Mr. Sagar said, is ultimately what is the improved experience for the user. So I'll tell you an example. 3 days back, a friend of mine has imported something and he was messaging me. His goods are lying at some port. I don't want to name the port for the sake of not kind of single outing them. His goods are waiting there. He has imported some product for commissioning something. Commissioning something for some installations. They are lying there for 20 days. And the biggest reason is documentation. Not the port connectivity, not the efficiency of the port operator, not the efficiency of the shipping lines. It is there for the documentation. So I think the ultimate purpose of digitization is the comfort to the user, ease of business to the user. So I think digitalization from that perspective, as he said, government has initiated on that part, but I think integrating, for example, if I'm submitting documents while sending my goods to the port, why do I need to do a documentation at the port where my goods are being, disembarked? Or if my documentation is done while importing the goods from and today with GST and, electronic billing and everything, that is doable,
so
but that needs to be...
we need an e-way bill for shipping.
So my limited point is, so whether it is e-way, whether it is connecting, whether it is integrating, whether it is everybody talking to everybody, whatever is the solution. But from the efficiency perspective, unless user experience improve, everything we do will not serve the purpose till the user experience is improved. So that's a limited point I wanted to make. Second, on the roads, as you rightly said, we have a huge backlog of infrastructure that India needs to build, whether it is road, railway, or everything. So I think in last 10, 12 years, we have tried to, the government has keep its focus. The highway length has almost increased from 98,000 kilometer to 150,000 kilometer, which has helped improved, and the next level of growth on expressway has started. But I think the ultimate now is the user experience. Again, I'm coming back to the same point which I have been talking about digital experience. How do users are experiencing use of highways? Whether it is availability of emergency services, whether it is wayside amenities, whether it is reduction in the accidents. I think the biggest challenge for us as a nation is to how do we make sure that our road accident goes down, comes down drastically. I think that is something which is the next level of growth for highways. So when we say we need to bring down accident, we will of course have to improve the quality of the roads. We will have to improve the basic, infrastructure, as they call it, road furniture, whether it is signaling, signages, use of digital technologies for incident management, creating, so for example, as somebody talked about FASTag, now 98% of the toll collection is electronically. It has reduced the leakages, doubled the toll revenue. But for example, still there is a 10-second, 12-second, 50-second, 30-second lag at the, So as you said, government is trying to build a navigation satellite with ISRO and trying to bring a satellite-based tolling, where there will be no roadblocks. There will be no barrier on the road. There will be no toll plaza on the road. Only, gantries will catch the, vehicles, their incidences, like our GPS, a unit, onboard unit at the vehicle can catch the, can connect with satellites and toll can be delected. And it will be only pay as you use. So if I travel 10 kilometer, I'll only pay for 10 kilometer. Today we pay between toll plaza to toll plaza.
Yes.
So even if I travel 10 kilometer, I'll have to pay for 35 kilometers. So there are so many such things. But I think the biggest challenge for us as for highway infrastructure is to reduce our road accidents. We are almost losing 150,000 lives every year, which I think is the most difficult and most, worrisome part of the whole infrastructure. How do we make sure that our quality, our user experiences, rules of road, adoption of rules of road by the users, everything improves and our road experience improves.
Oh, wonderful. Let me get a user view in, Sunilji, this question is aimed at you. Increased digitization in the world of moving containers. As a user, how do you feel your life has changed?
Yeah, thanks for this question. First of all, when you talk about this thing, what do we say? Infrastructure, it's not only physical but also digital. So both ways it works. Now let me first talk of the physical part of it, where it comes, and then I'll also talk about the digital part. Now on the physical part, it's our ports, Indian ports today, at least as far as containerization is concerned, are modern by themselves, and they're comparable to some of the leading ports globally, whether it's Nhava Sheva, that's JNPA, or Mundra, or whatever. I think they're working really at the best that they can. But where the constraint lies is capacity. Because the Indian exports are growing at such a rapid pace, the capacity also needs to grow. Fortunately, at Nhava Sheva now, the PSA, the Port of Singapore Authority Terminal, which is 4.8, has a capacity of 4.8 million TEUs, is half of what the entire Nhava Sheva is. So that's opened up, so that capacity will increase. But someone just rightly spoke about cargo evacuation. Now, why does cargo evacuation or container evacuation take so long? Again, there are capacity constraints over there, transportation constraints, last mile delivery constraints. Those need to be addressed. Also, as far as the, when you talk about new ports, Vizinjam down south, I think it's a wonderfully placed or located port. In fact, our container lines have already started calling that port, and we are doing a lot of transshipment out there. The initial capacity is about 1.5 million TEUs, which we are already doing. The same situation happened in Nhava Sheva, because Nhava Sheva had been working at 80% of its capacity, which is actually very high. For any port to work really efficiently, the capacity utilization should be between 60 to 70%, say about 70%, So when the capacity utilization is so high, you can't really blame the port also, because, it's on a day-to-day battle that you're struggling with. So similarly with Vizinjam, they already reached full capacity, but when the second phase comes in, then it'll be 5.7 million TEUs. So that would be, and then it's a 20-meter draft is going to be, so our latest generation vessels would be able to come in. But also along with that, what's required is that not only these infrastructure development, but also the ease of doing business.
Right.
And some policy issues that encourage investment. As far as the shipping lines are concerned, when we use a port, I'm just giving an example, when we use a port like Vizhinjam for transshipment, obviously you need the ease of doing business, because when you call Vizhinjam, you might want to transship those containers at some of the other Indian ports. But the current cabotage relaxation allows us to do that only till October 26, unless it's relaxed further. So I'm just saying, if it's not relaxed further, then what do the shipping lines do? They call a port, but they cannot transship from there. Then again, utilization of that port will drop, because the lines will not be able to call in those ports. Right. You know? So this is some of the things. And the other thing is one port. So sorry, this is very important. One nation, one process. And that, thankfully, the government is going in for. We are in interaction with the government on that all the processes across all the ports should be uniform. And digitization should be such that it is accessible to all the government agencies, whether it's the port or customs or PHO or immigration or whatever, so that as shipping lines, we don't have to submit the same set of documents over and over again. Thank you.
Ladies and gentlemen, over the last 10 years, we've solved roads and we've solved airports. I'm sure over the next 3, we'll have world-class ports and a wonderful Sagarmala 2.0. Thank you for your time. What a wonderful panel, please.
Welcome. You are watching Business Today. I'm Neetu Chandra Sharma, and this is our earnings special. Today, we are taking a closer look at Sun Pharma. The company has reported its Q1 FY27 results, with growth driven by its India business and innovative medicines portfolio. It is also awaiting regulatory approvals for its proposed acquisition of Organon. So what is driving growth at India's largest pharmaceutical company, and what are its priorities going forward? To discuss all of that and more, I have with me on the show Jayashree Satagopan, Chief Financial Officer of Sun Pharma. Jayashree, very warm welcome. Pleasure to have you on the show. Let me begin this conversation by asking you about the quarter's performance. So Sun Pharma delivered another quarter of double-digit revenue growth, but margins didn't expand at the same pace. So what were the key factors that impacted profitability this quarter, and should investors expect margins to improve over the next rest of the year?
So sure, I think this has been a pretty steady performance for the quarter. As you rightly mentioned, we had the revenues going up by almost 10%. The gross margins also showed an expansion. However, there are certain costs that we had during this quarter, primarily which was not there in the first quarter of last year, which is relating to the additional workforce that we have hired for the launch of our 2 innovative medicines portfolio, and also the spend associated with commercializing them. I think that's to some extent impacting the margins. And more importantly, we have also seen our ETR inching up. So that's the impact on the net margins. Having said that, otherwise, all parameters, when you look at last year to this year, has been more or less in the same range.
All right, so let's talk about the Organon acquisition. It is expected to close in early 2027, subject to regulatory approvals, of course. So beyond adding scale, what strategic capability does this acquisition bring to Sun Pharma, and what are your plans going forward?
As we discussed earlier, I think there are multiple areas where this acquisition would be strategically important to Sun Pharma. One, in terms of the markets, which are very, very complementary. There are going to be at least handful of markets where we are going to be off scale, and there are markets where we do not have presence, where Organon's presence would become very complementary to us. The products are very, very complementary. Women's health is an innovative medicines business, and that's been our focus area. So adding women's health into our portfolio is going to be extremely good. Similarly, biosimilar is a emerging area, and Organon is number 7. So it gives us a jumpstart into a very interesting segment. Established brands is an area where I think, as branded generic, Sun has done pretty well across India and emerging markets. So some of our learnings could be translated to help steering the growth in the branded business of Organon. So from geographical footprint, from the products, I think there are lots that are complementary and which should help bringing in a lot of synergies to the combined organization.
So, all right, once the Organon acquisition is completed, will the priority be integration, or do you see scope for more strategic acquisitions over the medium term? And are we also expecting some kind of acquisition that are in the pipeline?
See, look, at this point in time, it's a very large transaction. All our efforts are currently in terms of integration planning, ensuring that we have all our financing in place, we are able to get the people together, and we start growing Organon like how we have been growing Sun. So that's the immediate focus and the near-term focus. Having said that, if there are one or two very interesting opportunities that comes in certain areas, we are obviously open to look at it, evaluate, definitely not the size of Organon or the scale, but like in the past, we have done few in-licensing of innovative medicines. If there are one or two products that is going to be coming up in some of the areas where Organon is present, maybe we would take a look at it. But the focus clearly is going to see how we integrate this large business together.
So let's also talk about the US market. So US remains a key market for Sun Pharma, but the pricing pressure, policy uncertainty, and the tariff discussions, they are continuing. So how are you positioning the business to navigate this evolving environment? And what is your view on the current scenario, which is there for the tariffs and the US government imposing these tariffs out here in India? So how do you see the business growing, and what do you see overall largely for the pharmaceutical industry?
So let me talk what it means for Sun. For us, I think the focus for US is mainly on the innovative medicines business. I think over the past few years, we have built a business. There's a strong foundation. We should continue to focus on it. A couple of new products were launched last year. The current focus is to see how we can scale them up. So that's going to be a large portion of our focus. Obviously, the generic business has been seeing pricing pressures for the past few years, and we continue to see that even in the future. Therefore, introduction of new products would be critical to stabilize and grow in the generics business. So that's another area that we need to be looking into. And more importantly, I think there is also need to be positively engaged with the administration, right? Because policy matters, working along with other large players in the US, as well as working together with our Indian pharma companies, because all of us do export into US, and therefore some policy matters have to jointly be addressed. So that's where we are at Sun at this point in time.
Okay, let's also talk about this interesting segment, the GLP-1. That's actually reshaping the global pharmaceutical industry. Sun Pharma is also an active player out here. So how does your company, plan to build a meaningful presence in this space? And what are the plans going forward? What is your pipeline? If you can please share some insights.
Look, GLP-1 is a very interesting space. Definitely addressing the needs of the patients when it comes to diabetic management, when it comes to obesity management. And in India, we are a leading player in the diabetic management space. We launched GLP-1 sometime in March of 2026. And currently, we are the number 2 player when it comes to injectables in the generics, right? And our focus is to see how we can grow the segment further. So that's going to be the focus. And we are also looking at approvals to come in for the oral segment, which will help us to launch that as and when we get the regulatory approval. That's as far as India is concerned. We had applied and got our approvals for both South Africa and Brazil. South Africa, while we go on our own and we have already launched the product. In Brazil, we have out-licensed it to one of our partners. And I think Brazil will provide a large opportunity in terms of both scale and being early to the market. From our standpoint, I think our endeavor is to see that we are able to produce and ensure supply continuity to our out-licensed partner for them to market in Brazil. I think these are 3 markets currently we are focusing on, and let's see how this actually translates into.
Okay, so let's talk about a business a bit more. Sun Pharma has one of the strongest balance sheets in the industry. So I want to ask you about the capital allocation priorities. What are your priorities over the next 3 years? Where will the investment go the most?
Look, we had just announced a large transaction, right? So currently, our focus is going to be ensuring that we integrate the business as well. We start growing the combined business. And if there are going to be assets, as I mentioned earlier, which will help us to grow either in the innovative business, anything in the women's health or in the biosimilars, smaller ones, we would be open to look at it. But the large focus in terms of looking at how we deploy the capital is to ensure that this acquisition is successful to us.
Yeah, I understand. So, manufacturing has also become a strategic differentiator in pharmaceuticals, Jashi. So, where is Sun Pharma investing today to strengthen its capabilities in complex products, injectables, and peptides? As you are planning to expand, what is it that you are planning going forward?
So we do have a very large manufacturing footprint, both of APIs as well as formulation. So the existing facilities, we are going to continue to strengthen our quality compliance management system. But we have also announced a new greenfield facility at Madhya Pradesh that is mainly for sterile manufacturing, and work is in progress in that facility. It may take 2-3 years for us to commercialize, but that's the normal lead time that we take for any large capital project. That's the present investment scenario. Once we complete Organon acquisition, there are plans of Organon in Europe, large footprint, and I think there could be some capacities that we could further leverage. But that's more for us to look at post the integration.
Okay. So, what about specialty and innovative medicines business, as we seen reflected in the quarter as well? So, your specialty and innovative business, medicines business, it continues to grow. So, when do you expect this particular business to become the biggest contributor to your company's profitability?
No, I don't think one should look at it as a business becoming our biggest contributor. We would have both innovative medicines business as well as the generics business. That's a format at which we are looking at. We are a very large branded generics player. With Organon's acquisition, we would still have a large portfolio which will come from the established brands. So that's the reality. However, the focus is to see how we could continue to increase our share in the innovative medicines business. Currently, we are at 22%. With Organon's acquisition, it could go up to 27%. So I think directionally is what one should look at, and I think that gives us a good amount of comfort.
Let's talk about the ongoing geopolitical certainty again. So, the global pharmaceutical companies are basically rethinking their supply chains given the circumstances. So, I want to ask you, is Sun Pharma already seeing new opportunities emerge from this shift because your US business is like really big? What are the plans?
Well, I'm not too sure that there is a big shift that's coming in. We already have plans in the US, both API and formulation. So it's not that we have to set up something totally new out there. There could be some expansion in these facilities. But the endeavor is to see that all our manufacturing facilities are utilized to the capacity, and we are able to meet up with the requirements in the market. And wherever there is a shortfall, like we are investing now in the new facility at Madhya Pradesh, we would be looking at investments. But at this point in time, we don't see a shift in terms of a strategy for the manufacturing footprint.
Okay, so I want to also ask you, if you look at the next 3 to 5 years, what do you think will be the single biggest driver for company's growth? Or if you want to jot down some of the biggest growth drivers going forward in the next 5 to 10 years, what would that be?
Look, in the immediate term, as I was mentioning, it's going to be extremely critical for us to see how we integrate and work.
how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Name the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Very good afternoon, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. D Street extends its rally to the fourth consecutive session. The Nifty has climbed past the 24,600 mark for the very first time since April, driven by lower crude prices, foreign investors buying and strong earnings. Sun Pharma, in an exclusive conversation with Business Today Television, has flagged continued pricing pressure in the US generics business, says specialty drugs and new launches will drive future growth. Willie Walsh has taken charge as Indigo CEO, succeeding Peter Elbers. He is known for his sharp cost-cutting approach. He also steps in at a time as Indigo grapples with rising aircraft lease costs, delivery delays and foreign exchange losses due to the weaker rupee. Walsh has also been very vocal on tax reforms and liberalized flying rights in India. The Modi government is set to table the controversial FCRA bill in Parliament this week, arming authorities with sweeping powers to seize assets and to tighten the control over foreign-funded NGOs. RBI's interest rate deciding panel, the MPC, has begun its 3-day meeting despite weak monsoons and West Asia tensions. Polls indicate the central bank could keep rates unchanged. Several more steps are expected to insulate the economy. Viewers, will straight away welcome our guest on board. We have Pankaj Pandey joining in, Head of Research at ICICI Direct, to share with us a fresh take on the markets. A strong start to August. Pankaj, good afternoon to you. For the markets, we've seen 24,600. After April, this kind of a number had been fleeting away from our eyes for far too long. But the big question comes in yet again. Will the markets be able to sustain the momentum above this level? We've had a good earnings season thus far. We are getting an indication that so far it's panned out to be slightly better off than the estimates. Plus, we have encouraging signs globally, the falling crude oil prices, as well as the outlook that is improving. What's your own sense on the markets?
Yeah, hi, good afternoon, Sakshi. Thanks for having me. Yes, you're right that the markets have been in a sort of a consolidation mode for last 4 or 5 months, and typically this range has been about 1,500 points. So, say from 23,100 to 24,600 kind of a levels. And with markets touching those levels today, and a day before, earlier, the markets had also taken down or had closed above the 200-day exponential moving average. And like you said, when we look at conditions, so one on the earnings side, when we look at the Nifty earnings, about 32 or 33 odd companies have come out with the results. See, we were sitting with an expectation of 5 to 8% kind of earning growth, whereas the top line growth which has come out is 17 odd percent, bottom line growth 17%. And the good thing which is helping the market is that we are seeing a return of FII biases. So FIIs have bought nearly 35,000 odd crores in the last 1.5 months. And I think good part also is that the West Asia crisis is sort of looking that we might see some resolution. So I think all conditions are in place for markets to do a consolidation breakout, and our sense is that we could see 1,000 to 1,500 kind of a move from here on. But then again, it's all subject to terms and conditions, whether we see crude inching lower or not. In case if this escalates, then probably this move will get resisted at current levels. But all conditions are in place for markets to sort of inch up higher or move to a higher trajectory.
Fair point, Pankaj. We'll come to the markets, but there's breaking news, viewers, coming in on your screens. This is with regards to the FCNRB deposit figures that are coming in. $28 billion have been received as FCNRB deposits starting June 5th to all the way up to July 30th period. Max Forex deposits in private banks is what the government has indicated. A $10.73 billion in private banks and $8.84 billion in PSU banks has been received so far. The government has indicated that foreign banks deposits are up $8.37 billion. Also, the government is indicating that HSBC has led in the new FCNR deposits. SBI, ICICI, Stanchart, Kotak have also led the FCNR race with massive response to RBI's FCNRB scheme. The rupee has rallied 125 paise in 6 trading sessions, with forex inflows also propping up the rupee as well. So those are the key indications, the first figures that are coming in from the government, talking about how the step taken by the RBI has led to more money incoming as far as India is concerned, as also how it has helped remove the uncertainty of constant fall onto the Indian rupee and has helped support it as well. Pankaj, what's your own understanding? Yes, these big bank deposits are coming in. We heard from a plethora of banking managements this time around that they are betting big already on massive numbers of inflows coming in because of this, that will support their overall deposits too. What's your own approach going to be as far as private and PSU banks are concerned?
So our sense is that banks which have got good presence on the Gulf side would be the biggest beneficiary, whether it is private sector banks or even the PSC counterparts. And I think this FCNR deposit gain has been a sort of a pleasant surprise, contrary to the expectation. And week on week, we are seeing better set of numbers, and we are still quite some time away in terms of the September 30th sort of a deadline. So now the expectation is that potentially we can sort of reach about $100 billion. Initial estimate was somewhere about 65 billion dollars. And this is extremely good news from a liquidity perspective, because banks have been grappling for deposits for quite some time.
Yeah.
And that will be sort of holding up the overall credit momentum as well. Now, all conditions are in place for banks to sort of do well. And what we like is, again, tier one banks like, say, HDFC Bank. I think some clarity on the reappointment of top management might trigger a good upside in the stock. Similarly, I think Axis and Kotak also looking good to us. On the PSU side, SBI is in our compliance, so I can't really talk about that. But something like Federal Bank and even other banks which have got a good presence in the Gulf side, I think they are expected to be very beneficiary of these FCNR deposits, and we like most of it.
Okay, fair point. Another news coming in, viewers, as far as the Modi government is concerned, they're preparing a massive crackdown on foreign NGO funding with the FCRA Amendment Bill 2026 that's likely to be tabled in the Lok Sabha this week. And from seizing foreign funded assets to placing central control on investigations, this proposed law changes a lot of things. Let me actually straight away go across to my colleague Aishwarya Paliwal for the latest updates on the same. Aishwarya, Foreign Contribution Regulatory Amendment Bill 2026, what does it aim to do? What will it mean for a lot of these NGOs that stand to gain from such deposits?
Well, Sakshi, let me tell you first what some of the key amendments the government actually wants to bring in. First and foremost, the government says that if the FCRA registration either expire is cancelled, then what will happen is that all those assets will actually come under one designated authority. This is an authority which will be provided by the government, and this in fact has become a big bone of contention. This new authority would be created to supervise, to manage, and even dispose of all the foreign contribution and even the assets that these NGOs will have. The opposition in fact believes that this is government's way of tightening the noose and also making sure that the funding that comes to various NGOs, that in fact comes directly under the government. The government says this is not the end goal. The end goal is to make sure that the money which is coming in is properly used. But we have seen the top opposition parties, including Rahul Gandhi, speak up against it, and they believe that this is government's way of somehow making sure that they get hold of the kind of money which is coming in, and they also get hold of the assets that these NGOs have had over past many years.
Absolutely. Aishwarya, thanks for getting us those initial comments on this as far as this bill is concerned. As Aishwarya pointed out, this is already leading to a lot of controversies taking place even before the bill is tabled into the parliament. This is going to be of heightened interest to a lot of investors who are closely tracking this bill as well as far as the parliamentary proceedings are concerned going forward. Let's go across to now looking at how some of the earnings are panning out from the listed space of companies on the stock markets. Sun Pharma, India's biggest pharma company, has delivered another quarter of double-digit revenue growth, but higher investments in its innovative medicines business have kept margin expansion in check. The company is also navigating a challenging US market where generic pricing pressure and tariff uncertainty remains key concerns. Speaking to Business Today Television's Neetu Chandra Sharma, Jayashree Satagopan, the CFO of Sun Pharmaceuticals Industries, has shared the company's strategy to sustain growth in its largest overseas market. Let's listen in to what she had to say.
So Sun Pharma delivered another quarter of double-digit revenue growth, but margins didn't expand at the time at the same pace. So what were the key factors that impacted profitability this quarter, and what should investors expect margins to improve over the rest of the year?
So sure, I think this has been a pretty steady performance for the quarter. As you rightly mentioned, we had the revenues going up by almost 10%. The gross margins also showed an expansion. However, there are certain costs that we had during this quarter, primarily which was not there in the first quarter of last year, which is relating to the additional workforce that we have hired for the launch of our two innovative medicines portfolio and also the spend associated with commercializing them. I think that's to some extent impacting the margins, and more importantly, we have also seen our ETR inching up. So that's the impact on the net margins. Having said that, otherwise all parameters, when you look at last year to this year, has been more or less in the same range.
So let's
Right. Let me go across to Pankaj once again. Pankaj, your own sense on Sun Pharma and the pharma industry as a whole too, as far as the kind of earnings that we've seen thus far, and what's the outlook? So far, there has been a large consensus around the pharma story. It's done very well over the last couple of months. Will the earnings propel a further round of re-rating across the board?
So, Sakshi, on Sun Pharma specifically, see, overall top line growth has been about 10 odd percent. What we're liking in the business is the domestic growth of about 16 odd percent. And US market, again, the specialty business has been sort of doing well, but while there is pressure on the generic side. Now, for Sun Pharma specifically, I think the acquisition what they have done is something is wait and watch for, because that carries a good amount of execution risk. And that is where we are sort of cautiously optimistic on the stock, because though they have a very good track record in terms of M&A, it's a larger acquisition. What we are liking in the pharma space is, again, companies which have got a higher domestic presence, especially on the chronic side, and the CDMO players. So we have companies like, for example, Torrent Pharma, which are doing exceptionally well on the domestic side. You have, I think, other companies which are sort of, so most of the domestic companies are delivering mid to high teen kind of a growth. So that is what we are liking. In addition to that, we are also liking the CDMO based players like Laurus Labs or even DB Laboratories to name. So I think these are the preferred players. I think US market exposure companies tend to be a lot more volatile, and it's very difficult to take a very structural call.
Okay, and what about healthcare space? Are you still positive across the space there?
Oh yes, I think hospitals are one of the best places to get into. We've seen companies coming out with a pretty good set of numbers. I think even for Narayana Udara, if I sort of strip out the UK's piece, I think most of the other businesses are fine, whether it is Rainbow or other hospitals. So I think on the hospital space, largely we are positive on most of the stocks, be it Apollo, be it other names which I just mentioned, NHI and others. So I think that is a more hospitals are a more of a portfolio pick rather than some of these names which I sort of mentioned, because this is one segment which can continuously deliver a mid to high teen kind of a growth. And as hospitals mature, the EBITDA margin profile of a lot of these companies will become better.
Fair point. Let's shift focus to the auto space as a whole, viewers, especially because there's a breaking news coming in on the rules that are being proposed for chat among vehicles. The government has released draft vehicle-to-vehicle norms, V2V they are called. This will allow vehicles to exchange live data. V2V systems will be mandatory in phases, mandatory fitment from October 1st of 2028, and these draft norms aim to boost road safety, real-time vehicle alerts to prevent any kind of road crashes or accidents that take place as well. That's an interesting update that's coming in. The government is looking to use technology to somehow prevent any kind of road accidents just by sharing live vehicle-to-vehicle data exchange. Once that happens, there could be a reason how we could prevent a lot of crashes on the roads as well. But this only will take some time, because it's only going to be mandatory starting October 1st of 2026. That's another news that's coming in there. But auto space as a whole has been interesting to watch out for since the morning, because we've seen a lot of these companies react to their sales figures for the month of July. Pankaj, your sense on the kind of sales that we've seen across the board, four-wheelers, two-wheelers, passenger vehicles, a lot of them reaching even record sales numbers as far as the monthly sales figures are concerned. Your own take on the auto pack?
So absolutely. When you look at the monthly sales number, I think you name the segment, most of the companies have delivered a double-digit kind of a growth. In fact, a lot of places, companies are sort of facing capacity constraints as well. So I think auto is something which we would want to believe that the volume growth will remain pretty good until September. That is when the base will also catch up. But we also need to see how the 8th Pay Commission recommendations pan out, and subsequently that is going to help. I think what is bothering auto at this point in time is the margin compression, something which we have seen in the results of Maruti, because Maruti has seen their EBITDA margins getting impacted because companies preferring volume growth over margins. But something like Hyundai has done very well despite the production loss because of fire incidents. But overall, our sense is that most of these margin issues are behind us, and if this West Asia crisis sort of settles down, we would expect some of these raw material pricing pressures to ease. And as a result, margin pressure may not really be that bigger hangover for the entire auto set of stocks. What we like is, again, the four-wheeler players, especially something like M&M plus Hyundai. And on the two-wheeler side, I think export is doing phenomenally well, whether it is for Bajaj Auto and others. So Bajaj Auto remains our pick. Beside that, Eicher Motor is something which is consistently doing one of the highest volumes what we have seen. I think these are the stocks what we are liking, and I think auto ancillary is even more interesting. We'll discuss some other time later.
Okay. Let's also focus on the IT space as well, viewers. We've seen Persistent Systems come out with its Q1 numbers again, and also laying out a clear roadmap for FY27, with the management confident of achieving its aspirational revenue run rate target ahead of schedule. Margin guidance and, of course, the proposed Nagaro acquisition has how it will remain key milestone for investors to watch out for in FY27. I earlier spoke with Persistent Systems CEO and Executive Director Sandeep Kalra about what to watch out for the rest of the fiscal year. Let's listen into what he had to say. So in the end, when we look at the entire FY27, for all our viewers watching in, the investors of your company as well, what are the significant milestones that investors should now watch out for through FY27? If you could also highlight for us, how is the demand scenario likely to pan out? And along with this, will it be these deal conversions? Will it be the AI-led revenues? Will it be the Nagarro integration or margins? Or what should investors be watching out for as top 2 or 3 priorities for you also?
Yeah, so you have mentioned a lot of things. The top 2 or 3 things that I would point our viewers and investors to would be, number one, our ongoing performance, quarterly performance, and more importantly, the full year performance. We had said aspirationally for the full year, when we exit the year, we want to exit March 2027, which is FY27, exit run rate of $500 million, which gives us $2 billion. We are progressing very well towards that, and hopefully we'll do it before that. And so one milestone for us would be, can we exit the year with whatever aspirations we have set? So they should watch out for that. They should watch out for us to be in the margin range of 16% to 17%. That's the second thing I'll say. Third, the progress on the Nagarro, acquisition closing. And as it closes, we'll give an update on the integration plan. They should look out for that. Those are the 3 important things I would watch for.
Let's get a quick take from Pankaj also on the IT space as a whole. One of the last of those mid-cap IT names that you must be tracking for the IT space for its earnings. We've had a better than the previous quarter as far as across the board earnings are concerned. It's not as far negative as it was seen in the previous quarter. We've also seen a smart recovery in the IT sector as a whole in terms of the stock price performance. The index up by 16% in July already. Do you think most of the good news of this Q1 performance is already in the price? Will there be some more upside beyond the kind of concerns because of which the IT sector was drawn down for the last many months?
I think this 16% kind of a movement in the IT index is more to do with the fact that globally this AI theme has started to wobble, and we've seen key markets like, say, Korea and the Taiwanese market sort of correcting in double digits. I think when we look at it from a earning perspective, tier ones have clearly seen a very muted growth in terms of dollar revenue growth. So their earning-led trigger is not there. But what we are liking in the tier 2 space, now whether it is Persistent, whether it is LTM, Coforge or Tech Mahindra, I think all these companies have come up with good quarter-on-quarter growth, and some of these companies are comfortable delivering mid to high teen kind of a growth, although at a slightly expensive valuation. But I think Indian market is or companies are largely preferred for their growth orientation. So which is why we feel that the tier 2 companies are better placed at this point in time. Tier 1s will take some more time to perform, and which is where I think the disconnect lies. So we clearly prefer tier 2 players, the names which I mentioned. But this AI-led deflation is probably going to continue for next 12 to 18 odd months. Until that time, we don't see much of a revival in the overall IT sector earnings.
Okay, fair point. We'll quickly look at how the markets are shutting shop, viewers, and we'll come back for your questions with Pankaj as well. We just have last 1.5 minutes going for the markets. It's panned out to be a fantastic Monday. 190 points higher. Of course, we had an intraday session crossed over beyond 24,600. We saw some profit taking at that level, and we are now holding about 0.8% higher on the Nifty. All the sectors of the Nifty are trading positive, with IT leading the gains, barring just slight losses that are being seen on the media pack, but rest of the sectors are all up. You can see IT stocks up by 3.2% now at the day's high point. You can also see metals shining bright, 1.5% higher. FMCG and even PSU banks, private banks, these are also doing a sharp up move that we can actually see on the session. Broader markets, small caps are up by nearly 1.5% in the session today. So IT, private banks, FMCG, metals, these are the 4 big movers as far as the sectors are concerned. On the Nifty, Indigo is the top mover, 4.2% higher. We highlighted the news in the headlines today as far as the big change on the top management is concerned. TCS Infosys from the IT pack, Shriram Finance, again earnings impact. Wipro, Bajaj Finserv is also moving up. On the declining side on the Nifty, yes, we do have about 8 to 10 stocks that are declining. You have Sun Pharma, that's down by 2.2%. Apollo Hospitals, Bharti Airtel, Maruti, Cipla, Max Healthcare. These are the names that have still declined in the session. but the broad market moves are also more interesting. You could see a lot of names like Urban Company rallying in the session today with smart gains of over 13% post the numbers coming in. You also had Balrampur Chini almost 11% higher. Reddington continuing with its move from last week, 8% up. Pine Labs about 10% higher. These are the big names that you've actually seen in the markets today. But let's now start taking some of your questions. We have Priyanshu from Bhopal writing in for you, Pankaj. His question is with regards to the cigarette stocks that have shown an up move. He wants to know from you, should he make a fresh buy at the current levels? We've actually seen ITC numbers come in. Thereafter, the stock moving up higher, leading the FMCG index higher. And we've also seen Godfrey Phillips come up in the same breath.
So I think when we look at cigarette companies' numbers, I think ITC numbers have been relatively better because the volume decline is 4 to 5%, contrary to the expectation of 8 to 9% kind of a decline. But let's see whether this volume degrowth gets resisted at these levels or we see a decline there, because some kind of an inventory restocking might have happened. But nevertheless, from a risk reward perspective, ITC is doing, or the current price point is quite attractive. Their FMCG business is growing around 15-16% with margin improvement. So I think it's a good level to get into ITC stock, but yes, don't expect a V-shaped recovery there.
Okay, let's take another query. This one is from Salman from Mumbai. He wants to know on power stocks that had rallied recently, and he wants to know, can he still continue to invest some of the power stocks in his portfolio? Any overall view and one or two names maybe you could suggest, if Pankaj?
I think power is one of just decadal themes to hold on to for the next 5-10 years, because it is core to a lot of sectors, be it hydrogen, be it the energy transition overall in the power space, or whether we are looking at the EV transition as a space. So I think power is definitely there, and you could have big players like, say, something like L&T, BHEL looking at, then you could have players on the generating side. Similarly, on the transmission side, we like Power Grid, and then there's a host of equipment players supporting the transmission side. So power, I think, is something which needs to be part of the portfolio for the next 5 to 10 years.
Okay, we also have another question coming in from Amisha from Patna, who says, what's your best two-wheeler stock pick after the July sales data?
So I think two-wheeler numbers have yet not come out. We have very limited data. So iShare is something I've liked the numbers. But in addition to that, I think if I have to add, I think M&M is doing absolutely fine. Their SUV portfolio is doing very good. Despite all the fears, the tractor as a segment continues to sort of deliver in terms of volume growth, one of the highest margins. So that is the another stock.
Okay, fantastic. Thank you so much, Pankaj, for being with us on the program and for highlighting for all our viewers where to keep an eye out on for opportunities going forward from here. Viewers, in case you have any questions about your investments in stock markets, in mutual funds, gold-related questions, then you can definitely send us your queries on the number that's flashing on your screens. We will definitely have top market experts guide you on your own investment strategy. And as we wrap up this show, catch the latest edition of the Business Today magazine, which is already out on the stands. It captures the new face of India's entrepreneurial revolution. Our cover story looks at India's new generation of billionaires who are building billion-dollar businesses faster than ever before. We also explore the return of serial entrepreneurs, founders building their second act, and the rise of India's private space tech pioneers aiming for the stars. So pick your copy of the latest edition of the Business Today magazine, which is now on the stands.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.